Everyone, good afternoon, good morning, good evening to all of you, whatever time zone you are right now. Welcome once again to this live एनालिसिस स्टार्ट करते हैं आज का सेशन। फिलहाल के लिए देखोगे तो ब्रेकिंग न्यूज़ से स्टार्ट करते हैं। ईरान पर इजराइल ने एक अटैक किया है उनके न्यूक्लियर साइट्स पे, जो हम कल बात कर रहे थे। उसकी वजह से क्रूड ऑयल को देखोगे ऑलरेडी 10% मॉर्निंग पे ओपन था, अभी भी देखोगे 8% ऊपर है। कल जो हमारा मार्केट क्लोज हुआ था उसके बाद सीधा सीधा 10% की ओपनिंग हुई थी। फॉरेक्स में देखोगे तो काफ़ी अच्छा एक मोमेंटम था, ऊपर एक रेजिस्टेंस था, थोड़ी बहुत सेलिंग आ रही है। बट इसके बाद अभी न्यूज आई है कि ईरान ने भी बहुत सारे ड्रोन अटैक किए हैं वापस इसराइल पे, तो उसका एक इम्पैक्ट हो सकता है। अपना बैंक निफ्टी निफ्टी मार्केट देखोगे वो भी गैप डाउन ही ओपन हुआ है सीधा सीधा, बिकॉज ऑफ दैट न्यूज़। नीड टू सी क्या और कुछ अटैक आगे होता है, बिकॉज ईरान भी अगर अटैक करेगा तो इसराइल और अटैक कर सकता है, तो उस केस में हो सकता है क्रूड ऑयल के प्राइस और ऊपर चले जाएं। फिलहाल के लिए ऊपर एक रेजिस्टेंस था, थोड़ी बहुत सेलिंग आ रही है। देखो प्राइस काफ़ी ऊपर चला गया है ड्यू टू वॉलिटिलिटी। एसएल बड़े बन रहे हैं, टारगेट भी बड़े बन रहे हैं, थोड़ा संभल के ट्रेड करना, ज़्यादा रिस्क मत लेना इस तरह के मार्केट में। लास्ट फ्राइडे है, बाकी कल और परसों मार्केट बंद ही रहेगा। अभी 12:30 न्यूयॉर्क सेशन से पहले लंदन सेशन ओपन हो जाएगा 12:30 पे। 5:30 न्यूयॉर्क सेशन, 7 पीएम यूएस मार्केट और 7:30 कंज्यूमर सेंटीमेंट का डेटा है। ये भी गोल्ड और सिल्वर को इम्पैक्ट करता है, ठीक है, तो इस डेटा का ध्यान रखना। नेचुरल गैस भी एक हल्का सा गैप ओपन हुआ है, देखते हैं नेचुरल गैस में एक ट्रेड बनता है। अभी ये कोई ट्रेड नहीं है नेचुरल गैस में, पॉसिबिलिटी एक ट्रेड बनने की। बाकी बैंक निफ्टी में भी कुछ खास अब है नहीं, क्योंकि बहुत बड़ा गैप डाउन ऑलरेडी हुआ था और फिर उसके बाद मार्केट ने एक रिबाउंड किया था, बट साइडवेज चला गया। अभी ओवरऑल देखोगे तो जो हमारा कल मार्केट क्लोज हुआ था वहां से लगभग 650 पॉइंट बैंक निफ्टी फ्यूचर डाउन क्लोज हुआ था, उसी लेवल पर अटका हुआ है। 15 मिनट में कुछ मोमेंटम नहीं है, सो इट इज साइडवेज कह सकते हैं फिलहाल के लिए। तो लेट्स सी कुछ कोई ट्रेड बनाता है अगर 15 मिनट में। फिलहाल बैंक निफ्टी में कुछ नहीं है मेरे साइड से, पूरा साइडवेज पड़ा हुआ है। नीचे भी एग्जैक्टली आया नहीं है लेवल पे, तो कुछ कर नहीं पाएंगे यहाँ पे। थोड़ा सा अगर नीचे भी आता तो कुछ ट्राई कर सकते थे सपोर्ट पे, बट नहीं है एग्जैक्टली। फ्यूचर की मैं बात कर रहा हूँ। हाँ, डे लो के आसपास आ जाए तो वापस बाइंग कर सकते हैं वैसे बैंक निफ्टी में, बट वो ऑलरेडी निकल चुका है। पहली कैंडल 15 मिनट की एग्जैक्टली हिट करी थी 55,400 के अराउंड, वहीं से एक सपोर्ट बाइंग आई थी, बट वो भी कुछ खास नहीं थी। 400 पे बाइंग करने के बाद मार्केट वो 300-400 पॉइंट की रेंज में साइडवे चला गया है, तो कुछ मोमेंटम हो नहीं रहा है। लेट्स सी थोड़ा अगर ऊपर, वैसे तो आना चाहिए एक बार लॉजिकली, इसको आता है तो बढ़िया रहेगा ऊपर ट्रेड करने के लिए वापस 55,300 के आसपास तक। तो गैप डाउन हुआ है, सपोर्ट पर है, कंसोलिडेशन सपोर्ट पे होता हुआ बैंक निफ्टी फ्यूचर में। ठीक है, ये नेचुरल गैस की कैंडल क्लोज होती है तो देखते हैं इसमें भी एक ट्रेड। थोड़ा सा और नीचे क्लोज हो जाए अगर नेचुरल गैस की कैंडल, बेटर रहेगा। ठीक है, 6 मिनट है, कैंडल क्लोज का वेट करना। नेचुरल गैस में फिर अ, एक ट्रेड बनाने की कोशिश करेंगे नेचुरल गैस में भी। Where is the हाँ, ईरान ने भी अटैक किया है, अटैक इन द सेंस ऑफ बहुत सारे ड्रोन लॉन्च किए हैं टुवर्ड्स इजराइल। न्यूज़ इन डेवलपमेंट है, देखते हैं। वैसे ईरान अब इजराइल में कुछ ऐसा आया तो नहीं है कि वहाँ पर कुछ हुआ है खास। Israel disclosed that it used 200 warplanes to attack Iran, points to the strategic timing. Israel says Iran has launched hundreds drone at it in retaliation. Such a swarm is formidable. कोई और न्यूज आती है तो देखते हैं।
Joins us this morning out of Bangkok. Danny, we know you've been covering the story very closely. Walk us through the latest about the possible causes of the crash.
Yeah, we still don't have a lot of information to go on, and particularly as we've reported, there has been one black box that has been found so far at the crash site. We don't know yet whether it's the cockpit voice recorder or the flight data recorder, and also what condition both these black boxes are in. And these will really hold the clues in the final minutes and seconds before this plane went down, only, 30 seconds or so after takeoff. And so, these are the kind of key pieces of evidence that will really help put together for the investigators fairly quickly what went on, because this Boeing 787 aircraft is such a widely used, popular aircraft, very advanced, and for it to have its first major loss of an airframe, it's pretty stunning for Boeing. And also, we saw that in the market reaction yesterday. But as we move on, the crash site itself has moved from a search and rescue phase to a recovery phase, and particularly as we still don't have a handle on just how many people have died beyond those who are on board the plane, only one survivor as well. And part of the other developments we have seen overnight is that Boeing CEO Kelly Ottberg and his commercial chief Stephanie Pope, they both will not be going to the Paris Air Show next week, which is one of the big industry annual events, particularly at a time when they were expecting to sell a lot of planes, produce billions of dollars worth of sales. That's now not going to happen. And for them, it's a focus on getting through this latest crisis. As yet, we still don't know what has happened.
All right, Bloomberg's Asia Aviation Transport reporter Danny Lee following that story for us. We certainly appreciate the update this morning. Okay.
Okay, 49 minutes to go until the equity market open here in Europe. We're going to stay across everything that is happening in terms of the developments surrounding the Middle East and what the impact of the surging oil price is going to have on assets beyond the commodity market. If you want to join the conversation this morning, you have any thoughts on how this story is going to evolve from here, please get in touch. IB Plus, BBTV Go is the function on your Bloomberg terminal. As I say, 49 minutes to go until the market open this morning. There is lots to look at. We will continue the conversation next. This is Bloomberg.
much does the geopolitical volatility emanating from the United States perhaps undermine the bull case for Mexico? Is that a scenario you've plotted out?
Structurally speaking, we do still have a very positive view in Mexico. On the macro side, it is a very attractive investment geography for the U.S. Mexico is hugely competitive in terms of costs. The wages in Mexico are much more competitive than the wages in China. So why would the U.S. companies not take advantage of that?
And this structural cost advantage is going to lead Mexico to continue to contribute to the growth of U.S. as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the U.S. And U.S. is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for VVA is, a source of resiliency of earnings, and it generates, complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that
देखो कैंडल हो गई है क्लोज नेचुरल गैस में। यहाँ पर एक सेलिंग का ट्रेड प्लान करते हैं। नेचुरल गैस में हो गई ना कैंडल क्लोज? यस, कैंडल हो गई है क्लोज। फॉरेक्स का चार्ट भी देखना पड़ेगा, वैसे कोई न्यूज़ वगैरह ना आ जाए। एक हल्का सा पुल बैक एंड देन यहाँ पर एक सेलिंग का ट्रेड। 1:3। ये रीटेस्ट पे डाला है इन लोगों ने। लाइक भी करते रहो गाइस, जिन लोगों ने लाइक नहीं किया स्ट्रीम को। 12:30 की कैंडल का ध्यान रखना। 12:30 कैंडल इज़ वेरी इंपॉर्टेंट फॉर टुडे।
about holding the dollar.
How is there a potential for a squeeze, though, in the short term? The market feels like it's short dollars, and I'm wondering whether or not the paradigm could change and the perception could change if suddenly you see the dollar spiking sharply higher as some of those get unwound.
What we see at our proprietary positioning metrics at BNP Paribas is that the market is short dollars, but it's not max short dollars.
Right.
So the positioning isn't that heavy. And so, of course, there is squeeze risk, especially if the geopolitical risk-off continues. But ultimately, we'd be inclined to say euro-dollar over the medium term can continue to head higher. A key input into this is our view on global flows. We think that there is a structural rotation out of the dollar currently underway by global investors, and that's particularly so the case for European investors.
Well, that structural rotation has also been creating, to Guy's point, a very big consensus trade in maybe not shorting the dollar, but certainly not being long dollar either, and creating that neutral position. But because it's a consensus trade, there's a fleeting voice that is suggesting that this has gone too far. Is this the catalyst to unwind that trade? Is this enough to get us there?
I think it's a really good point, Kriti. The fact that it's consensus matters less this time than, for example, for a central bank meeting. So if a central bank is fully priced, then it's unlikely that the market moves on whatever decision they ultimately go for. But a flow, which is what we think is currently driving FX, is very difficult for the market to price in ahead of time. And so we think that European investors increasing hedge ratios, and we have started to see this show up in the data, is a flow that is very difficult to be priced ahead of time and something that will drive euro-dollar higher, even if it's already, as you rightly point out, a consensus story.
You mentioned the central bank read-through there as well. How persistently high do oil prices need to be for a bond market to more substantially react to a potentially more hawkish tilt from Jay Powell?
I think the Fed have effectively communicated that they're going to be on hold for the summer. And so what you saw is, even though we had softer CPI, the market reaction was quite muted. I think we can think of the oil price move in a similar way, where the market's going to wait and see how the summer plays out before it starts to think more actively about Fed pricing. In terms of FX, what we're saying is front-end rate differentials matter less for currencies at the time, or at a time when flow is driving FX. So, of course, what happens to the Fed is key for the dollar, but less so than in other paradigms. 2017 was a good example. Euro was able to go from 105 to 125 in spite of 2-year rate differentials moving 100 basis points in favor of the dollar. And that's because it was driven by flows.
Okay, so interest rate differentials will have less of an impact this time around. You're more focused on flows. Will there be anything, though, that would change that conclusion?
I think one thing we're focused on is how European growth holds up. If European growth were to deteriorate more rapidly than we expect, then that would challenge the repatriation story. But that's not our base case. Our base case is that European growth holds up fine. And in particular into the NATO summit, I think that European fiscal can come back as a theme. And that's something that means steeper curves, higher, better growth prospects, and a stronger euro.
You know, I know EM isn't necessarily your focus, but EM currencies have really benefited from this dollar weakness. Do you think that theme could turn around if we get a sustained risk-off move with the dollar higher?
No. If we get a sustained risk-off, either driven by geopolitics or just an equity market sell-off in the US, it's very difficult for carry to perform. But in the context of easing trade tensions, still relatively contained volatility, carry tends to do okay. The problem is that in EM, there isn't as much carry on offer, at least in currency space, as there was in prior years. So the Brazilian real is one currency that stands out where there is still decent carry on offer. That's a currency we like. We also like HUF. I think the key point with carry is you don't want to be long dollar carry, because being long dollar carry goes against the flow story. And although some in the market like it, we don't.
What currency would you use to fund these positions? Yen?
I think an attractive funder is just the dollar. You can be short. you can be short dollar Brazil, for example. That's something that makes sense in the current environment.
Is there a point kind of where we get to where we find ourselves with a scenario where US inflation is so strong that you have to think about you have to factor the interest rate differentials back in? You get to the point where oil stays high, you've got the Red Sea closures, you've got tariffs looking like they are going to start to have an impact. They haven't yet, but they're going to fall through fairly quickly at some point. Do we get to the point where those interest rate differentials start to come back? That the European economy is getting dinged up so much by the oil story, by the energy story, by the tariff story. The fiscal story is going to be there, but is it going to be strong enough? And how much further can it go? How much... You talk about 125. Is that another line in the sand that we should be looking for here? Kind of I'm trying to get my arms around the current scenario and when other scenarios start to bleed in. And I'm just wondering about that inflation story and how that factors ultimately into our thinking.
I think the point at which we'd start to be concerned in terms of FX becoming more correlated to rate differentials again is the point at which the Fed gets priced for hikes, or at least cuts get fully priced out. I think that's when the market will start to more actively trade rates.
So it's hard to do that if the next Fed chair is going to be uber dovish, like Paul Jones said yesterday.
So we don't know who the next Fed chair is going to be. We also don't know when the inflation story is going to show up, if at all, and when that happens. Do companies continue to suck it up? But it does seem as if Fed pricing off the story that we're talking about this morning is quite significant. How do you draw a line between what is happening with the Iranian story to the oil price to what is happening? University of Michigan data is going to be out a little bit later on. There's normally quite a clear line between higher gas prices and the perception of inflation. The Fed's got to pay attention to that, right?
Yeah, no, I think so, especially because they are very worried about inflation expectations somehow becoming de-anchored because of tariffs. Obviously, if you have oil price rising, as well as that could cause more fears of inflation expectations moving a bit higher. Those longer-term inflation expectations, like in that UMISH data point, the 5-year inflation expectation. So, something to definitely keep our eye on. But, oil is what, at $75 a barrel right now? Yeah. So we're far away from that scenario.
Yeah, that has been, yes, it's increasing today because of the attacks in the Middle East, but it was already on an upswing all week long, and a lot of that was coming from the trade uncertainty, but it wasn't reflected in the commodity currencies. You are just now seeing a dollar story. Why not? Why that delay?
I think it's coming. As you say, there's a lot of things we don't know yet, but there's some things we do know, which is that oil prices tend to feed through positively to CAD in Norway. Out of those two, we think NOK can do particularly well. In general, European currencies benefit from the flow story. NOK has the additional growth angle and, of course, a positive flow story as well. So we think that if oil prices continue to stay bid, then NOK is a good place to be allocated.
Are we in a more inflationary environment? Are we underpricing it still? The inflation. This week has been a story of...
Don't forget, we just had cool CPI and PPI, okay?
I know. This is my point, is that this week has been about the inflation not showing up yet. Yeah. But are we in a more inflationary environment?
I think Val's point is a key one, which is that the market has been expecting tariffs to feed through in a positive way to U.S. inflation. And since then, we've seen CPI come off, PPI be a bit softer, and activity data not really deteriorate. So tariffs haven't really fed through to prices. The market will need to see that before it more actively trades a higher inflation regime.
And we might not get that till July.
Alex Chekhov, Europe head of G10 FX strategy at BNP Paribas Markets 360, walking us through the FX reaction to the reaction we're seeing really out of the Middle East. In the meantime, we are seeing oil markets still very much on a tear, an 8% increase in both Brent and NYMEX. We're going to continue our coverage shortly. Stick with us. This is Bloomberg.
We're building another art museum of the Guggenheim. Now, Louvre's big enough. Why do you need a Guggenheim as well, right next door?
I think it's a great question. I think the beautiful thing about the UAE and Abu Dhabi is we live with over 200 nationalities. And in doing so, they have become a part of the country's and the city's fabric. And we need to celebrate that. So we need to celebrate everybody's identity, everybody's background, everybody's heritage, everybody's history. And what a beautiful way in doing so in these beautiful institutions. These museums are educational institutions and they're community institutions. So we wanted to curate really a story where you come to Saadiyat Cultural District and you, if you allow me to curate the story, you start off at the Natural History Museum. And at the Natural History Museum, you get a glimpse and you get an understanding of how we came to be, how our Earth came to be, how our universe came to be, from a scientific perspective. Once you leave the Natural History Museum, you go to our National Museum, the Sheikh Zayed National Museum. There you understand the history of this great land. Not just the history of the country, but the people of this land that have been a part of this land for over 300,000 years. You get a glimpse of what the past and the present and the future looks like here in the UAE. From there, you maneuver yourself to the Louvre Abu Dhabi, which is a beautiful universal museum. It is universal in its thematic approach. So there, you basically see a part of you on an equal pedestal with the entire world.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg. Today, CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good. But as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Minutes away from the start of the opening trade across Europe, futures decidedly lower on both sides of the Atlantic. Just take a look at this. Eurostock 50 futures down almost 2%, I think 1.7%, and selling off since we start this program. The FTSE 100, however, is a little bit selling off a little bit less, only down 0.5%. Perhaps an expectation that the oil price jump there is going to have a read-through into some of the majors listed on the FTSE 100. But then again, go right back to the continent, the CAC 40 following in suit, down about 1.5%.
Yeah, let's take a look at how European bonds are shaping up at the open. We know that oil price rises tend to benefit European fixed income more than U.S. Treasuries. We're seeing that theme this morning with that German 10-year yield down around near 5 basis points. So they're outperforming the bid into fixed income. We have U.S. 10-year yields down a bit less.
Let's talk about why this is all happening and the market reaction that we are seeing. Israel says Iran has launched over 100 drones in the last few hours. This, of course, in retaliation to the unprecedented attack by Israel on Iranian nuclear sites and also senior leadership. We're also getting more reaction now from some of the Arab states. The United Arab Emirates now condemning the quotes, the attack in quote the strongest terms. We have obviously seen the Saudis already coming out with a comment as well. We're going to wait and see exactly how the rest of the Arab world deals with this. Also, we're going to wait and watch and see how China and Russia respond to this as well. Ona Rant, Bloomberg's managing editor for the Middle East and North Africa, joining us now. Ona, we have seen the Israeli attacks. We don't know yet whether or not this is just a first, second wave, whether there are further attacks coming. We have seen the Iranian response. Can you give us a sense of what people are talking about in the region about how this now moves forward, how this conflict escalates or de-escalates? What is the latest thinking?
Well, that is really the key question, where it goes from here. And there is hardly any sign that there is going to be an immediate de-escalation. If anything, the comments from Israeli leadership and just the nature of how this conflict has unfolded in the last couple of years, I think it's fair to expect that this was just the opening act. It looks like Israel did focus on some key Iranian officials and military sites in its opening strikes overnight in Tehran and elsewhere across Iran. And from now on, it's it's natural to expect that the focus of these attacks will move towards the nuclear sites, some of which have been hit in strikes earlier this morning, but some of the major nuclear sites in Iran, such as the one in Fordo and Bushehr, have not been hit, and it only makes it more natural to expect that the rest of the operations will focus on nuclear sites, whether it happens tonight or later over the next couple of days or weeks. We don't know, obviously, but that is what is to be expected from this conflict at this point.
Owner and Bloomberg's managing editor for the Middle East and North Africa, joining us this morning with an update on how it's being received in the region. We thank you so much. In the meantime, let's go right back to the markets. Oil, of course, surging on the news of those attacks. But where do we go from here? Already seeing an 11% move over the past 3 days, but 8% on an intraday basis when it comes to Brent crude. I want to bring in Amina Bakr, head of Middle East Energy and OPEC Plus Insights over at Kepler. Amina, pleasure to have you on the program. Thank you so much for joining us. Walk us through the risks here. Walk us through the case, perhaps, for something like $100 oil. What do we need to see to get to that level?
There are lots of risks here. I mean, we're in a very, very volatile situation. This is the worst attack on Iran since the 1980s war, when you had the conflict between Iran and Iraq. So the situation is very delicate, and there are many risks involved. Primarily, I mean, the first thing that comes to mind is that, one, we're going to get some kind of obstruction of exports from Iran. But the second thing, and this is more of a kind of alarming situation, if there is any stoppage at the Strait of Hormuz. And as you're aware, that 20% of the world's supplies flow through the Strait of Hormuz. So any blockage there, that's going to possibly bring oil prices to the 3-digit zone.
So, Amina, talk to us a little bit then about where you start to see the biggest pressure point in terms of some of the OPEC output as well. You talked about the Red Sea, you talked about the Strait of Hormuz as well, but those are largely transportation costs. From an actual production standpoint, where's the touch point?
Sure. No, from an actual production point, I mean, the group has already started to, I'm talking about the 8 members of the OPEC Plus group. They had these voluntary cuts. They started unwinding some of these cuts, and we're getting the increments through the summer. There is some speculation out there that the group was kind of factoring this attack in. This is absolutely baseless. The calculations were basically around seasonal demand in the summer, and that's why they sped up these increments into the market and had nothing to do with the geopolitical situation. However, I mean, right now, there is no control over the geopolitical premium that we're seeing on the price. OPEC can't control that. So the best thing is just to wait and see what happens. It's too early to say. And we do not have a physical disruption on supply. So there's no reason for the group to step in and say, okay, we're going to use some of our spare capacity to fill in the gap. There's no gap yet.
Amina, good morning. It's Guy. How much of the global spare capacity that exists in the oil market sits behind the Straits of Hormuz?
Well, we have within OPEC alone around 6 million barrels. I would say the other members would have maybe 1 million barrels. So in total, around 7 million barrels of spare capacity. That's not to say that, you know, that is it's a good cushion. It keeps markets kind of at a kind of comfortable level. But markets now are reacting on sentiment and not just looking at where the fundamentals are. So that's not to say that prices are going to, you know, not react and move up.
Yeah. But how much of that spare capacity sits in Saudi Arabia, Kuwait, the UAE? I.e., if there was a problem with the Straits of Hormuz, we talk about the idea that there's plenty of spare capacity out there, and sure there is, but a significant portion of it could be taken out of the market very quickly.
Absolutely. I mean, you're talking about maybe 6 million barrels that sits within this region. So that is a significant amount of spare capacity. And we've seen attacks on facilities in this region before. If you remember, in 2019, 50% of Aramco's capacity got wiped out in just a matter of a few minutes. So there is a reason why there are lots of statements coming out from the Gulf states condemning what happened there's an effort to de-escalate the tension here. It's not in anyone's interest to have this war prolong or these attacks go on for a long period of time.
Amina, I want to ask you about maybe your worst case scenario price target for oil. We had a note out from JP Morgan yesterday saying the worst case scenario could see Brent trade close to $130 a barrel. What's your call?
Yeah, possibly. I mean, 130, 150. What's not to take prices there if we do see a major obstruction in Hormuz or an attack in the region? But also dynamics have changed. I mean, the Gulf states and Saudi Arabia have a relationship with Iran now, so hopefully it doesn't come to that.
All right, so you're talking about 130, 150 being reasonable for a worst case scenario. But what do you make of today's move? You know, at the worst case or at the worst time today, Brent crude was up some 13%. We've cut that nearly in half. Do you think that today's move is warranted given this escalation?
I think that today's move is the biggest move that we've seen from geopolitical factors across the region. If you look at previous attacks, I'm talking about even during October 7th, we haven't seen crude react so much. The market has been brushing off the geopolitical risk for a region. So this is the biggest increase we've seen to the geopolitical premium factor on prices in just recent history.
But Amina, there is no geopolitical premium from what I'm seeing right now. In the sheer Brent over NYMEX difference, we're looking at somewhere between $1 and some change. Walk us through a little bit where that geopolitical premium lies when in previous iterations of, say, drone attacks on Aramco production fields or trade tensions, you've seen a geopolitical premium of anywhere from $4 to $6. Where is that in this price action?
I would say is because, I mean, this is a reaction mainly based on sentiment. And if we get a supply disruption, that's a different story. This is just on the expectation that, you know, this the strikes will escalate, that war will expand, that Iran will retaliate in some way. These are all just a kind of preemptive reaction and not based on a supply outage. When you had the attack on Aramco, I mean, that's a completely different story. As I mentioned, you had 50% of capacity wiped out. This is a different situation. So the price influx that we're seeing today, again, is based on a situation where you don't have changes to fundamentals per se, but just an expectation that things could get worse.
I mean, who does this affect the most? Which economies are most exposed to this move? Who are the biggest buyers of the crude that is coming out of Iran and potentially out of this region? So I'm just trying to think about what the inflationary effect is going to look like and where it shows up. What would you say to us on that front?
Well, you already saw, Guy, yesterday, President Trump himself complained that oil prices were too high and he wasn't happy. And he even addressed Chris Wright and told him that he needs to do something to bring prices down. So President Trump is somebody who isn't really happy with the way prices are moving. I mean, of course, the biggest buyer of Iranian crude is China. It'll be more difficult for them to secure barrels out of Iran. I mean, it's just the difficulty. I'm not saying that Iran can't bypass sanctions. They've been very good at bypassing sanctions, but it's just the difficulty right now that they might face in transporting that crude to China. But overall, I would say, I mean, the demand picture for 2025 wasn't a very rosy one. So if you have a very volatile situation or a big spike in prices, that doesn't do well in terms of encouraging oil demand globally.
Amina, you mentioned Donald Trump. That has been a key piece of the question that we've been asking this morning, in that if we are waiting for this kind of further retaliation, further attacks from Israel and Iran, at what point does the United States speak up a little bit louder? And we know there have been these warnings earlier in the week. I'm curious what the actual probability of U.S. involvement in this conflict is. Do you have any insight on that?
Well, we understand that the U.S. did give the green light to Israel to go ahead with this attack. Doesn't mean that the U.S. is directly involved, but they were absolutely aware that this was happening. This was part of the plan, and they were given the kind of green light to do it. U.S. involvement, I personally don't think that this would happen. And already, I mean, I saw a couple of news headlines suggesting that Trump is going to ask Israel to back down in hopes that maybe on Sunday some kind of negotiation or agreement would be met. But at the same time, I mean, we're hearing from Iranian officials that they're not going to be attending the talks on Sunday. So it's a difficult situation, and unfortunately, I just see escalation at this point. I don't see it stopping.
Amina, when it comes to those U.S.-Iran talks that you were mentioning that are expected to take place over the weekend, you talked there earlier about Iran nearly sanction-proofing its economy. What's your read on that? How sanction-proof is Iran?
They've developed quite a sophisticated network over the years that would transport their oil. And we've been seeing their exports kind of hover between 1.6, 1.7 million barrels a day. And their primary, buyer here is China. And the Chinese refinery still do have appetite for these sanctions discounted barrels. We do get fluctuations from time to time, but Iran has proved its resilience in bypassing sanctions. That's not to say that if the U.S. decides to press even heavier sanctions, that they will face obstacles, and perhaps we would see some of these volumes come off more. But we're at a point here. We're not talking about sanctions anymore. We're at a point of conflict. It's much bigger and more serious. But for the time being, just from our reporting on the ground and what we've heard from the Iranian national oil companies is that there has been no damage to oil facilities. So technically, their production is still intact for now.
Amina, thank you very much indeed for updating us. We greatly appreciate it on what is happening in the oil market. Amina Bakr, head of Middle East Energy and OPEC at Kepler. We're going to be back in a few more minutes. I just want to draw everybody's attention to the fact that there is a top live, T-Live, running on the Bloomberg terminal. The latest we're seeing on that is that Israel is already starting to intercept drones in Jordanian and Syrian airspace. That according to Can News. We'll be back with the latest in just a moment. 15 minutes to the market open. This is Bloomberg.
This villa, very traditional, a lot of things of the past.
I live my very first independent life in the farmhouse, and I built it by the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof like boat, and man and woman, and bowl of rice. Everyone should be happy if have somewhere to live, something to eat, and someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm lucky man because not everyone should have the experience of the war and peace, poor and rich technology progress has changed during my life. Rich by experience.
It's an appreciation for what you have now.
And therefore, peace is the most important thing for today, for Vietnamese, and I think for human being, for the world.
Friday morning, 11 minutes to go until the opening trade. Let's talk about the latest news that we have. We are now getting news that early warning sirens are being heard in Jordan. We understand that the Israelis are intercepting some of the Iranian drones that have been fired, and we will continue to watch what happens there. This is about control of airspace. It is clear that the Iranians can't control their airspace. The Israelis are obviously going to mount a significant defense against these drones. How successful they turn out to be could have a really big impact on what happens next. The crude market, though, monitoring all this very, very carefully. We've seen a significant move over the last 3 days, to be honest, and we're watching what Iranian crude is going to do next in terms of where those barrels go, if at all, and that's what Crudy's got our eye firmly trained upon.
I do, Guy. I think it's a really interesting one because we have to put this in the context of what that global output actually looks like. So I did a little bit of number crunching. This is Bloomberg data in terms of some of the output provided on the markets. Remember, it's only the accounted for barrels. We don't know how much is unaccounted for. But I think this is some good perspective for our global audience here. Let me walk you through this chart. This blue line up here is how much Saudi Arabian barrels do eventually hit the market. So you can see it's been fairly steady going back between 2010 to about 2019. The COVID kind of crisis did, of course, change that. You've seen a series of output increases, and it has been fairly stable until recently. That is the Saudi story, and of course they are the largest oil producer within the OPEC plus complex, so that's the one to keep in mind. The second, the one country I really want to point an eye on is this yellow line here, and that's the Iraqi oil output. The white signifies Iran, and you can see this is really crucial because of course we know that we got an early indication that this conflict may actually come to a fore when we started to see the Iraqi embassy for the United States ultimately get evacuated. I think that's a really crucial piece because Iraq, of course, is also an oil-producing nation, several barrels of which go to Western Europe and the United States as well. But the fact that you are starting to see Iranian oil output increase, by the way, in the last 5 years, so really since that COVID slump, they have been on an upswing. A lot of that has to do with some of the softness around sanctions there. Some of that also has to do with Iranian nuclear negotiations as well. We are now at levels near Iraqi levels of production, nowhere near Saudi, but getting close to Iraqi levels of production. Guy, I think that really highlights just how important Iranian crude is to this global oil market.
Absolutely. The Chinese will certainly be paying a great deal of attention to what is happening here. Let's carry on the conversation and look at the market response that we've seen thus far. Joining us now for his assessment, our Markets Live executive editor, Mark Cudmore. Mark, I've been reading your kind of evolving thoughts throughout the morning. Talk us through kind of where your thinking is right now. Unsurprisingly, a big move in crude. Is it that big? What are the ripple effects into other assets as well that we should be watching for?
So the oil move has already halved from the highs this morning. We were up 12 or 13% in Brent crude earlier. We're only up about 6.5% when I looked only about a minute ago, which shows that we're kind of really pairing the initial reaction quite rapidly this time. But it's interesting, the whole curve is moving a bit, which shows that people are expecting some kind of sustained disruption, even if maybe not as dramatic as a few hours ago. Oil prices much higher is ultimately very good for the US, and I think in context the initial reaction today was to sell the dollar again. That is the backdrop theme of this year, and shows that will be the macro theme for the very long term. But I think that all those people who sold in the initial reaction are going to be caught offside, because higher oil prices is good for the US. It is a positive terms of trade shock. It's good for US businesses on net because it's the world's largest oil producer. So therefore I expect a bit of a dollar short squeeze. That does not change the longer term picture that we're in a dollar downtrend, but we could get quite a painful short squeeze in the dollar in the short term. The other probably really interesting takeaway is that US stock for one of the weakest links. Asia is a much bigger, is a big energy importer. You'd expect Asian stocks to suffer more in this, but most Asian stocks traded okay. So the fact that the weak link was actually US stocks, very surprisingly, which shouldn't be directly affected by this, should have a more of a positive impact from higher oil prices, shows where the weak hands were. I think a lot of people piled into this market in the last week or so expecting fresh records soon, and so that's where people are getting caught offside.
Mark, you've been talking about this possible squeeze higher in the U.S. dollar. We're, 0.4% higher this morning. Put a number on just kind of the short squeeze you're expecting. The dollar softened by nearly 9% since the highs this year. What kind of a short squeeze could we get?
Yeah, it's a great question, Valerie. I think it's kind of binary here. And what I mean by that is that, I think that we very easily do another, 0.5%, something small like that, kind of just unwind the last leg down, clean out those weak hands. I think that there is a tail risk here that this starts becoming self-fulfilling, that we build a new kind of narrative of, hey, the dollar move's gone too far too quickly. The macro community has front-run the real flows. So that, I think it's kind of binary. We either, bounce 1% from the lows or we bounce 4 or 5% from the lows. I don't think it's some middle picture. So it's wondering whether do we kind of get enough momentum that it becomes a self-fulfilling story and people kind of go, hey, the long-term diversification away from those real flows that are driving that are going to play out over 3 or 4 years. And the macro community has really tried to front run it because as we've talked about a lot in this show, the dollar bearish trend has multiple prongs to it. But I think you really need those real flows to kind of substantiate it. So, yeah, I know it's not a great answer to go 1% or 5%, but I think it's that fact that the trend line might break, you start building momentum, and you get just purely those momentum. CTA advisors have to stop out of the trade, and it starts becoming self-fulfilling and runs a few percent higher.
Bloomberg Markets Live executive editor Mark Cudmore there giving us his take on the events of this morning. Thank you so much. You get more up-to-date analysis from him and the team. MLIV is the function on your terminal. I think it's interesting what he's saying there about oil prices and the relationship with the United States here, because clearly you pointed this out, the dollar is surging today. It's very out of character from what we've seen in the dollar in the last couple of days. But this is also a giant warning sign to Donald Trump, who's been enjoying lower oil prices. People like that ahead of the driving season. There's an extra domestic political incentive to keep them there.
And then you fold in the tariff narrative.
Right.
You think about kind of the inflationary factor that we need to fold into this. You and I were talking before we came on air about we've just had we had a CPI print and a PPI print this week that both pointed to sort of benign inflation. You put oil back in as a higher factor. You put tariffs at some point. You need to factor those in as well. What does the inflation print look like later this year?
Yeah, and then you get all these catalysts for higher inflation instead of lower inflation ahead.
So certainly a lot to go through. We're a lot to factor in. We are about 5 minutes away from the opening trade. Futures pointing decidedly lower, down about 1.4% in the States. Stick with us. This is Bloomberg.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
In case you missed it, on Bloomberg Crypto.
It's a huge moment for crypto to now be in the S&P 500 with Coinbase entering, and it means that crypto is here to stay. People are going to have crypto exposure in all their 401ks, and it points a little bit to, I think, where the future of financial services is going. Crypto, the technology to update the financial system. We actually launched our own index, Coin 50, which is the top 50 crypto assets, market cap weighted. Someday we hope people might actually feel the same way about getting the S&P 500 as they do of getting the Coin 50 index. So it's a great moment. We're always looking at M&A opportunities. We do have a pretty large balance sheet that could be put to use here. Part of the benefit of being a public company now in the S&P 500 is that you have somewhat of a liquid currency. We've made a number of acquisitions recently. For instance, on Base, we acquired a couple of startups. We're looking at international opportunities that could aggregate share, companies that do things similar to we do, and then also things that could just accelerate our product roadmap.
Don't miss Bloomberg Crypto live Tuesdays.
From our global headquarters in New York, I'm Danny Berger. Welcome to Bloomberg Brief. Let's set your agenda.
Bloomberg Brief delivers the market news, data, and analysis you need live every weekday only on Bloomberg. Context changes everything.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Jennifer Zabasaja at the Qatar Economic Forum in Doha, and this is Bloomberg.
Up till the opening trade this Friday morning, crude is at the centre of the story, unsurprisingly. Crude's fascinating, though. What is happening with the oil price this morning is really worth paying attention to. You gap higher first thing this morning on the news of the attack. Then you go up to session highs, but you fade them fairly quickly. We're only up by 5.5% at the moment on Brent, which is fascinating considering the magnitude of the tail risk that exists right now. How far could we go? All kinds of really extreme scenarios being talked about at the moment, but we're not seeing it in the market this morning. We're only up by 5.5%. Yes, that's a big move, but relative to what we're seeing on the ground, maybe not. So let's talk about what impact that's then having into the equity story and see what we're seeing there. What you have seen, which again is interesting, is that US futures came down but haven't bounced, which is interesting. So you're getting a different response now in the equity market versus what we're seeing in terms of the crude market and the bond market, which is really interesting in terms of the picture we're seeing evolve. Val, what's happening with European futures? Where are we now? We're a couple of minutes away from the opening trade.
Hey, Guy, we are hovering near session lows for those Eurostoxx 50 futures, down 1.6%. We are seeing some outperformance in the FTSE 100. That's due to that oil price rises in those oil majors that trade. The DAX futures are lower as well, 1.6%, near session lows for European futures.
And that FTSE 100 underperformance, really crucial there, kind of only down by 0.5%. A lot of that might come to the energy majors that are, of course, going to be trading on the FTSE 100 higher, pushing against the gravity-defying move here. You're also going to keep one eye on the shippers. We've been talking quite a bit about the risk in the Red Sea and the ripple effects there. And also we have one eye on the airlines. Of course, there's the oil read-through there, but also, of course, the read-through and the updates that we're going to get from that Air India crash yesterday, Guy.
Absolutely. Higher oil price, also closing of airspace, two significant factors for the airlines. Okay, here we go. Friday's opening trade. Let's talk about the numbers we're going to be watching. We are expecting a negative open. Don't have that yet from the FTSE 100, but I think it's probably going to be coming. Be interesting to see whether it can defy gravity. The oil majors probably, excuse me, are out early. In terms of the impact that they are having, they will probably open fairly quickly on the FTSE 100. The stock 600 now down by 0.4%. I think it's going to take a while maybe for some of these other markets to get going. How does defence trade this morning? That's going to be interesting. The airline sector is going to be fascinating to watch as well. Higher oil prices, not good news for that sector. Plus, you've also obviously got to fold in the closure of airspace, which is something significant as well. It's a very narrow corridor through the Middle East that they can operate through now, and that's just getting smaller and smaller. The CAC, here we go, down by 1.2%. What are we going to see in terms of luxury? What are we going to see in terms again, you just think about the ripple effects that come off this conflict and what it could ultimately mean. The IBEX is down by 1.24%. It's definitely...
Okay, guys, crude oil में जो लोग selling में थे वो लोग निकल जाना, ठीक है? जो लोग सेलिंग में थे वो लोग एग्जिट हो सकते हैं यहाँ पे। काफ़ी बड़ा मोमेंटम आ गया। जितना मोमेंटम मॉर्निंग पे हुआ था वहाँ से करेक्शन देखोगे 250 पॉइंट का करेक्शन, 10% ऊपर था, 5% ही है, तो अच्छा करेक्शन मिला है मॉर्निंग से। लगभग 300 ही पॉइंट मान के चलो, 300 पॉइंट का करेक्शन है। कुछ ज़्यादा ही करेक्शन आ गया, जिस हिसाब से न्यूज़ थी उस हिसाब से तो ऊपर ही जाना चाहिए था, बट या थोड़ी प्रॉफिट बुकिंग भी आनी ही बनती है। हायर लेवल से अच्छा खासा प्रॉफिट बुकिंग है। एक छोटा सा बाइंग का ट्रेड है, वैसे छोटा नहीं है ये, अगर ध्यान से देखोगे तो इसका टारगेट भी 150 पॉइंट का है, तो थोड़ा क्वांटिटी का ध्यान रखना, सडनली कोई न्यूज़ ना आए, बस उसी का थोड़ा सा इशू है मुझे, और तो खैर कुछ नहीं है। बाकी देखो जिस हिसाब से मोमेंटम आ रहा है उस हिसाब से एसएल भी थोड़े बड़े हो जा रहे हैं ऑटोमेटिकली, तो थोड़ा सा ध्यान रखना। 30 पॉइंट का समथिंग एसएल है, ज़्यादा मत लेना क्वांटिटी, टारगेट बड़ा रखा हुआ है तो ज़्यादा इशू नहीं आएगा। वन 30 पॉइंट ही काफ़ी है, ये बड़ा हुआ दिख रहा है। ठीक है, ज़्यादा क्वांटिटी हैवी मत बाई कर लेना, ऐसा ना हो कि, क्योंकि देखो दो रीटेस्ट साथ साथ बने हुए हैं। ये पहला रीटेस्ट है, उसके जस्ट नीचे एक और रीटेस्ट है, दो रेजिस्टेंस थे, दोनों का ब्रेकआउट हुआ है सीधा, तो कौन से पे रुकेगा वी डोंट नो एग्जैक्टली। नॉर्मली तो मैं तो वैसे सजेस्ट करता हूँ रीटेस्ट में मत ही ट्रेड करो, बट आपको यहाँ पर सपोर्ट तो बना नहीं है, सपोर्ट बनेगा उसके बाद उस पर बाई करेंगे, इसमें काफ़ी टाइम लग जाएगा, तो रीटेस्ट पे एक ट्राई है, क्वांटिटी थोड़ी कम, 1230 की कैंडल भी है, ये करंट वाली 1230 की कैंडल स्टार्ट हो चुकी है, देख पा रहे होगे, दिस इज 1230 कैंडल। लंदन सेशन ऑलरेडी ओपन हो गया है। ठीक है, ज़्यादा क्वांटिटी मत लेना। करंट कैंडल 1230 की कैंडल है, देखते हैं रुकता है यहाँ पर या रीटेस्ट पे नहीं, या फिर नीचे वाले रीटेस्ट तक आ जाता है ऑटोमेटिकली। कम क्वांटिटी, छोटा सा एसएल है, जाएगा तो निकल जाएंगे, होल्ड नहीं करेंगे। फिर नीचे एक और रीटेस्ट है, उसको देखा जाएगा अगर ये होल्ड नहीं करता है, इन दैट केस। ठीक है, 1230 की कैंडल, न्यूयॉर्क सेशन से पहले आपका लंदन सेशन देखते हैं। लंदन सेशन में बायर एक्टिव कर रहे हैं क्रूड को या नहीं, या ये भी मार्केट में क्रूड ऑयल को डाउन ही लेके आना चाह रहे हैं वापस। ठीक है, मॉर्निंग पर जो मोमेंटम था वो न्यूज़ बेस्ड ही था, ऐसा नहीं था कोई प्राइस एक्शन इतना पॉजिटिव हो गया था। बाकी नेचुरल गैस में भी थोड़ा सा रह गया टारगेट, इसमें भी निकल जाना, ऊपर आएगा वापस सेल कर सकते हैं। ठीक है, अगर वापस ऊपर आता है तो वापस सेल कर सकते हैं यहाँ पर भी। एक बार थोड़ा सा इसको देखें क्या समय है इसमें। यस, ये लंदन सेशन की कैंडल है, 1230 वाली जो कैंडल होती है। नॉर्मली नॉर्मली क्या लंदन सेशन का ही टाइमिंग रहता है, टाइमिंग वैसे चेंज होता रहता है, बट अभी के लिए तो 1230 है लंदन सेशन। वहाँ पर भी देखोगे, वहाँ यूरोपियन मार्केट में तो वहाँ पर भी तीनों ही इंडाइसेस नेगेटिव चल रहे हैं। जर्मनी का देखोगे, फ्रांस का देखोगे या फिर यूके का देखोगे, तीनों ही मार्केट डाउन है। फ्रांस का थोड़ा सा कम डाउन है, 0.5% डाउन दिख रहा है। जर्मनी का और यूके का तो बिल्कुल 1.5% के आसपास डाउन चल रहा है मार्केट अभी। सपोर्ट नहीं है यार, सपोर्ट तो काफ़ी नीचे होंगे, सारे रीटेस्ट ही हैं। गैप अप हुआ है, उस वजह से कोई सपोर्ट तो नहीं बना है अभी, तो रीटेस्ट ही है जिनको यूज़ कर सकते हैं। ऑल थ्री। ठीक है, जितना मोमेंटम आया था मॉर्निंग पे वो गैप अप के बाद पहली कैंडल पे देखोगे मार्केट वहीं वापस नीचे, तो अब सिर्फ गैप ही है जो फिल हो सकता है। 400 पॉइंट ऊपर गया था, अब 400 पॉइंट वापस डाउन। अभी भी है, सेम ही रहेगा वो भी रिटेल्स में ना। बाकी नेचुरल गैस में देखोगे तो एक सेकेंड, उससे पहले न्यूज़ देख लेते हैं। ठीक है, अभी और कोई अपडेट तो नहीं है। ये क्या हो गया? ये बाकी कोई न्यूज़ आती है तो देखा जाएगा। नहीं तो मिल ले सकते हैं, बट ये भी रीटेस्ट ही है। लाइक करते रहो गाइस, 16 लाइक्स पे नहीं रुकना है। अब ये क्या हो गया? इसको कर सकते नेचुरल गैस में 530 के राउंड देखा जाएगा। कि 1 मिनट रह गया कैंडल क्लोजिंग में। इसको भी हटा दो, रेटेस्ट नीचे वाले को। ट्वेल्व 30 की कैंडल हो गई है क्लोज। रीटेस्ट पर ही हुई है क्लोज, तो ले सकते हैं यहाँ पर छोटा सा पुल बैक के लिए ट्रेड। ठीक है, अब कोई डेटा अभी तो नहीं है, शाम को ही अब यूएस मार्केट ओपन होगा, उसके पहले लंदन सेशन ओपन होगा और फिर 7:30 पर एक डेटा है। ऐसा ना हो कि करेक्शन होते होते कल के लेवल तक आ जाए प्राइस वापस। कि अगर ये लेवल गया, अगर ये गिरता है नीचे यहाँ से तो 300 पॉइंट और गिरेगा क्या? हिसाब से तो 300 ही पॉइंट गिरना चाहिए अगर ये लेवल होल्ड नहीं होता। गाइस लाइक करते रहो, 17 लाइक्स पे रुकना नहीं है। जिन लोगों ने लाइक नहीं किया स्ट्रीम को फटाफट से लाइक कर सकते हैं। एंड डोंट फॉरगेट टू सब्सक्राइब द चैनल एज वेल। जिन लोगों ने चैनल सब्सक्राइब नहीं किया वो भी कर दें। पुल बैक का ट्रेड भी टारगेट इसका बड़ा ही रखा हुआ है, ध्यान रखना, तो थोड़ा संभल के। क्रूड ऑयल का जो पुल बैक का ट्रेड है वो छोटा लग रहा होगा स्क्रीन पे, बट वो 135-140 पॉइंट का टारगेट है फ्यूचर में, क्योंकि प्राइस काफ़ी ऊपर आ चुका है, मोमेंटम बहुत ज़्यादा हो रहा है, तो इसलिए हल्का सा ही मोमेंटम, काफ़ी स्ट्रॉन्ग मोमेंटम पुल कर दे रहा है किसी भी डायरेक्शन पे। स्लो मोमेंटम, लेट्स सी इस रीटेस्ट पे भी रुकता है या फिर नहीं। ऐसा ना हो कल के सपोर्ट तक ही आ जाए पूरा।
Calling for obviously de-escalation in this process. Let's carry on the story and try and understand it from the various angles that we are watching this morning. Obviously the nuclear angle is critical to this, and try and get an understanding of what is going to happen next. Images on Iranian state television clearly showing thick black smoke rising from the area around Natanz, the sites which is in central Iran, one of the kind of two obvious or declared nuclear plants that the country has. Bloomberg's atomic diplomacy reporter Jonathan Tyrone joining us now. Jonathan, just talk to me a little bit, talk to us a little bit about kind of what this means for the nuclear program and why the Israelis have felt that they need to strike now. How close to achieving a nuclear weapon was Iran?
Well, look, the intelligence assessment from the U.S. And the IAEA was that Iran's formal weapons program ended in 2003, and Iran has not commenced a formal, structured weapons program for more than 2 decades. That being said, Iran was found in non-compliance of its nuclear safeguards obligations yesterday at the IAEA in Vienna. That's in relation to an investigation into the detection of uranium particles found at undeclared sites. These are years-old suspicions. However, Iran did not cooperate with the IAEA's investigation. That being said, we have to separate how close Iran is to a nuclear weapon from its non-compliance. The fact is that IAEA investigators remain in Iran right now. They conducted more than 400 inspections last year. That's 1.4 sites a day. And they're keeping track to the gram level of Iran's nuclear enriched uranium inventory. That's how we know that Iran has the equivalent of 10 bombs worth of highly enriched uranium. Now, what this strike does is complicate diplomacy and add mounds of risk, because Iran has already stated one of its reactions could be to leave the Nuclear Non-Proliferation Treaty if it was struck. And what that does,
Jonathan,
is add a new layer of opacity. It will remove inspections entirely.
Jonathan, just briefly, we knew that these U.S.-Iran talks were going to take place in Oman over the weekend. Do we know if they're still on track?
I haven't heard anything different. We're going to get our first detailed readout of what happened overnight in terms of the nuclear file by the IAEA Director General Rafael Mariano Grossi. The IAEA Board of Governors is still in session. It's convening at 9:30 local time, and they're going to discuss, what's happened. We'll obviously be hearing from Iran. We'll be hearing from the U.S., and this will be the first real detailed readout of the, nuclear diplomatic situation. So that's forthcoming.
Well, we look forward to seeing if those talks stay on just hours away from where they're supposed to happen. Bloomberg's Jonathan Tyrone, we thank you so much for that additional context when it comes to the nuclear story. We were talking there about what happens next when it comes to relationships with Iran, but a lot of the airlines already preparing to reroute flights and address some of the airspace closures over the Middle East to avoid the conflict. Let's bring in Bloomberg's Benedict Campbell. He joins us from Berlin, talking to us a little bit about, maybe not Berlin, but talking to us a little bit about where the aviation industry is viewing this conflict and how to move forward. Benny, walk us through the latest.
So we have heard that the Israel airspace is closed. That's obviously a fairly small airspace, but it's an important one because of a lot of planes that go from Europe through the Middle East into Asia use that portion of the world. Iran also closed. So this further narrows sort of the scope of airlines as they go from west to east and the other way. And this is something that has become sort of a feature of modern aviation in recent years. Obviously, Russia is closed to a lot of airlines. Ukraine has been closed to a lot of airlines. India, Pakistan, another conflict. So conflict zones are becoming an increasingly problematic part of aviation today. Obviously, no airline wants to be in a danger zone, wants to put its passengers and its crew in danger. We have had terrible incidents of planes getting shot down. So there's a lot of precaution right now, and this conflict just adds to that.
Benny, good morning. It's Guy. Can you just give us a quick update on what we have learned, what the latest is in terms of the Air India flight?
So the latest is that they have apparently retrieved one of the black boxes. We don't know which one, but if you see some of the footage, the tail of the plane was largely intact, even though the aircraft smashed into a residential area. And the black boxes, at least one of them, is located in the tail of the plane. So there was a fairly swift retrieval thereof. We don't yet know what the cause is. Some speculation around why the plane was not able to get lift. It seemed heavy. It seemed to sort of come back to the ground slowly and then explode. So a lot of focus will be on why was the landing gear still extracted, why were the flaps not deployed to give the plane lift. So too much drag, too little lift, too much weight potentially, but really unclear at this point. A lot of questions, and that might also give a sense of why Kelly Ortberg, the Boeing CEO, has decided to cancel his appearance at the Paris Air Show, which kicks off this weekend. I know we were due to interview him, to speak to him, so he won't be there. He's really focused on the crisis response now, so he's staying behind, and that's where we're standing right now.
A totally understandable response from the Boeing team. Benedict, thank you very much indeed. Global aviation editorial leader Benedict Campbell joining us on the various stories impacting that sector. Up next, we're going to speak to an expert from Chatham House, their Middle East director on geopolitics. That conversation is next. This is Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Why is Baltimore so important to you?
It's our state's largest city. And if your state's largest city is not thriving, your state can't thrive. And that is just a mathematical equation, because the only way this is going to be Maryland's decade is if it's Baltimore's time. And so that's why we did focus on things like being able to extend the Orioles lease and make sure the Orioles could be here for 30 years. It's the reason we focus on things like the Preakness and keeping the Preakness in Maryland for generations to come. While we've invested in the convention center, the reason we focused on housing and getting rid of the vacant housing, the reason we focused on violent crime. And now Baltimore is having among the most precipitous drop of anywhere in the country when it comes to homicide. homicides and non-fatal shootings and carjackings and auto thefts. So if you can have Baltimore thriving, your state is going to thrive.
So if somebody's watching this and they're not from Maryland, but they want to know a little bit about Maryland, what would you encapsulate in a paragraph or two about what people should know about the state of Maryland?
I would say Maryland really is American miniature. You tell me what you want to do. And no matter where you're standing in the state of Maryland, I can tell you where to have a world-class experience within 2 hours. We're the home of innovation. We're the home of Johns Hopkins University, the home of the NSA, the home of NIST. We have so much to offer in the state of Maryland, and I think it's one of the reasons that people are so excited about the growth trajectory we're on.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
This is the opening trade about 30 minutes into today's session, continuing to see red on the screen, but definitely off session lows. And again, only 30 minutes into today's sessions, we've seen some of those losses paired across the board. Stock 600 down just shy of about 1%. Some heavy losses in the DAX, though. The FTSE 100 perhaps escaping those lows, only down about 0.6%, guy.
Real divergence in the market this morning. You're seeing those that use energy suffering, the airline sector, the chemical sector under significant pressure this morning. Elsewhere, you are seeing anything associated on the upside with energy certainly benefiting. You can see what's happening with Brent crude, and you can see the effects of what has happened overnight in that market. That you could argue that it's a relatively small response in terms of what we're getting here. Let's talk a little bit about what we're seeing in terms of the latest. The situation is very fluid, but Israel's state Kan News is now reporting that the country is intercepting drones. It's happening over Jordan, it's happening over Syria, in the airspace of both of those two countries. Jordan has temporarily closed its airspace, citing precautionary measures. Iran's sending a volley of drones that were intercepted, are being intercepted by Israel. The Israeli attacks on those drones obviously are going to be causing potential concern on the ground in Jordan, as a result of which we're seeing the sirens going off in that country. Let's talk a little bit about what we are seeing here in terms of the response from Iran and Israel. Israel is saying, Chrissy, that they had no choice but to make this attack happen.
Absolutely. On the other hand, Iranian state media also reporting that the head of the Islamic Revolutionary Guard, as well as the armed forces chief of staff, were both killed in the Israeli strikes. Iran also saying 6 Iranian nuclear scientists have been killed in the attacks as well. Israeli Prime Minister Benjamin Netanyahu vowing to continue attacks for as many days as it takes.
Moments ago, Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
Let's get a little bit more on those geopolitical implications of this conflict. I'm pleased to say Sanam Vakil, director of the Middle East and North Africa program at Chatham House, joins us this morning. Sanam, thank you so much for your time. Walk us through just what you're thinking of this conflict. How does it differ from previous iterations of this tension?
Sure. Well, good morning, and thanks for having me. This is a serious moment in the Middle East, a serious moment for Iran and Israel. This attack that has been launched by the Israeli government is being described as, of course, preventative or preemptive in order to prevent Iran from obtaining a nuclear weapon. The attack was launched and was very precise in targeting Iran's senior command structure. There have been deaths among very important people, including also nuclear scientists, targeted attacks across Tehran, but also strikes against Iran's nuclear facilities and efforts to take out Iran's defensive and deterrence capabilities, meaning missile and drone facilities, as well as Iran's radar capabilities, perhaps to prevent a further Iranian response. Iran has already launched, I believe, over 100 drones and cruise missiles, supposedly. I mean, all of this information is still coming out against Israel, and the Israeli government is trying and working to take those down. This is a dangerous moment that requires immediate de-escalation, and we just don't know how things are going to play out.
Sanam, you mentioned this is a dangerous moment. How does the U.S. plan all of this? Do you think this is potentially an embarrassment for the Trump administration that this has escalated to this point?
Well, I think I see it as the president that was in supporting and engaging in diplomatic negotiations with the Islamic Republic. He is being perceived to have supported or indirectly endorsed the attack, perhaps seeing this as a moment of opportunity to pressure the Iranians further. It is, of course, halting diplomacy. Iran has canceled the planned talks for Sunday in Oman, and it's unclear how the negotiations will resume. They certainly will resume at some point, but I'm deeply worried that I'm deeply worried that while we're in this moment of escalation, Iran might take measures to withdraw from the non-proliferation treaty and make further nuclear advances in order to protect the regime further. And this, of course, will showcase that Israel's military action will not achieve its goals.
Sanam, good morning. It's Guy. It is clear that the Iranians do not control their own airspace. It is likely probably that Israel does. That means that we have a sort of asymmetric situation in terms of deterrence between these two nations. If that is the case, what other outlets, what other options does Iran have in terms of responding to the attack that we have seen?
Well, Iran is certainly, by all means, the weaker party, and you're quite right to point out the imbalance. Israel has continued to demonstrate its military and intelligence superiority since October 7th, and as it has attacked Iran-backed groups across the region. This is the third such and most serious strike against Iran that we have seen, and the very precise targeting of apartment buildings where key figures were habitating is reflective of that. Iran, I think, is going to try to accomplish a few things here. It has to respond to prevent further waves of strikes coming. But secondly, I think that the Iranian strategy is to make sure that response is relatively targeted, but doesn't pull Iran and the region into a broader war. I think there are going to be moments here where the international community, and particularly the Gulf states, can and should play a role to bring down tensions. I don't believe right now Iran is going to attack oil infrastructure in the region or target Gulf infrastructure, which they have threatened to do in the past. I think that this is there's an escalation ladder here that we have to watch. The U.S. has also made it clear that American military facilities and, of course, American lives must be protected. So Iran is boxed in, but the attack is underway. I'm sure there will be further waves to that attack, but Iran's response will extend beyond, and I think that we will see Iran taking measures within its commitments to the non-proliferation treaty. It will kick out what remaining inspectors are left from the IAEA in Iran. It will start to look at other areas to pressure the international community in order to bring down tensions.
Sanam, thank you very much indeed for updating us. Useful insight into what is happening here. Sanam Vakil, Director of the Middle East and North Africa Programme, joining us from Chatham House. Let's talk about the market reaction. Oil has surged on the news of the attacks. Christoph Ruhl, Senior Research Scholar at the Centre on Global Energy Policy at Columbia University and a global advisor for Crystal Energy, joins us now. Christoph, in some ways you could argue that the response we're seeing in the crude market is relatively muted. I think we've got crude up by 5-6% right now. Given the scale of the potential for outages, do you think that is a reasonable response by the crude market?
Good morning. First of all, the markets are always right now. So, yes, it's reasonable. I think it is relatively muted, you're right, and there's a good reason for it, which is that markets, number one, try to gauge what happens next. We have seen that movie once before, if it was just a one-off strike, and we have seen oil prices spiking and then falling pretty rapidly before. This time it may well be different. Israel has said it will be different. And then you will see a second round of reactions to the oil price increases. But secondly, oil prices, if you want, have been sort of prepared. There has been a long discussion now over the last 2-3 months with OPEC Plus increasing production much more than they had previously announced, and there was speculation about the reasons. And one of the reasons was actually that people suspected that something may happen, and they are in the business of creating a buffer for the possible price reaction.
Well, Christoph, let's stick with that line of thinking there. If OPEC Plus and members of OPEC Plus maybe saw this coming, maybe wanted to create that buffer, as you suggest, is that move over? Are they still in the business of looking to create a buffer moving forward?
Well, this is a really interesting point because, remember, OPEC Plus had cut production by 6 to 6.5 million barrels per day to keep prices up, came increasingly under pressure, and then had a schedule by which they wanted to increase production, and starting in April, increase production by much, much more for 3 months in a row. And people were wondering, why is that? And there were 3 possible reasons being discussed. And I think now we are learning it's not one of the 3. They're all coming together and they're all connected. And the 3 reasons have been, number one, the official one, which OPEC Plus said themselves, is that they had some members like Kazakhstan who produced way above quota and who argued they couldn't really scale it down for various reasons, so they needed to be, in quotation marks, punished. That was one reason. The second one was there was speculation, in particular around the time when Trump visited the Gulf countries, that maybe something was in the making, tighter sanctions on Russia, more sanctions on Iran, Venezuela, or something similar to what we are seeing right now. And that in order to prepare for that and in order to be in the good books with the new American administrations, they had increased production by so much more, or had at least announced that they would. And the third reason is a very long-term reason, which is that the oil market, when you ask most oil market analysts, is likely to see demand peaking and plateauing within the next few years, within the next 5 to 10 years probably. And that will change the market completely, because in a market which shrinks, and the oil market has always been rising, in a market which shrinks, if you want to only maintain the same volume of oil you sell as before, then you need to increase your market share by definition, and you do that usually by price competition. And so the third argument was that they may have wanted to prepare themselves for this battle for market shares by being at full throttle production when it starts, and not, already having a lot of spare capacity. I think these are 3 reasons, one short-term, one medium-term, one long-term, which also have different importance. The last one, the market share one, the long-term one, is the most important one. The punishment of Kazakhstan and others is the shortest term one, and the least important one, and what we have now is in the middle. And I think this was one of the few occasions where probably all 3 guesses were right, and where when you put yourself into OPEC Plus shoes and you're not quite sure what's going to happen, this seems to have been a very good time to increase production ahead of schedule, and they proved to be right so far.
All right, Christoph Ruhl, Senior Research Scholar at the Center on Global Energy Policy. We thank you so much for joining the program this morning, providing a little bit of context where oil prices may go next. We thank you for that insight. Up next, we're going to speak to a key opposition voice from Israel, an interview with former Prime Minister Naftali Bennett coming up next. Stick with us. This is Bloomberg.
We're micro investors. So as micro investors looking to invest capital, whether it's in private equity or in direct lending, what we're looking for are opportunities to deploy capital at attractive risk return. When we wake up in the morning, we don't seek to avoid risk. We seek to price it correctly. And so in an environment like this, for sure, if you're looking at a portfolio company opportunity, when you think of the value creation plan, you're factoring in now the uncertainty, which undoubtedly will impact the extent to which you're willing to pay for that asset. Now, in our existing companies, in our existing portfolio, the vast majority are services company. And services companies don't have basically the input issues. But I will say that when we look and we roll up all this data for all of our portfolio companies, and it's quite rich, it's just down now below 1 million employees globally around the world. We're 2,300 at Carlyle itself. But in our portfolio companies, we roll up this data every month. For example, the inventory component of PMI was up about 4 points. I know that's not really news that anybody probably would have focused on, but we could see that happening months ago. So immediately when it looked like the new administration was going to come in and there was the possibility of tariffs, you could see purchasing managers immediately mobilizing to start bringing goods in faster because of the uncertainty factor.
In case you missed it on the opening trade.
You talk to the airlines, they're watching what the demand picture looks like right now. At the moment, it appears that actually the demand picture is okay, but they're all worrying as well about what tariffs are going to do to their business going forward. Are they going to have to pay higher prices?
There's no question in the short term with what we've seen coming out of Washington and the challenges of the trade negotiations. It's choppy.
We've got about a $500 million residual cost challenge as a result of those tariffs.
We have seen some softening, but it's rebounding a bit.
Things are steady. We're reassured that our premium demand is holding across all of our sectors.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be.
Don't miss the opening trade, live every weekday.
In case you missed it on Bloomberg Insight.
This is most likely going to be a series of talks focused on very narrow wins, but certainly touted, at least by the U.S., as a big win.
Trump actually has backed down, so therefore, I believe China has really won this tariff war for the first round.
This postponement gives us a little bit of breathing room, but the simple fact is the world did change. We're not going to go back to where we were before.
Don't miss Bloomberg Insight live weekdays.
Welcome back to the opening trade. About 46 minutes into today's session, seeing red across the screen. The stock 600 down about 0.7%, but pairing the losses we started at when it came to the open. Green on the screen, however, when it comes to the oil market. However, also pairing the jump that we saw earlier today, an almost 13% move earlier in the session, now only higher by 5%. A geopolitical risk premium braked into Brent of less than $2. 73 handle there, Guy.
Let's get some insight into what is happening in Israel right now. I want to take you to Tel Aviv. Israel's former Prime Minister Naftali Bennett joins us now. Good morning. Thank you for taking some time to speak with us. What do you make of the action that has been conducted by the Netanyahu government overnight? Are you broadly supportive?
Absolutely. This has been in the doing for many years. Iran was racing forward to acquire 10 nuclear warheads. They accumulated enough uranium for 10 nuclear warheads, and they weren't stopping. We gave endless warnings, and now it's time for action to take out Iran's nuclear program, to take out its military and terror leadership that's been fomenting so much terror, so much pain. And the world will be a much safer place when this action ends.
What do you expect this? You say this action ends. How long do you think it'll take before this action ends?
Well, that's to be seen. It may take a few days. This is not a one-off. This is a very comprehensive action because we need to really not only neutralize the nuclear program, but also neutralize the ballistic missile program, which I'll just remind you that over the past year, Iran twice attacked Israel with hundreds of ballistic missiles. So we're also focused on that. It'll take a bit, but this has been long in the doing, and we have to complete it.
This is Creedy in London. Thank you so much for joining us this morning. Talk to us a little bit about moving forward. You said this is not a conflict necessarily over. It could take weeks, potentially months as well. Naftali, talk to us about whether or not Israel can go at this alone.
We are going at it alone. We have never asked anyone to fight wars for us. We can defend ourselves by ourselves. But I will say that this is a vital strategic interest for all of the free world, because Iran has been the epicenter, the head of the octopus of terror, whose arms were all around the Middle East, in Lebanon, in Iraq, in Yemen with the Houthis. It's Iran who's been funding all of these terror organizations, who's been training them and operating them. So the big mistake for the past 30 years was fighting each tentacle, and now finally we're hitting the head of the octopus, which is very smart to do. Therefore, although I am in the opposition to our government, I am supportive. And most Israelis, I'd almost say all Israelis, left and right, are supportive of this strike.
Naftali, you make the point that you're going at this alone. Talk to us a little bit about how long you can sustain that strategy, how long Israel can sustain that strategy. You've been a former defense minister as well. When it comes to targeting the nuclear program, is this a reasonable long-term approach?
I think it's proven to be the only approach, because all the other ways have failed. We tried the diplomatic route for years and years, and Iran had just made the progress. As I said, they've accumulated enough highly enriched uranium for 10 nuclear warheads. They've begun producing the bombs themselves as we got the latest information, and that intelligence was the intelligence that brought us to take this action. We're doing the job for the world, because, if Israel were around during 20, 30 years ago when North Korea went nuclear, maybe that would not have happened. But right now, words will not stop Iran. That's very clear. Only action, and this is really the last resort. I'll also remind you that Iran has been trying to foment terror all across the world. They tried to kill President Trump. This is what Iran is about, and now we're stopping it.
Naftali, speaking of the U.S., U.S. President Donald Trump had urged a diplomatic solution between these tensions. Are you worried in any way that this could create a rift between Israel and the U.S. administration?
I think quite the contrary. I think President Trump has been very clear, as all presidents before him, that Iran should not acquire nuclear weapons. And I think when all is said and done, President Trump will appreciate Israel's courage and action and initiative in taking out this terrible, terrible regime in the nuclear program, which was risking everyone.
And then I want to ask about maybe more domestic politics in Israel. Some of Netanyahu's critics may have suggested that this warmongering conduct with Iran is motivated in least by political survival on his own part. Do you have any read on that?
How can this be called warmongering when it was Iran who shot twice in two different attacks, hundreds of rockets at Israel and missiles at Israel? We only responded. So this is not warmongering. As I said, I'm in opposition of Mr. Netanyahu, but on this, there's no left and right. We all support this action because it's going to save millions of lives and save the Middle East from a horrible nuclear nightmare.
Naftali Bennett, let's just talk a little bit more about what you've just been referencing. You say that Iran tried to kill President Trump. That is unproven, I think, at this point, unless you've seen intelligence that we haven't. We question whether or not there is going to be this support coming from Washington, D.C. At what point do you see the relationship between the Israelis and the Americans starting maybe not to be as favorable to Israel as it once was. You must have watched the recent trip that President Trump took to the Gulf states, and have seen the very close relationship that exists between those Gulf states and the United States now. Are you certain? Are you absolutely certain that there is this support coming from Washington, D.C. that was once there? Are you certain that it will continue?
Of course, I can't know everything that'll happen in the future. What I can tell you is that the leaders that President Trump met, they will feel huge relief. The leaders of the moderate Arab countries in the Middle East, their huge threat was Iran. Iran was not threatening only Israel. Iran attacked the Saudis, Aramco, I'll remind you. It attacked the Emirates. It's been sort of an anti-Midas touch. Everything it touched in the Middle East went down, Lebanon, Iraq, Syria. And if we can remove this threat from the neck of the Middle East, everyone will be thankful. I don't know about tomorrow, but certainly years from now, yes. Just like we took out the nuclear program in 1981 of Iraq, we were condemned by the whole world, and later on, everyone thanked Israel for taking care of that.
What is clear at the moment is that Iran cannot control its airspace. Israel controls Iranian airspace at the moment and has the ability to strike with some degree of impunity. It is clear that Israel controls its own airspace, so there is an asymmetry in terms of the response that we can see delivered in terms of the air attacks that Iran can launch against Israel. What kind of a response do you think Israel should now be expecting, therefore? If Iran has to choose other routes, do you think that will be something that we need to watch out for next? Do you think that's something that the Gulf states will need to watch out for next? We're trying to see what happens with the Straits of Hormuz. We're trying to understand how secure the rest of the Gulf is, how the rest of the world is. Is there not a danger, though, that you have, by the Israeli action has brought the rest of the world into this conflict because of the uncertainty that exists in terms of the response that Iran may deliver, because of the asymmetry that exists between these two nations in terms of their ability to strike each other?
Well,
गाइस क्रूड ऑयल में हाफ प्रॉफिट बुक कर लेना, और टारगेट और बढ़ा दिया है, 200 पॉइंट का टारगेट रख दिया है, 100 पॉइंट के दो टारगेट हैं, ये ब्लू कलर की लाइन पे पहला टारगेट, इसके ऊपर सस्टेन करता है तो दिस इज सेकंड टारगेट जो लगाया हुआ है, 200 पॉइंट का टारगेट है, बड़ा है तो हाफ प्रॉफिट बुक कर लो, 100 पॉइंट मिल चुके हैं, जाता है इस ब्लू कलर की लाइन के ऊपर तो एक सेकंड टारगेट के लिए जरूर जाना, नहीं जाता है तो फिर ट्रेलिंग एसएल जाए तो कॉस्ट टू कॉस्ट निकल जाना, ठीक है। तो बुक द हाफ प्रॉफिट इन क्रूड ऑयल एंड ट्रेल फॉर द सेकंड टारगेट विद कॉस्ट टू कॉस्ट एसएल। हाफ प्रॉफिट जरूर बुक कर लें, सेकंड टारगेट के लिए जा रहे हो, 200 पॉइंट का दूसरा टारगेट है, बाकी नेचुरल गैस में भी निकल जाना, टारगेट उसका हो चुका है ऑलमोस्ट, लेट्स सी कोई नया ट्रेड बनता है वहाँ पर फिर से।
This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
Israel launches airstrikes on Iran's nuclear and ballistic missile programs and warns more action to come. Tehran retaliates, sending drones towards Israel. Oil surges the most in more than 3 years. Stocks slide, haven assets rise on fears of a wider war. Plus, investigators search for clues in the wreckage of the Air India flight that crashed after takeoff, killing all but one of the 242 people aboard. So first thing is first, let's check on the markets. But of course, it's geopolitics and politics dominating the news cycle. Now, Iran has retaliated with drones after the Israeli airstrike. Look, if you look at how this is playing out on the markets, crude oil actually surged some 13% after we found out of the attacks. And it's now paired, of course, some of those gains getting some 5.6%, Brent at 73.34. Stocks, other assets actually falling. Safe havens like government bonds and golds are rising. You can see the U.S. 10-year at 4.3514. We do have to look at gold. Gold, I think, will play a crucial kind of safe haven in all of this because of how much it's gone up. Of course, the attack has caused a shift towards safer currencies, Zala rebounding from a 3-year low, and that's also affected other markets, including stocks, bonds, and commodities. We'll have a full roundup also of the European markets map for the conversations that matter and the insights you need. Let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, Iran says the head of its armed forces and 6 of its nuclear scientists have been killed in a wave of Israeli airstrikes. Israel says 200 warplanes hit 100 targets in Iran with the aim of preventing it from being able to make a nuclear weapon. Israel says Iran has responded by launching more than 100 drones. The Israeli Prime Minister says its attacks on Iran will continue.
Moments ago, Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
Well, to talk about the markets, but also the geopolitical strategy behind it, we're joined by Hugh Gimber, global market strategist at JP Morgan Asset Management, plus Ross Matheson, our EMEA news director, and Dal Williams from our Jerusalem bureau. So thank you all for joining us. Then let's start off with you. I mean, you're here by chance, and this is happening at a time where actually we thought we'd heard from President Trump that no attack was imminent.
Well, there was some nuance in those statements. President Trump is not always consistent, and we may have actually seen a smokescreen being sent up by the Americans, by the Israelis, a sense that something might be imminent, might not be imminent. Keep in mind that we've been discussing a potential Israeli strike on Iran's nuclear facilities like this going back almost 20 years. So it appears that those threats were sincere. They've now been carried out, but it's also quite possible that the Iranians were lulled their defenses were dropped by the idea that there was ongoing diplomacy and that the Americans might have blocked the Israelis on this path.
Ross, why now? Was it an imminent danger? Was it a danger that actually Israel just thought that they could handle, or did they seize an opportunity?
Well, it seems to be a bit of everything, really. I mean, to Dan's point, obviously they were coordinating with the US because there were another round of US-Iran talks due to start on Sunday in Oman, with a very big question mark, obviously, over those continuing. But the question is, why now? Israel obviously made a decision. You can see that from the comments from Benjamin Netanyahu, that he felt that Israel had to act at this point. Perhaps they were concerned about the trajectory of those talks. The US was saying they didn't really seem to be going anywhere. And the US has warned also, if those talks fell apart, that there was a cause for action against Iran to try and slow its efforts towards a nuclear weapon. And so obviously there was an understanding about that. Is the US potentially happy about this action? Not necessarily. Obviously they knew about it. They didn't block it. But there isn't a massive amount of public endorsement for it, because Donald Trump, above all, does not want a kick-up in instability in the region. He doesn't want a full-throated war in the region. And so those conversations behind the scenes would probably have been very interesting, to say the least.
Well, I mean, actually, it was one of his campaign promises, right, that the U.S. would stop having adventures in the Middle East.
Well, that's right. And he was just in the Middle East only a few weeks ago, where he was talking really heavily about the prospects for growth in the region. So he's talking about economic ties, trade, investment, business opportunities, including for US companies. And to have that develop, you really need a sense of political stability. You don't need a war that's escalating directly between Iran and Israel. He wants normalizations of ties. He wants trade relationships between countries. And again, he wants US business to thrive in the region. And that's not an environment that's possible right now. So this goes against, again, what Donald Trump has been pushing for: ceasefire in Gaza and some kind of understanding, at least, about the conflict between Iran and Israel.
Hugh, so risk assets are falling. Safe havens like government bonds and gold, of course, are rising. But it's really mainly being played out through crude oil, because there's a concern that some facilities will be hit.
Yeah, and I think the oil move is the key here, because for me, when you look at a geopolitical issue, it matters for markets when it moves economics. And you're in an environment where we've already seen probably all of the good news now on US inflation behind us. We were already anticipating that inflation was going to be picking up through the second half of the year. A big spike in oil prices obviously makes that more complicated. And you look at this through the lens of monetary policy, at a time where inflation is low and where consumption is fragile, an oil shock is just a consumption hit. You can ease policy against that backdrop. But I think the reason bond yields aren't falling further this morning is because investors are rightly looking at this and saying, actually, the key implication here is inflation, and therefore it's going to be difficult for the Fed to ease, and you're just going to have to let this pass through slow consumption, but without rates being able to come down.
Yeah, but also, I guess, Hugh, there's spare capacity, right, from OPEC Plus members. At the end of the day, unless something happens in Saudi Arabia, and last stand the risk of escalation in this, it seems that they could still put extra barrels on the market quite quickly.
That's right. And let's be clear, Iran is a relatively small player in global oil markets. It's the Strait of Hormuz that's critical. I think that's going to be the key issue over the coming days. Do you continue to see oil leaving the Middle Eastern states broadly and entering the global market? Because provided that happens, OPEC has spare capacity and you can manage this type of oil shock. And we should be clear, it is not in anyone's interest to close the Strait of Hormuz. Think about where Iranian oil goes, primarily China as the overwhelming buyer. So if they were to decide that actually they wanted to cause more of a blockage in the system here, you would antagonize one of your closest remaining allies.
Dan, we're just getting some breaking news. So the UN nuclear watchdog is saying they're deeply concerned over the Israeli strike. The IAEA calls on Israel and Iran to exercise maximum restraint. So for the moment, basically, none of the nuclear, I mean, they were very close to the nuclear, not reactors, but nuclear capabilities of Iran, but nothing's been touched.
Well, it would also seem it's worth the uranium nuclear program, whether it's civilian or military, is based on uranium enrichment. That's a different track.
Right.
To a plutonium reactor, the risk of irradiation of leaks is far greater. In the case of a reactor, that's not quite relevant here. I suspect what they're most worried about is the breach of the idea of diplomatic regulations and norms around nuclear policy, around discussing potential nuclear breaches, and also what Iran's been hinting at, that it could use this as a pretext or a reason, depending who you ask, to officially break out and pursue an open military nuclear program, arguing that it's necessary for its self-defense.
Yeah, so as far as we know, again, explosions were heard across Tehran and Natanz, and that's, one of Iran's key nuclear sites. What happens from now, Dan? I mean, I guess the risk of escalation, and as you say, of retaliation and full-out war in the Middle East is pretty significant.
Well, I think there are a few factors here. You alluded to the initial retaliation. It appears to be limited right now to a swarm of drones that would have been largely intercepted by Israel away from Israel's borders. The big question is, did Israel have help in those interceptions by allies, which would signal they're ready to pitch in, if not offensively, then defensively? Also, if Iran does a huge while Israelis aren't necessarily daily thinking about Iran, there is a consensus that Israel was created in part as a result or as a safeguard against another Holocaust. The Iranians are very open in wanting to see Israel destroyed. A nuclear bomb in Iranian hands would very much change the equation. I don't think Israelis, with all respect to Trump, would take or heed an American request to stand down.
Yeah, so what happens, I mean, from the U.S. side, Ross, how do they handle this?
Well, that's going to be the key question. I mean, as Dan's saying, this is really important for Israel, both for Benjamin Netanyahu, probably personally, because he has been under pressure again, and this may help him at home. But you're seeing the reaction, like across Israel, there's probably going to be widespread support for these strikes. Probably going to be widespread support for these. In Iran's court, as Dan was saying, it's really the calibration of the response from Iran. We've seen in some of the previous tit-for-tats that Iran's actually taken quite a while to work out how to respond. I mean, this drone swarm today was fairly small fry. If they're going to do a broader retaliation, that they're taking their time. Like even this kind of higher level attack on their nuclear sites, on other sites, and taking out some of the senior military leadership, that's a pickup for Iran, but they may pause a bit to work out how to retaliate, because even Iran knows that it can be quite self-destructive to do something very big against Israel. I mean, Iran's proxies have been weakened in the region, Iran itself arguably isolated, and so it's got to really work out here the calibration of its response. So really it's going to be key to see what they do, because that will inform what happens after that with other countries again.
Hugh, I mean, when you look at, gold is probably the safe haven par excellence, but again, what is the market really worried about? Because it's not only about oil, it's this general risk-off mood.
Yeah, and I mean, let's put this in the context of the trade discussions as well that have been dominating all the way through this year. We're only 20-odd days away from a July the 9th deadline that now looks to be pushing right and right and right, because this has to absorb all political energy over the next days, weeks, however long this lasts. And that means more uncertainty. That means you're still unclear about where the economy is headed. You slot companies and consumers even further into the wait-and-see mode that they've already found themselves. That's a key drag on growth in the second half of the year. And so I think it's understandable. If you're unsure about buying treasuries because you worry about the inflationary impacts, gold is a key beneficiary. And we also know the dollar is coming under pressure this year for other reasons. So it's not seeing the same kind of safe haven demand that you typically expect in this environment. Gold is the first place people are looking.
I know it's impossible to say, but will it be short-lived? I mean, geopolitical, escalations have largely been overlooked by the market, unless it's something concrete, because they just don't know how to trade it.
Yeah, I mean, the question you can kind of answer with another question, frankly, which is where does the escalation go? I think the key issue we need to properly understand here, what is the outlook for global oil supply over the next 6, 12, 18 months? Because if this escalation continues between Iran and Israel, but you're not significantly impacting the global oil market, then yes, the market reaction can be short-lived. But if we're looking at $80, $90, $100 a barrel on Brent for 6, 12 months, that is a global market issue, because that is a global economic issue. And I come back to that point. Geopolitics matters for markets when it changes the economic picture.
Dan, who have we heard from? I think we probably still have to hear from Saudi Arabia, Jordania. I mean, are there any key, voices in the Middle East that we need to really watch out for?
Well, we've heard from Jordan denying, saying that its airspace would not be used and has not been used to assist Israel. That appears hard to reconcile with the non-arrival of many of these drones that would have been overflying Jordan on the way to Israel. It appears there was some action in Jordanian skies to stop them, as well as Syrian skies. I think there will be a lip service given to neutrality staying out of this. I think they'll also be looking at the results. I don't think there'll be any tears shed if this ends up taking the Iranian nuclear program out of the picture for a number of months or years. Though again, if Iranian escalation, I think the US daylight that you mentioned is aimed also at shielding US assets against Iranian retaliation. If there is Iranian retaliation beyond directly at Israel, the calculations may be different, the statements may be more sincere.
All right, thank you so much, all of you, of course, for joining us to get us started on this big news day. Hugh Gimber from JP Morgan Asset Management, Russell Matheson, and Dan Williams. Coming up, continuing coverage of Israel's attacks on Iran and Tehran's response. We'll ask what this means for global geopolitics amid fears of a wider war. That's next, and this is Bloomberg.
Brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything.
Asia is a continent of contrast. The region is a nexus of rich cultural traditions and a vibrant hub of trailblazing innovation and modernity. How will it push the limits of technology even further?
Going to space should become as easy as, taking a flight.
If NASA is designing a lander, their approach is they're designing a Formula One car. So we take, say, a Jeep approach.
Minso, give us a sense of how you translate Korean architecture for the rest of the world.
We call this madang. In general terms, it's where we can be ourselves, where we belong.
There is an old saying in Korea that says, "거미 불루, 화이 불치." It means simple but not humble. So it has a tremendous impact on Korean architecture.
People tend to think the robot AI taking the job from them. We want to use the robot as a basic asset, meaning people have an income through the robot.
From space tech in India to robotics in Japan, Asia is driving the future, reshaping industries, societies, and the way we live. Join me as I take you through the bold innovations. Discover Asia's next-gen technologies on Momentum. Let's recap this morning's developing story out of the Middle East. And Iran says the head of its armed forces and 6 of its nuclear scientists have been killed in a wave of Israeli airstrikes. Israel says 200 warplanes hit 100 targets in Iran with the aim of preventing it from being able to make a nuclear weapon. Israel says Iran has responded by launching more than 100 drones, while oil has surged while European stocks and U.S. futures are lower. Now, for more on what this means for markets, we're joined by Phoenix Callan, Global Head of Emerging Markets Research at Societe Generale. Also with us, Julian Barnes-Dassey, Middle East and North Africa Program Director at the European Council on Foreign Relations. So thank you both for joining us. Julian, maybe let's start off with you to see what the next steps will be. When will we have a clear idea of how much further this escalates?
Sure. Good morning. Well, I think the real question is obviously the nature of the Iranian response. Iran has promised a response. We've seen drone attacks, but frankly, I think that's quite insignificant. The real question is, will Iran launch a barrage of ballistic missile attacks on Israel? We saw that last October. A number of missiles got through Israeli defense systems. And I think if Iran is serious about a response to these attacks, it will come in that area, in the area of ballistic missiles. Drones were symbolic, but they were always going to be meaningless. Ballistic missiles, particularly if they were en masse and moved quickly, I think could cause serious damage for Israel and would absolutely escalate the situation further.
When do we do the? I mean, if you're in Iran, sitting in Iran right now, what would you be thinking as, again, the Ayatollah, they're saying if this gets escalated, they don't really have support from that many people in the region.
Iran is in an incredibly weak position here. Israel has decimated its military leadership and capabilities. Iran has lost all its regional deterrence capabilities. But Iran now feels that if it doesn't respond, it will be even weaker, opening the door to further attacks and perhaps even a regime change effort. But if it does respond, you're likely to see further attacks and escalation from the Israeli side as well. So I think Iran is to a certain extent cornered here. They feel they have no response but to respond. I think the question is, can they do that in a fashion that is calibrated, that tries to contain the situation? Or do they feel at this stage that all bets are off and that unless they go fast and hard, that actually Israel will come for regime change next?
Yeah, and Phoenix, this is definitely playing out on the markets, and this is mainly through the oil market because it's much more tangible and immediate concern. But what happens to the Strait of Hormuz?
Yeah, 20% of global oil flows go through there. And we've never actually seen a disruption for any extended period of time in that strait. If we do see disruption for even a week, that can lead to $10 per barrel higher in oil prices. So it's the focus of the markets at this point. I mean,
do they look through it in a couple of days or weeks, or does it really depend on what happens on the ground?
So I think it's really about waiting to see what is Iran's response to this, how moderate or how high it might be, and what kind of tenor it takes in terms of escalating this fight further. So I think in that interim of time, we will see choppy prices, lots of volatility in the oil markets, but it won't price to kind of a significant extent until we see what kind of reaction comes out of Iran.
I mean, Julian, we're really, trying to wait and see what the U.S. does next. I mean, the U.S. had said that they didn't want to get involved in the Middle East too much. Does this just drop President Trump fully back in?
Well, look, I think it's incredibly hard to imagine that this happened without some form of American acquiescence or a green light. I think it's clear that Trump does not want to get pulled back into a regional war. But I think at the same time, things are obviously spiraling out of control now, and it's incredibly hard to predict what happens next. It may well be that the Iranians initially try to target Israel in a more direct and limited fashion, but clearly if that situation continues to escalate, then U.S. backing for Israel is likely to come into play. The Iranians could respond by targeting U.S. regional bases, and of course the wider this goes in terms of a regional conflict, the more likelihood that Iran then looks to target oil outflows, energy supplies to impose a wider hit on the global economy. I mean, I think in the first instance, Iran is going to try and safeguard its improving relations with the GCC Arab states. It isn't going to go after them. But if we see this wider escalation, if we see this turn into a broader regional war, then Iran will see the oil card as something that it can play.
But, Julian, why now? So it's been, pretty clear that there were escalating tensions between Donald Trump and Benjamin Netanyahu. But it seems that, I don't know whether Israel took the chance because they thought it was now or never, or whether they just saw a very weakened Iran or a weakened U.S.
Well, look, I think that Netanyahu has clearly been worried by the ongoing direct talks between Iran and the U.S. about the nuclear track. The U.S. and Iran were meant to meet for 6 rounds of talks in Oman this weekend. That has now been collapsed because of the Israeli strikes, and I think that was clearly an intent. Israel wanted to torpedo those negotiations because they do not believe in a negotiated track. I think there may be a certain extent to which the Americans and the Trump administration were willing to allow this to happen position to try and put more leverage on the Iranians, to put more pressure on the Iranians to come to the negotiating table, to make the kind of compromises that Tehran has not been willing to make thus far. But I think there's a big danger that really misreads Iranian strategic calculations. I find it very hard to imagine that the Iranian response to military strikes will be to make more concessions. And if anything, this will accelerate their desire to weaponize their nuclear program, because they will see that as the only safeguard to protecting themselves. And so then you have a race against time. Can the Israelis move militarily fast and deep enough to prevent that, or do we see the Iranians making swift progress with a nuclear program as their only means of trying to prevent ongoing military attacks within their soil?
But if that happens, when we talk about escalation, what kind of escalation are we talking about? Full-blown war in the Middle East?
I think in the first instance you have a Iranian potentially ballistic missile response on Israel to think about. Israel has itself said that this is the beginning of a multi-day military campaign on Iran. Let's see what happens over the coming hours and days. Israel could continue to strike. If Iran strikes with ballistic missiles against Israel, you can expect a much more deadly, widespread, and possibly involving direct U.S. involvement military campaign against Iran that could potentially move towards regime change ambitions. You could see Iranian attacks on U.S. military bases across the region, oil supplies, and so on and so forth. So this could spiral and escalate very quickly, unless the Iranians make a decision to suck this up, that they decide that this is not in their interest to engage in a wider campaign and only pursue a limited symbolic response.
And Phoenix, if you're head of emerging markets will probably suffer more than some of the others.
Yes, I think that in the historical context, it won't suffer as much as it would have in the past in terms of kind of the external vulnerabilities being reduced, the inflation profiles being much more contained now, and central banks having a much tighter grip on what they can do in terms of policy response. I think, yes, for some of the countries that are exposed to higher oil prices, they will get hurt for sure. And then in terms of the risk-off sentiment, that will have an impact and feed through to especially the more sensitive currencies like Rand, like Max, like Hungary, like Korea.
I mean, gold is going up, like the safe haven par excellence. How does that impact emerging markets?
Well, so that's going to be quite beneficial for some of the countries that do produce gold. So South African Rand, to some extent, gets a little bit of offset from there, as opposed to kind of its risk sensitiveness. And then I think in terms of like the broader diversification question as well, that tends to lead into more flows into gold, but also flows outside of the U.S., flows into euro, flows into kind of the more Eurocentric currencies as well.
Okay, thank you both for joining us. Phoenix Callender from Societe Generale and Julian Barnes-Dacey of the European Council on Foreign Relations. Coming up, we'll have plenty more, of course, on Israel, on Iran, on markets. I'm looking at gold. It's up. The key Iranian nuclear site seems to be showing no sign of breach. That's according to the IAEA. We'll have plenty more on that next. And this is Bloomberg.
Joe Walk is helping steer J&J into a new phase of its history, expanding the frontiers of healthcare by discovering drugs and advancing medical technology.
Developing digital robotic capabilities where it's not just the robot doing a surgical procedure. It's garnering information from that procedure for your specific demographic or the patient's demographic, and then informing the next procedure down the road. It's getting smarter. I would say it's starting to morph into personalized medicine, which we know will lead to the best outcomes.
Innovative medicine and medtech are run as separate business divisions, but in the culture of research at J&J, they interact.
If you look at some of the spaces that we're in today, specifically oncology, there is a lot of dialogue going back and forth. I think it's something that will position us extremely well as we talk about not only a continuum of care, but also a continuum of knowledge.
The convergence of technology and medicine is driving innovation in both sectors, with scientific and commercial possibilities just beginning to come into focus.
I'd like to actually see some partnerships down the road happen between healthcare companies and technology companies. I think we'd get to better outcomes faster if we did that. Right now, technology companies don't have the healthcare knowledge. Healthcare companies probably don't have the breadth of knowledge they need for technology. If we can figure that out together with great minds from both sides, I think that leads to a much better place.
Bloomberg launches our inaugural 25 African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Israel launches airstrikes on Iran's nuclear and ballistic missile programs and warns more action will come. Tehran retaliates, sending drones towards Israel. Oil surges the most in more than 3 years. Stocks slide and haven assets rise on fears of a wider war. Plus, investigators search for clues in the wreckage of the Air India flight that crashed after takeoff, killing all but one of the 242 people aboard. So let's return to our top story. And Iran says the head of its armed forces and 6 of its nuclear scientists have been killed in a wave of Israeli airstrikes. Well, Israel says 200 warplanes hit 100 targets in Iran with the aim of preventing it from being able to make a nuclear weapon. Israel says Iran has responded by launching more than 100 drones. Well, oil spiking on the news of the attacks, at some point surging as much as 13% before pairing gains. Let's get the details with our Will Kennedy, who oversees all of our commodities coverage. So first of all, Will, what is the oil market actually monitoring and watching out for now?
It's all about how it escalates from here. Clearly, these attacks have not taken any oil out of the market, but there are huge risks ahead depending on how Iran responds. Clearly, people focus about the fact that Iran has a lot of influence over the Strait of Hormuz. It's now a waterway at the mouth of the Gulf of Persian Gulf, out of which a third of global oil supplies come, and whether they will respond or escalate by trying to attack or interfere with shipping coming through Hormuz is going to be a key question for the market from here on in. Also, whether there'll be more sanctions on Iranian oil. They've increased production a lot in recent years, and they're bringing more than 1 million barrels a day to the market. Will that oil need to be replaced? So there's a lot for traders to think about.
But, well, how should we, again, digest some of these developments in light of the bigger situation on the oil market?
Yep. I mean, the bigger situation is that obviously OPEC has been putting a lot of oil back into the market, and prices were down over the year because of that. But now we're well above $70 a barrel, which shows the nervousness in the market. And actually, the market is fairly well balanced right now, that there has been a market for that extra OPEC crude. I think one thing that may cap gains from here is that OPEC still has a lot of oil that it can bring back into the market if it needs to. We'd already reported that Saudi Arabia was thinking about further increases at its next meeting. And, it has a couple more million barrels of spare capacity. The UAE has a lot of spare capacity. So in situations where this escalates, there's a lot that the UAE and Saudi Arabia can do to keep the market well supplied and keep a lid on prices if they can get their oil out of the Persian Gulf.
Yes, so again, some people are saying, look, we could go to $120, right? As you were saying, if there are disruptions of shipping, which we saw in that graphic through the Strait of Hormuz. But what happens if we have just a protracted Middle Eastern conflict? That nothing escalates, but it also doesn't de-escalate.
That's a really good question. The scenario where we've got a lot of conflict, but we're still getting oil out, I think it will have an impact on prices. Clearly, the shipping market matters here. even if the strait is open, if shipping is being attacked, if tanker owners are reluctant to go into the Persian Gulf, if they're charging more money, that can all have an impact on oil prices. As I say, one key risk is that after these events that sanctions snap back, because we had this outside the Israeli attack. Obviously, the IAEA said that the Iranians are in breach of their obligations under the nuclear accord, so sanctions may snap back. So there are other things that may take oil out of the market at the margin and make it more difficult to ship oil that may support prices outside the sort of doomsday scenario, the $100 plus scenario that people are mapping out for a full closure of the Gulf of Strait of Hormuz.
Well, what's happening to the other commodities? Again, linked to oil, but there's less of an immediate effect.
There are two other things I would mention. Gold, obviously, is up today. It's had a very good run this year, as we know. It's up today, back close to a record. And that's, of course, because in times of uncertainty and upheaval, people turn to gold as a haven. And then finally, I think people should watch gas markets, as well as a lot of oil coming out of the Persian Gulf. Qatar is a huge gas supplier through LNG tankers. Yeah. And in a scenario where we did see shipping disrupted, that could have a big impact on global gas markets at a time where summer demand is quite high.
Yeah, I mean, oil options, I mean, then there's the quirks of the markets, right, that you were kind of telling us. Are the next 24 or 48 hours crucial to understand actually the escalation, and could we see a big pop either way?
Yeah, I mean, I think that if you're a trader, you want to position yourself going into the weekend so that, you know, Monday morning doesn't look ugly. Yeah. So, I mean, I think we have seen people buy protection against worst-case scenarios by buying out-of-the-money call options just to give them some protection in case this really does spiral out of control.
Well, thank you so much for a terrific briefing, of course, on the oil markets and everything that we've seen over the last 12 hours. He is Will Kennedy, and he's in charge of all of our oil coverage. Now, let's get the views of Richard Dalton, who was the UK's ambassador to Iran between 2002 and 2006. Ambassador, thank you for joining us. When you look at what happened over the last 12 to 14 hours, how do you think Iran will retaliate?
They will clearly use their missiles and drone force initially against Israel. If there is any suspicion that the United States is aiding and abetting Israeli actions against Iran in the next few days, then I would expect Iran to retaliate against American bases as well.
But, Ambassador, how aggressive? Again, they'll retaliate in a very aggressive manner. I know there was fighting talk and saying, look at what happened to us. This is why we need nuclear on our side. Or do you think they'll have to temper it because Iran is weakened and they don't seem to have many allies in the region?
Iran has been weakened, and I think this is one reason why Netanyahu has taken this opportunity to launch his long-gestated, wished-for plan to attack Iran. Another reason, of course, is that in the United States there's a weak president distracted by internal affairs, 100% committed ideologically to Israel. But, of course, Iranian retaliation will go beyond the military sphere. Like other states, they'll use all means of power that they are capable of deploying. And I would expect them to consider withdrawing from the Nuclear Non-Proliferation Treaty. This has been suggested by Iranian parliamentarians on many occasions. And also, if pushed further, they might well intervene against international oil trade. So what Israel has done in launching an illegal act of aggression against Iran without the necessary justification for a preemptive attack, we are starting a process which at the moment is out of control.
And Ambassador, I mean, this is also 2 days before the next round of talks between Iran and the U.S. It seems like it was in disregard of U.S. policy, or certainly what Donald Trump was openly saying he wanted. Does the U.S. now get fully sucked into this conflict?
It might do. It depends on the nature of Israel's attacks on Iran and how serious they are. And it depends on the choices that Iran makes about retaliation. It's not the first time that Israel has used military action to preempt diplomacy. You would recall that it was at Israeli urging that President Trump withdrew the United States and destroyed the program of action negotiated and agreed in 2015 and 2016, which severely limited and monitored Iran's nuclear program. Indeed, it's President Trump's actions in his first term that have launched us into this unpredictable cycle of attack and retaliation. The international community has also got a large part to play in this because of its excessive indulgence of Israeli aggressive actions, however savage their actions in Gaza have been, for example, and by granting Israel immunity from the normal rules of international law and international humanitarian law. Moreover, the inhibition against aggression between states was gravely weakened by the United States and the United Kingdom in 2003 with the invasion of Iraq. So we're seeing a very dark picture.
We are seeing a dark picture. What are the chances, given you were British ambassador to Iran, what are the options for Iran right now? So if you look at some of the choke points for oil and container trade, we're talking about, the Strait of Hormuz. There's also the Red Sea. How much is that at risk? Because shipping companies, have been advised to take extra precautions. But is this one way that Iran could retaliate and inflict also more global pain?
Undoubtedly. But as I said, it depends on the degree of pain which they are experiencing and their own estimates, which of course no one is privy to, about their capacity to sustain a longer war and a longer war in which other parties like the United States might become involved. But their position has always been that if they are denied the ability to export their oil through the Straits of Hormuz, then no one else will be allowed to export oil through the Straits of Hormuz. So I expect them to show some restraint at the outset, but if this conflict is prolonged, then the risks of disruption to the international oil trade and of a further more serious spike in prices will remain.
Of course, a reminder that the Secretary of State, Marco Rubio, said the U.S. is not involved in the strikes against Iran. But, Ambassador, who is there left to actually mediate this? I don't know whether China needs to play a role. I don't know whether the EU needs to get involved. But is there someone that you would look to?
The United States has sidelined its previous partners in this international negotiation because it didn't like their policies. And, moreover, there's a war in Europe involving Russia, and the United States is at loggerheads with China. But this was a strategic mistake because to obtain the kind of limitations through diplomacy on which the United States and Israel wish to rely for the security of the region, it's necessary to bring all states with influence in Tehran to the table. Now, the European countries have zero influence. The Chinese and Russians have substantial influence. So, yes, if President Trump should wish to turn to a renewed effort to diplomacy, he should bring in those countries who have a strategic relationship with Tehran, chiefly Russia and China.
Ambassador, if you were the U.S. right now, right, the Trump administration, who would you call? Would you call, Netanyahu? Would you try and reach someone else to make sure that this doesn't escalate and start a war that from the start, even in his campaign, Donald Trump had said he did not want to get involved in?
Well, the United States clearly has almost no influence in Tel Aviv, given that it is unwilling to use the power that it does have over Israel's military and Israel's economy. We are seeing now the long
क्रूड ऑयल का देखो टारगेट हो गया है। क्रूड ऑयल में यहाँ पर जो लोग हैं बाइंग में दूसरा टारगेट लेके निकल सकते हैं। ठीक है, 100 पॉइंट के दो टारगेट थे, पहला टारगेट तो हो गया था, दूसरा टारगेट भी हो गया। सो एग्जिट बायर्स यहाँ पर एग्जिट कर सकते हैं। जो लोग बाइंग में है दे कैन एग्जिट फ्रॉम द क्रूड ऑयल। लेट्स सी यहाँ पर अगर एक और ट्रेड अगर बनता है तो ठीक है, बायर निकल जाना क्रूड से, बायर का हो गया टारगेट डन। डेटा 7:30 पर है, अभी नहीं है। आज डेटा की बात करें तो 7:30 पर एक डेटा है कंज्यूमर सेंटिमेंट और इन्फ्लेशन एक्सपेक्टेशन का। ये गोल्ड और सिल्वर को इम्पैक्ट कर सकता है थोड़ा बहुत। तो न्यूज़ इम्पैक्ट कर ही रही है इजराइल और ईरान के बीच जो कॉन्फ्लिक्ट चल रहा है मिडिल ईस्ट में।
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Tom Mackenzie.
And I'm Caroline Hepker.
Israel has launched waves of airstrikes against Iran's nuclear program and ballistic missile sites. The attacks are a significant escalation in the conflict between the two countries, with consequences for the wider Middle East. The operation also targeted Iran's nuclear scientists and generals, killing a number of high-ranking military officials in the country. Israel's Prime Minister Benjamin Netanyahu says the strikes will continue for as many days as it takes to remove what he described as this threat.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists working on the Iranian bomb. We also struck at the heart of Iran's ballistic missile program.
Israel's Netanyahu, speaking there as the country's defense minister, Israel Katz, said he's declaring a state of emergency after what he described as a preemptive strike against Iran. The Israeli military says Iran has launched over 100 drones towards Israel and their air defense systems are responding.
Explosions were heard across Tehran and in the city of Natanz, home to one of the country's nuclear sites, according to videos and local media. Meanwhile, Iranian state television has reported that the head of the Islamic Revolutionary Guard Corps, Hossein Salami, was killed, as well as the chief of staff of the nation's armed forces. Iranian TV is also reporting that 50 people have been injured in the strikes. In a televised address, Iran's armed forces spokesperson said that Israel and the US will receive a, quote, harsh blow in response. US Secretary of State Marco Rubio said that the US was not involved and warned that Iran should not target US interests or personnel.
The International Atomic Energy Agency says that so far there has not been an observable increase in radiation levels at Iran's deep underground Natanz nuclear site. Today's strikes come after repeatedly insisting from Tehran that its atomic activities are for peaceful, civilian purposes only. That has been the claim from Tehran, but it has significantly expanded uranium enrichment in recent years. Professor Matthew Bunn, American nuclear and energy policy analyst at Harvard, believes the attack will make the potential for retaliation more of a reality.
I think this will make Iran even more determined that it needs to move directly toward producing nuclear weapons. My guess is that it will try to rebuild its program at secret locations.
Professor Matthew Bunn speaking there as Nicole Grajewski, a fellow in the nuclear policy program at the Carnegie Endowment for International Peace, who specialises in the region, said on social media, quote, "If you were to ask the worst case scenario, this would be close to it."
Now, in terms of the market reaction this morning, we've seen significant amounts of that. The Netanyahu government has ordered the strikes, though, in apparent defiance of the US president. Fox News says that President Trump was made aware of the strikes before Israel launched them, citing a phone interview between the president and one of their anchors. That comes after Donald Trump had said earlier yesterday that he didn't want Israel to attack, adding that his administration remained committed to a diplomatic resolution to the Iran nuclear issue. The former NATO Supreme Allied Commander in Europe, Wesley Clark, says that Israel has forced America's hand.
President Trump does not want a war, he said that, but also he does not want Iran to have nuclear weapons. So I think Prime Minister Netanyahu has taken the decision away from President Trump at this point.
Retired General Wesley Clark speaking to Bloomberg earlier there. These strikes by Israel on Iran come after the US had earlier ordered some staff to leave its embassy in Baghdad and authorised families of military service members to move out of the Middle East. Officials at the time had said that the decision was due to heightened security risks after Iran threatened to strike American bases if it was attacked over its nuclear programme. Meanwhile, the UK Prime Minister Keir Starmer has released a statement in which he urged restraint and said that the UK is engaging partners to de-escalate.
Well, at one point, oil had surged as much as 13% on the news of these strikes. Brent is now up 4.4%, a similar picture for WTI at $71 a barrel, $72 a barrel on Brent. Of course, those strikes raising fears of a wider war in the Middle East, as we've been discussing. Brent topped $78 a barrel in the biggest intraday gain since March 2022. Earlier in the morning, Founder Insights founder Verdana Harry says markets are expecting a retaliation.
The big question for oil would be how and when Iran retaliates. On the second part, I would imagine they would want to keep an element of surprise, so probably not in the next few hours or even days. So this could drag on potentially, which means the risk premium that has crept into crude will also likely stay intact.
Harry adds that understanding the US's role in what comes next is crucial. Earlier this week, JP Morgan warned that prices of oil could reach $130 a barrel in a worst-case scenario in the Middle East.
In terms of the other market reaction, equities sold off this morning in Asia. The MSCI Asia Pacific Index was down by 1%. In the first few minutes of trading here in Europe, we are currently down 1% for European stocks. FTSE 100 shares down 0.6%. The Borsa Istanbul in Turkey, significant declines of 4.4% this morning. US stock futures are also lower. As for bond markets, 10-year US yields down 2 basis points at 4.34. Germany German yields at 246, also down a basis point. The euro is currently trading 0.3% weaker against the US dollar, although it remains above 115. The Bloomberg Dollar Spot Index is stronger 0.3%.
In other news, one of the two black boxes from the Air India plane crash in Ahmedabad has been recovered. According to the Hindustan Times, the rear recording device has been secured, but the second is yet to be found. 241 passengers on board the London-bound Boeing 787 Dreamliner died in the accident. A 40-year-old UK citizen is the sole survivor. Laura Savino, a former United Airlines captain, says the industry will be working to understand what went wrong.
We know that they were highly trained. Was there something mechanical? Was there some sort of a pilot oversight? Pilots are very keen on understanding when a crash happens to ensure that they themselves don't repeat those mistakes.
Former airline captain Laura Savino speaking there. Boeing CEO Kelly Ortberg, as well as the head of commercial aircraft, have cancelled their plans to attend the Paris Air Show, the industry's most important annual gathering, following the incident.
That's news when you want it. With Bloomberg News Now, I'm Caroline Hepker.
And I'm Tom Mackenzie. And this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
The entire auto sector is higher today.
And analysis on the companies making news on Wall Street.
Tesla's been a stock that's been in focus.
Shares have really been all over the map this morning.
Listen to the Stock Movers Report from Bloomberg.
Let's talk about some other decliners.
It's your short audio report on the day's winners and losers in the stock market.
Second biggest driver in terms of points for the S&P 500.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
popularity of our game. Every time we take our game to a new market, Brazil's a great example of it, the fans go crazy for it. They sold out the tickets in less than 90 minutes. People had a wonderful time. It was the talk of the town. And I think it will be the basis and the sort of the match that lights the excitement and the popularity of the game in that market, as well as what we're doing around the world. So we're very excited by it. It's just one element of that strategy. You need to have television. You need to have activity and participation in the sport, and flag football is a big part of that. So all of those factors, I think, are going to be what we think will be a very successful formula to be a global sport.
Do you ever envision having a team that's based overseas in Mexico City or in London?
Listen, we've talked an awful lot about it, and I think there are markets that could, without question, support an NFL franchise.
Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
It's 5 a.m. in New York City. Good morning on this Friday. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Israel launches airstrikes across Iran, targeting nuclear sites and killing senior military commanders. Iran vows reprisal and hits back with drones. Oil jumps on the geopolitical angst with its biggest intraday spike since March of 2022. And State Secretary Marco Rubio says the U.S. is not involved with the strikes in the Middle East. Iran says that Washington is responsible. It is still early, and maybe too early, to really understand how this is going to impact markets and indeed the world. But the response is happening, and it is clear. Concentrated in oil markets, at one point spiking up 13% for Brent crude. We're now higher by about 7%. And that move is notable because we already moved to a 2-month high yesterday on the warning that this attack might happen. Considering how large the move is in oil, we're not seeing as big of a reaction in risk markets. So let me take you to the equity market. We are certainly off. There's certainly de-risking going into the weekend. S&P down 1.2, NASDAQ down 1.5%. Cross asset, yes, you see those bid for havens, but is the fear of higher oil and inflation mean that there's a cap on just how much of a bid you can get into the bond market? We're looking at 10-year yields. They are lower only by 1 basis point. The dollar, by the way, not a huge bid. It actually first initially reacted with weakening. We are, though, looking at a euro that's weaker by about 0.5% versus the dollar. Gold, meanwhile, gets a bid, unsurprising, with that geopolitical angst up 1.1%. Now, we have a packed show for you this morning, a lot of coverage. We're going to be catching up with Nadia Martin-Wiggins of Svelin Capital. All right, let's get straight to our top story this morning. Iran launching waves of airstrikes against Iran's nuclear program and ballistic missile sites overnight. Iran says that its head of armed forces and 6 of its nuclear scientists have been killed. Again, Israel striking Iran in the major escalation. Israel says Iran has responded by launching more than 100 drones. The Israeli Prime Minister says its attack on Iran will continue.
Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
For more, we're joined by Paul Wallace, Bloomberg's managing editor for the economy and government in the Middle East and Africa. Paul, what do we know at this moment?
Right now, we are watching for what comes in the way of Iran's retaliation. That has begun already. It sent a wave of drones towards Israel. They take several hours to travel the distance. At least some of them have been intercepted over Jordanian territory. It's unclear at this stage if any have reached Israeli airspace and whether any of them have either been intercepted by Israel or have hit their targets. As you saw there from the clip with Prime Minister Benjamin Netanyahu, there will almost certainly be more to come from Israel. Israel is saying that this is not a one-off strike, that this is an operation that could take several days. While it's unclear exactly what Israel wants to do, it seems as if it wants to deal a hammer blow to Iran's nuclear program. And if that is the case, that will probably mean more strikes on those nuclear facilities around the country in the coming days.
In the meantime, Paul, as we've been speaking about, Iran has vowed retaliation. It's been, let's say, about 2 years in a simmering and at times boiling conflict in the Middle East. What capabilities for retaliation do Iran and its proxies have at this moment?
That's a key question, and in some of the strikes that Israel and Iran had between each other last year, it seems as if at least part of Iran's capabilities were taken out, but they certainly have some left. We're seeing that with the drones already. So it has drones that it can send all the way to Israel. It does also still have ballistic missiles, and that's a key thing. Those were fired on Israel in April and October last year. They didn't cause extensive damage by any means, but certainly they weren't all intercepted, and Israel's air defense systems did struggle to cope with the big wave of ballistic missiles that were sent. These ballistic missiles travel extremely quickly. They can get from Iran to Israel in barely half an hour. Some of them actually enter space. They're difficult and very expensive to intercept, and if they hit their target, they cause a lot of damage. So that's something Iran could do. It's also important to note that it's still Iran, for all that its proxy militant groups have taken a hammering since October the 7th. I'm talking about the likes of Hamas in Gaza and Hezbollah in Lebanon. Those proxy groups still exist. We've got the Houthis in Yemen that could still fire on Israel and perhaps hit Western assets in the Middle East with their missiles and drones. We've got Iran-backed militias in Iraq that could do damage to U.S. assets, potentially even Iraq. So there are options for Iran for all that it has been weakened militarily over the last 20 or so months.
All right, Paul, thank you very much for that comprehensive update. That's Paul Wallace. Now, Washington has also responded with Secretary of State Marco Rubio writing in a statement, quote, "We are not involved in strikes against Iran, and that Israel believes this attack is necessary for self-defense." Fox News reported that President Trump wasn't surprised by the attack in a phone call with the network. The president has signaled an attack was on the cards in the past couple of weeks, but he preferred trying to make a deal instead.
Did you warn Prime Minister Netanyahu against taking some sort of actions that could disrupt the talks there in a phone call last week?
Well, I'd like to be honest. Yes, I did. Next question, please. It's not a warning. I said I don't think it's appropriate.
Well, I'd love to avoid the conflict. We're fairly close to an agreement. I don't want them going in because I think I would blow it. Might help it, actually, but it also could blow it.
For more on the American response, we're joined now by Bloomberg's Kasia Klemensinska, who leads our breaking news team in D.C. Kasia, great to see you this morning. Let's just be clear here. U.S. and Iran nuclear negotiations, are they now over?
Good morning. Thank you for having me. Indeed, it looks like it will be another busy day and a busy weekend here in Washington, D.C. As you mentioned, U.S. Secretary of State Marco Rubio came out right away and said that the U.S. has not been involved in those attacks and warned Iran against attacking the U.S. interests. President Trump spoke to Fox News overnight, and it sounds like he was aware of those attacks. He hasn't posted on the Truth Social yet this morning, which is a little bit unusual. We have to yet to see what he will say. Previously, President Trump had signaled that he would prefer for those U.S.-Iran talks to continue. They have been scheduled for Sunday, but now, of course, it's not clear whether they will still happen.
It's not clear whether it will still happen. I mean, we heard from the president there, Kasia, that he had been saying he wanted a diplomatic response, and now, just as recently as Thursday, the U.S. requesting Israel not to attack Iran. So what position is the U.S. in here? How much influence does it have in how things unfold in this moment, Kasia?
Yes, that's a very good question. We know that President Trump and Benjamin Netanyahu have spoken regularly recently. President Trump definitely spoke to Benjamin Netanyahu on Monday. And also remember that on Wednesday, the U.S. urged some of its non-essential personnel from the region to leave, and also limited the movement of U.S. government employees in Israel. So there have definitely been warnings, and President Trump have mentioned to reporters just yesterday this risk, this possibility of a massive conflict. But again, it's very early here in Washington this morning, and we have yet to see what President Trump will say today.
I was going to say, plenty of time still left in the day. Kasia, thank you so much for that update. We'll catch up with you later in the hour with any breaking news. Kasia Klimanshinska there out of Washington, D.C. All right, now let's get you some other top stories that are trending on the terminal this morning. One person has survived the deadly Air India plane crash that killed 241 people on board. The 40-year-old UK citizen was seated in the first row of the economy class and managed to walk out through a broken door on his side of the plane. According to a Hindustan Times report, doctors said his injuries were not life-threatening. The Trump administration won a brief reprieve from a judge's order to pull back on its use of military troops in L.A. to deal with the protests over the president's immigration raids. Israel's attack on Iran. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
Today's CFOs are reshaping the C-suite. Bloomberg's chief future officer shines a spotlight on these dynamic leaders. CFO Pascal Desroches has played a key role in restructuring AT&T, reducing debt and refocusing the business. Now his steady approach has the company primed for growth.
I'm a believer you try to make progress on big problems every day, and ultimately you look back and say, hey, you've come a long way.
Watch Chief Future Officer Wednesday on Bloomberg.
AI should be for everybody, from leaders to the working on floor. And we can save 90% of time, 50% of workforce. AI is core in centers of change. And therefore, we invest heavily to AI. Actually, we started more than 10 years ago because we think the machine in the past helped our hand and legs. Now the machine helps us in brain.
Are you betting all your money in this right now?
When the OpenAI appear, immediately I ask whole corporations study how will you bring generative AI to the job.
The Middle East and Africa, vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
I think President Trump has been very clear, as all presidents before him, that Iran should not acquire nuclear weapons. And I think when all is said and done, President Trump will appreciate Israel's courage and action and initiative in taking out this terrible, terrible regime in the nuclear program, which was risking everyone.
Oil surging up more than 6.7% this morning after Israel carried out strikes against Iran, raising fears of a wider war in the region. Pleased to say that joining us now is Nadia Martin-Wiggin, director at Svelin Capital. Nadia, when it comes to the oil market, there are no immediate outages at this moment, but the risk calculus has certainly changed. How has it changed for you overnight?
So when we look at exports from Iran right now, they've been around 1.7 million barrels per day. This is very much in question. Will that continue? What will be the focus? And when we think about where the market has been positioned, we've had 3 surges of more than 400,000 barrels per day in expected production out of the Middle East, but we have not seen a single barrel flow higher out of the Middle East. So we've gone from a situation of enormous spare capacity expectations to actually seeing no additional oil thus far, and now even looking at the first potential loss coming out of Iranian flows.
Well, Iran accounts for about 5% of global oil output, but the Strait of Hormuz, Nadia, it is the choke point, nearly a fifth of seaborne crude. What is the risk that there's disruption there?
So the market has not priced in that risk thus far in our view. When we look at the Red Sea, we had the Houthis with comparatively very unsophisticated weaponry shut that down for more than a year. And the expectations have been that, well, things will normalize, and we haven't even seen that normalcy. When it comes to Iran, if they were to strike a single oil tanker, it would completely change the industry in terms of flows. We've seen since COVID, it's very difficult to get personnel to feel safe to flow. So we would need military escorts, and it would take time to resume things. So it would be quite a shock to the market.
Nadia, to that point, we're not pricing that in. What would it look like to price that in? And should the market be doing it at this moment?
Yeah, so we've had short positioning in the market. And what we saw just in this last week is some of the fast moving algorithmic traders, they started to get a signal to buy. But when we look at these long, slow moving algorithms, above $72 Brent, where we are right now, they start to get a signal that they shouldn't be short. If they were to decide and we stay up here above these levels, it would take about 2 weeks for them to change those short positions into long positions. That means that we can have quite a lot of price appreciation just based on price momentum before we start looking at the actual fundamentals. The oil market is tight. We have low inventories going into peak demand season. And this is where we've had equity research forecasting, $56 to $61 Brent as their base case in the second half of the year because of potential trade wars and things like that since Liberation Day. But we've been trading at above 60 since OPEC has announced two boosts of 800,000 barrels per day of oil. And that is simply because the market is very tight. So we see continued upward momentum from where we are.
Is that triple digits, Nadia? Just how much upward momentum?
Well, that is very difficult to say. I mean, the main difference now versus the last time when Israel and Iran had their strikes on each other is both parties immediately stated, we're done. This is what we wanted to show. What Benjamin Netanyahu has expressed now, we need to be involved here for as long as it takes to ensure that Iran does not have nuclear capabilities. That, as a result, escalates the situation, and it also increases the likelihood of potential mistakes that escalate things further, as in an accidental oil tanker being hit, for example. And that's where it's very difficult to say. We have to take one step at a time. Right now, all oil is still flowing, but that can change very quickly.
Nadia, in the scenario where there's escalation, in the scenario where the Strait of Hormuz, specifically LNG, is hit, we were talking about this during the commercial break, that could really hamstring Asia's capabilities to get their hands on LNG. How does that change the dynamic between what we're seeing in negotiations between the U.S. and China?
Yeah, so what Trump really wants to do is fix the trade deficit with China. What does the U.S. export? Oil, LNG, and LPG. Those are enormous trade routes. When you look at Qatar, they're one of the three largest LNG exporters. That is a big difference and an opportunity for the U.S. to get these long-term agreements going with China to fix that trade deficit long-term. LPG, 8% of the world's LPG flows out of the Middle East just to China, right? Or 8% of Chinese imports. Right now, we do not have an exemption for LPG exports out of the U.S. They've only included, the Chinese, an exemption for ethane. The entire petrochemical market growth story is very dependent on LPG coming out of the U.S. So this is the part of the negotiations that could really help the Trump administration. And it's when Asia actually and China really needs America. So we expect shipping stocks, crude carriers, LPG carriers, LNG carriers, all of that to start to see some of this upside in their pricing as the market realizes that these are the diversions that are necessary. It's much further to sail from the U.S. than it is to sail from the Middle East to China.
Just to be clear, Nadia, will this happen regardless of where we move from here, or is this the scenario where you do see LNG taken offline?
Well, we expect that it's all about energy security. We've been talking about this in Europe ever since Russia invaded Ukraine. And now we see this is absolutely necessary on a global scale. And every country wants to increase and diversify where they get their flows from. So that includes the U.S. It includes Argentina and growth in shale production. This is where that change into inefficient shipping routes, that is absolutely what everyone has to do and secure those volumes. And that's what oil traders, LNG traders, and LPG traders are going to be doing today with their bookings.
Nadia, thank you so much for joining us this morning. Definitely things are different this time. Really great to get your thoughts. Nadia Martin-Wiggin of Svelin Capital. Let's get a quick check on commodity markets. You continue to see the surge higher in oil prices, at one point up 13% for Brent crude. We're now at 6.7%. Gold, unsurprisingly, getting a bid with the rest of the havens up about 1%. Let's now also take a look at stocks that are on the move this morning. Here with that is Bloomberg's Joe Easton. Good morning, Joe.
Hey, Danny. So airlines likely to be a really weak part of the market today, as we've seen it in Europe as well. Take a look at Delta. We're down 3% on that one. United as well, down close to 5%. Also American Airlines and Southwest dipping as well. A lot of that kind of just due to the higher oil prices you were discussing there with Nadia. But also there's reports of countries in the Middle East potentially actually closing off some of their airspace. So that is another risk for the sector. As I say, it has been the weakest sector in Europe as well. Then on the upside, we're seeing defence stocks getting a bit of a boost, kind of an obvious trade with the flare-up in these tensions. So we're seeing RTX and also Lockheed Martin seeing decent gains in the pre-market. Lockheed actually up 4%, RTX also close to 5% as well. Then the other sector, again, it's kind of obvious in terms of where to trade, but the energy price pushing up the main crude oil producers. So take a look at ExxonMobil up 3%, Chevron, similar moves on those. Again, it's another sector we've seen rallying today. Crude oil was up around 13% overnight, has come down, of course, in the past few hours, but definitely a sector that should be pretty solidly in the green today. And as usual, check out on the Bloomberg terminal the Before the Bell opening wrap written by yours truly today. It'll be on the terminal shortly, Danny.
Joe, thank you very much for that. That is Bloomberg's Joe Easton. Other shares we're looking at moving in the pre-market, auto shares, among them dipping by about 2%. President Trump said that he may raise U.S. auto tariffs in order to boost domestic auto manufacturing. Let's get more at Bloomberg's Brendan Murray. Brendan, this might have been the first thing we talked about this morning had it not been for what's occurring in the Middle East. Let's start with auto tariffs. What has the president said?
Yeah, it sounds like he's ready to escalate those tariffs against trading partners from Mexico to Canada to Japan to South Korea. This comes at a time when the negotiations with each of these trading partners, including the EU, is getting down to crunch time, basically. There are less than 4 weeks until the reciprocal tariffs snap higher to those levels that he announced on Liberation Day, April 2nd. And the the sectoral tariffs, these auto tariffs in particular, are a really big sticking point with countries like Japan that want to see those adjusted lower, not higher, as the president said. So you can see some of the strategy Donald Trump employs here to kind of threaten escalation and then sit at the negotiating table and try to sort out something that both sides can agree to. But at this point, this is really just going to antagonize the relationship between the U.S. and some of these trading partners that produce a lot of automobiles for export.
Brendan, I mean, we have to talk about the elephant in the room, and that is a Trump administration that's now going to be not necessarily distracted, but have something else on its plate, dealing with the fallout between Israel and Iran. How does this change the calculus in terms of negotiations between various nations?
Well, this is really, this conflict, depending on how wide it gets within the region, is really just going to add strains to the global trading system that already has multiple layers of disruptions on top of it. So these are big shipping lanes through the Persian Gulf, through the Red Sea, through the Suez Canal. This is just going to, the shipping, this is obviously going to affect the energy sector when it comes to shipping, but container shipping is essentially at capacity right now, and if you start putting more bottlenecks into the system, that's just going to create this sort of accordion effect back to Asia, to Europe, to the U.S. So and the bottom line is it's just going to get more expensive. So that could be some of the fallout that President Trump sees, is that things on the inflation front start to worsen if this is drawn out and a wider regional conflict.
Yeah, certainly. Although we were speaking with Nadia Martin-Wiggin of Svelin just before you, Brendan, who said that this could help them because Asia will want more LNG, and it could reduce some of the tension between China and the U.S. by having to ship that over and going through those routes. Brendan, thank you so much. A lot going on today. That is Bloomberg's Brendan Murray. By the way, I just want to give you a few headlines coming through from IDF spokespeople saying that they did indeed attack the underground space at Natanz, that is the big nuclear facility in Iran. Meanwhile, you do have various nations coming out and calling for more diplomatic measures. That includes Russia. Ursula von der Leyen also putting out a statement earlier this morning, calling for the same thing, saying that Europe urges all parties to exercise maximum restraint, de-escalation immediately, and refrain from retaliation. A diplomatic resolution is now urgent more than ever for the sake of the region's stability and global security. There had been set 4 talks on Iran on Sunday. Steve Witkoff was on his way there. Iran says that they will not attend. UK also urging Israel and Iran to reduce tension. So that is a lot of what we're seeing, various world leaders coming out and saying, let's de-escalate. Israel saying that this is the first step in many in their Operation Lion. Okay, coming up, we're going to continue to bring you the latest out of Israel, Iran, and the U.S. Response to ratcheting up tensions in the Middle East. Oil markets continue to move higher. We are up by 7% for WTI. Brent crude up 6.7%. This morning at the same time, you're looking at risk markets weaker. Dollar and gold bid this morning. You're watching Bloomberg Brief.
up-to-the-minute geopolitical news wherever and whenever it happens. I'm Anne Marie Hordern in Buenos Aires, Argentina, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories. And we're here where the action starts in Sydney. And in Tokyo, get ahead as the global trading day begins. The Asia Trade, weekdays only on Bloomberg.
In case you missed it on the opening trade.
You talk to the airlines, they're watching what the demand picture looks like right now. At the moment, it appears that actually the demand picture is okay, but they're all worrying as well about what tariffs are going to do to their business going forward. Are they going to have to pay higher prices?
There's no question in the short term with what we've seen coming out of Washington and the challenges of the trade negotiations. It's choppy.
We've got about a $500 million residual cost challenge as a result of those tariffs.
We have seen some softening, but it's rebounding a bit.
Things are steady. We're reassured that our premium demand is holding across all of our sectors.
They've got to just take stock and take a medium to long-term view as to what their costs are going to do, and then have a conversation with us as to what that may be.
Don't miss the opening trade, live every weekday.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Bringing you up-to-the-minute French news whenever and wherever it happens. I'm Caroline Conan in Cannes, and this is Bloomberg.
Bloomberg launches our inaugural 25 African Startups to Watch list.
About 2.5 years ago, we created a solution. We are able to generate refrigeration using the sun and water. We're able to store energy in the form of ice, as opposed to storing energy in the form of lithium batteries. We integrated in every refrigerator a pay-as-you-go technology, allowing individuals and small businesses to be able to pay as low as $10 to own a refrigerator.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa a priority and not an afterthought. We believe that the population on this continent deserves to be formulated for, heard, and we are giving this consumer a voice.
It's 5:30 a.m. in New York City. Good morning on this Friday. I'm Danny Berger with your Bloomberg Brief. Here's what you need to know. Israel launches airstrikes across Iran, targeting nuclear sites and killing senior military commanders. Iran vows reprisal and hits back with drones. Oil jumps on that geopolitical angst with the biggest intraday spike since March of 2022. And State Secretary Marco Rubio says the U.S. is not involved with the strikes in the Middle East. Iran says that Washington is responsible. It is still too early, perhaps, to understand the ramifications for both the markets and the world, but the reaction has begun. At one point, Brent crude spiking up some 13% after already moving to the highest level in 2 months yesterday in the anticipation of this moment. And it is escalation fears driving the rest of markets this morning. Equity markets also decisively lower, down by 1%. The effects, though, perhaps not as big as you'd expect, given that size of the move in oil. That goes even more through for the bond market. Yes, you are seeing a bid, but to be clear, we are only down about 1.7 basis points. We had already been moving lower on 4 different events from the 2 auctions and the 2 pieces of data when it comes to CPI and PPI. Dollar, that gets a bid. Again, maybe not as outsized as you'd expect. Euro weaker by 0.5%. Meanwhile, gold stronger by 1% this morning. So it is major escalation in the Middle East, with Israel launching waves of airstrikes against Iran's nuclear programs and ballistic missile sites. Iran says the head of its armed forces and 6 of its nuclear scientists have been killed in a wave of Israeli airstrikes. Israel says Iran has responded by launching more than 100 drones. The Israeli prime minister says its attacks on Iran will continue.
Israel launched Operation Rising Lion, a targeted military operation to roll back the Iranian threat to Israel's very survival. This operation will continue for as many days as it takes to remove this threat.
For more, we're joined by Bloomberg Horizon's Middle East and Africa host, Jomana Bersecci. Jomana, what do we know at this point?
Well, what we know, Danny, is that this was the most significant wave of attacks on Iran going all the way back to the 80s. So really has superseded all of the attacks that we've seen in the last 12 months. And from the Israel military perspective, they did succeed to strike many of those nuclear facilities, nuclear infrastructure, though the IAEA reporting earlier this morning that there's no significant signs of radiation yet, i.e., there hasn't been enough damage to make many of these nuclear facilities and plants not operational or defunct, which is why the Israeli Prime Minister has said that they do plan to continue with these wave of attacks. But in terms of the other damage that Iran sustained, they took out 3 senior commanders, one of them a very senior member of IRGC, that is the Revolutionary Guard, very close advisor to the Ayatollah as well, many nuclear scientists, and now the latest reporting suggesting that up to 25 of those nuclear scientists were also targeted as well. And then also major infiltration of Iranian intelligence with the Israeli news agencies reporting that Israel had been conducting a covert military operation in the last 7 to 8 months in which Mossad agents have actually infiltrated into Iranian territory and participated in yesterday's attacks by using some devices that they had smuggled into the country as well. So yet another blow for Iranian intelligence. Now, Iran are saying that they are vowing a major response, a very harsh response. Already this morning, they sent over about 100 drones that have caused limited damage, are threatening to do more. They've also said that they're going to be pulling out of the next round of those U.S.-Iran nuclear discussions, those talks that have been taking place. A 6th round was set to take place in Oman this weekend. Iran saying this morning that they will no longer participate in those nuclear talks. But what we do know is that a response is forthcoming. There will be a response out of Iran. And from Israel's perspective, the Israeli prime minister has said that they're not yet done. So we're not out of the woods yet, Danny.
The fear of a longer campaign, a prolonged response, definitely very clear and apparent. Jomana, thank you so much for that update. That is Bloomberg's Jomana Bersecci. Now, when it comes to the Washington response, State Secretary Marco Rubio wrote in a statement, quote, "We are not involved in strikes against Iran and that Israel believes this attack is necessary for self-defense." Fox News reporting that President Trump, in a phone call with the network, says he wasn't surprised by the attack. In recent weeks, the president has signaled an attack was on the cards, but he preferred trying to make a deal instead.
Did you warn Prime Minister Netanyahu against taking some sort of actions that could disrupt the talks there? In a phone call last week?
Well, I'd like to be honest. Yes, I did. Next question, please. It's not a warning. I said I don't think it's appropriate.
Well, I'd love to avoid the conflict. We're fairly close to an agreement. I don't want them going in because I think that would blow it. Might help it, actually, but it also could blow it.
Bloomberg's Kasia Klimanshinska joins us now from Washington, D.C. Kasia, how much does what happen overnight change the calculus for Washington, D.C. and its hopes for diplomacy?
Yes, I think there is a significant change now. As you mentioned earlier, Iran doesn't want those negotiations to continue. There was supposed to be a meeting on Sunday in Oman between the U.S. and Iran envoys. Looks like this won't happen. President Trump has only one item on his agenda today. That's an 11 a.m. National Security Council meeting that obviously is not open to press, but we'll very likely hear from President Trump after that meeting, if not sooner.
So the U.S. still wanted to hold those talks on Sunday, and they had requested that Israel not attack Iran now. Clearly, that is not what occurred, Kasia. What does this mean between the U.S. and Israel and the influence it still has in the region?
Yes, that's a very good question, especially as it comes, relatively soon after President Trump's trip to the region and in a moment where Trump is already looking at several other difficult situations with other foreign partners. So there were supposed to be those talks on Sunday. President Trump is also scheduled to head to G7 early next week. So it's all very much a very developing situation. But as you pointed out in this Fox interview that hit, late last night, President Trump said he wasn't surprised, but he was hoping to get back to negotiations.
All right, Kasia, thank you so much for that update. That is Kasia Klimanshinska from Washington, D.C. Now, oil also surging as much as 13% at one point. That would make it the biggest intraday spike since March of 2022 on the back of geopolitical tensions. 7% higher now for Brent crude, 7.5%, just there under for NYMEX crude. Let's go straight to Bloomberg's executive editor for commodities, Will Kennedy. Will, how much change for this oil market overnight?
Yes, clearly the oil market sees this as a very significant event which signals big risks going forward. It's true that the initial reaction has come off a little bit, but we're now trading back at 75, way above where we are before OPEC started putting considerable oils back into the market, which I think shows how much geopolitical risk has been put back into the price. Now, clearly, what will matter now, as Jumana was outlining for us earlier, is how Iran responds and what it decides to do next. The big risk for the oil market is that it decides to try and restrict shipping through the Strait of Hormuz, the narrow waterway at the mouth of the Persian Gulf, through which about a third of the global oil supply moves. If that were to happen, you could see very significant gains from here, but I think that's a very open question at this stage.
We were speaking with Nadia Martin-Wiggin of Swellen Capital earlier, Will, and she said the threat isn't necessarily just a closure of the Strait of Hormuz, but just any attack on any tanker, any shipments trying to get through there. How would that change things if you did see something to that degree in terms of cost and just flow of energy?
No, I think that's a really important point, and actually we could look at the campaign that the Houthis waged against shipping on the other side of the Arabian Peninsula last year to see how this works. In that kind of situation, it becomes more expensive to hire ships. Fewer ships are going to be willing to go into the Persian Gulf. You're going to have to pay more to insure them. There may be a shortage of tankers to get oil out of the Persian Gulf, and that could all lift prices and exacerbate this political risk premium we're seeing now. So people should avoid seeing this as a binary open-shut thing. I think a much more likely scenario, as you say, is Iran decides to interfere intermittently with shipping coming in and out of the Gulf, and that raises the cost and difficulty of getting oil out of this key region.
Well, just the backdrop of this, Will, you also said you also had an OPEC that has expressed a willingness and has indeed brought more oil back to the market. What is the reaction, likely reaction? What could it look like from OPEC Plus and Saudi here? Is it accept the higher oil prices, get that premium, or put more barrels into the market?
For Saudi Arabia right now, this is, on the face of it, economically quite a good outcome because it's putting more barrels into the market, gaining market share, increasing production, and it's now doing it with prices around the 75 barrel mark. But that said, it's not always that simple. They may, if things escalate from here, come under pressure from Washington to try and counterbalance some of the disruption from what's going on in Iran. And I think an important thing to bear in mind as we think about the market impact from here is that both Saudi Arabia and the United Arab Emirates maintain significant spare capacity to put back into the market and keep a lid on prices if the situation develops and as it requires. Even though it's increased production, Saudi Arabia has at least 2 million barrels more that it could put back into the market. The United Arab Emirates probably produce 1 million barrels more for the sake of argument. So that's a significant lid on prices. Now, there are complications about whether they can get that oil to market. But setting that aside, I do think it takes some of the more extreme scenarios. It limits those to some extent.
The complications getting oil to market, Will, do you just mean any of the disruptions we might see in the Middle East?
Yeah, that's right. Of course, in an extreme scenario where the Hormuz is shut, then it limits the ability of producers like Saudi Arabia and the United Arab Emirates, Iraq, to get their oil out. Although it's worth noting that both Saudi Arabia and the UAE have some capacity, in the Saudi Arabia's case, to ship through the Red Sea, in the United Arab Emirates' case, to go directly into the Indian Ocean. So they're not completely shut out, but it would complicate life for them.
Certainly will. Thank you very much, Bloomberg's Will Kennedy. And just worth mentioning on that note, if we do see some shortages, IEA has responded this morning. Fatih Birol, the executive director over there, saying that they have barrels of oil emergency stock and they are ready to supply the market if needed. Let's now get you some other trending stories on the terminal this morning. President Trump says that he may raise U.S. auto tariffs to boost domestic auto manufacturing. He said raising those tariffs from the current 25% level could further protect the domestic auto industry. Trump cited GM's plans to invest $4 billion in U.S. plants to avoid duties. The Trump administration also won a brief reprieve from a judge's order to pull back on the use of military troops in Los Angeles to deal with protests over immigration raids. The appeals court set a hearing for Tuesday to consider whether to continue to allow Trump to use troops for longer. One person has survived the deadly Air India plane crash that killed 241 people on board. The 40-year-old UK citizen was seated in the first row of the economy class and managed to walk out through a broken door on his side of the plane. According to a Hindustan Times report, doctors said his injuries were not life-threatening. Coming up, we take you live to Le Mans with an interview with Knighthead Capital co-founder Tom Wagner. That important conversation coming up next on Bloomberg.
there is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it, and so far we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
I'm David Weston. Join me for the next generation of Wall Street Week. This week, we travel to J&J Research Headquarters to see where the miracle drugs come from during what J&J CEO Duato calls the golden age in healthcare. Part 2 of our story about $2 gasoline and what it would mean for Odessa, Texas. And is the Jetsons world of flying cars finally about to arrive?
A paradigm shift for the quality of people's lives.
Watch the all-new Wall Street Week. More than what you need to know, it's what you need to think about.
When U.S. jobs numbers are released, Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
You're watching Bloomberg Brief on this Friday morning. I'm Danny Berger in New York. We continue to look at the fallout from an Israeli attack on Iran. S&P 500 futures down 1%. The bigger move, though, perhaps is oil this morning. Oil futures higher by 7.5% for WTI. For Brent, it's 7.2%. We now go live to Le Mans, in France, where Bloomberg's Matt Miller is live with one of the top asset managers. Matt.
Yeah, Danny, thanks very much. I'm here with Tom Wagner from Knighthead, and among the other businesses that you own, one of them is Team Jota. The Hertz Team Jota racing team is the Cadillac factory team. And before I get to the Israel-Iran attack, and I do want to ask you about the effects of that on your businesses, I want to ask about the historic finish that you had yesterday in the Hyperpole. You locked out the front row.
We did. Thanks, Matt. So it was a great day for Cadillac and Hertz Team Jota. It was an impressive 1-2 qualifying. Obviously, there's an incredible number of fantastic auto manufacturers here with, you know, some pretty unbelievable sports cars that are competing in the 24 Hours of Le Mans. But this is what makes the 24 Hours such an iconic race. You know, you have this incredible multi-tiered qualifying system, and then you've got to go race for 24 hours. And where you started and where you finished bear no resemblance to each other many times. So the race ahead of us. But I think for all of our partners, Cadillac, Hertz, Goodyear, sorry, not Goodyear, apologies, Mobil One, and Palantir. This was a great day for us to get out and really do well.
So what is I'm going to be asking Jim Farley a little bit later. He joins us in an hour. I'm going to talk to Mark Royce tomorrow from General Motors Cadillac. And from your perspective, what is the return on investment in racing? This isn't just a vanity project, right? Yeah. These guys don't come here just because it's fun to race and they enjoy it. It must make a difference to the bottom line of their companies.
Yeah, absolutely. For the companies that are sponsoring a team, or for the OEMs that are manufacturing the cars and actually driving the competition and the performance, I think there are different elements. But a big part of it is the content that they're able to create and put in front of their customers, the branding exercise that shows a different side of their business, right? You're connected to racing, which brings this tribalistic element in. You've got fans that follow your team. They can then become customers. There's that old adage that you race on Sunday and you sell on Monday. That's a very true and real thing. And I think for some of the other sponsors like Hertz, it's an ability to show a different side of your product and do a little bit different branding exercise. And I think if you look after the whole history of Hertz, they've been in racing on again and off again for, you know, quite a number of years. And we're thrilled that they're having a great run this season as a sponsor, and they're getting some really good mileage out of it. And I think we'll see more of that going forward. And what's nice for Hertz is that we've been able to keep driving the cost down of their participation and increasing, the value that they receive in return. So I think that, it's incumbent on us to keep doing that.
We were talking with one of your drivers a little bit earlier, Jenson Button, Formula One world champion, and he was saying that Le Mans has grown amazingly.
Yeah.
Just looking at the paddock, you have 8 manufacturers in the hypercar class. Why do you think this event is getting more and more important to the major car manufacturers around the world?
I think it goes back to something we've talked about in the past, the rise of, analog experiences for, people that want different content. They don't just want digital content. And coming to a race, is a wonderful analog experience. You get to see and feel and touch and experience things in a very different way. And I think that for the OEMs that are participating in endurance racing, it's a way for them to showcase their product and put it out there. Sure, many of the fans that are here viewing the event can't necessarily afford one of these cars that's represented by the hypercars or GT class cars. However, they then follow the team. They get a piece of it by way of the merchandise or other experiences they have, and it becomes a halo product for them. And then for those who are actually buying it, they know that they're buying, a consumer product of great value that many people would aspire to own, and I think that brings a luxury element into it. So you're hooking together a number of different big, mega, kind of macro trends together in racing that I think are important and will continue for a while.
We've seen in F1 teams that a few years ago were worth a few $100 million. All of a sudden, they're valued at a couple $1 billion.
Yeah.
I mean, just massive increases. Do you see that happening to teams here as well? I mean, has Jota been an incredible investment for Knighthead in that sense?
Jota's been a very good investment for us. It's a multifaceted business beyond racing. Racing helps to promote some of their other businesses like the carbon fiber business that we have that's really growing very quickly, and some of the other engineering services businesses that we offer. Those benefit from the value that Jota brings by performing, really well on race day. And I think that we'll continue to see that rise. But for the teams themselves, I think what we need to see is a bit more commercialization. So we need more sponsorship, more hospitality, bigger brands coming in. But I think that's likely to happen when you look at who's on the grid. I mean, it's a pretty incredible collection of luxury car manufacturers that are represented.
You have a number of investments across sports in Birmingham City, soccer or football team, if you will. You've got cricket investment. In cars, you have Singer and Revology. And you just added Willow Springs, the track, to your portfolio. How are you funding all of this? Are you raising capital from investors? Is this all from your insurance?
Okay guys, Indian market भी close होने वाला है. क्रूड ऑयल में तो बायर निकल गए होंगे. आई होप सब बाइंग का टारगेट हो गया. अभी कोई नया ट्रेड नहीं है. इसके बाद कोई बनेगा तो लगा दूंगा. थोड़ी न्यूज़ आ रही है कंटिन्यूसली इजराइल और ईरान के बीच, जहां पर ये कहा जा रहा है कि इजराइल कंटिन्यूसली स्ट्राइक कर रहा है. एंड थोड़ी देर पहले एक और न्यूज़ आई थी कि एक और अटैक एक तो मॉर्निंग पे हुआ था. इसके अलावा एक अभी थोड़ी देर पहले और हुआ है अटैक. तबरीज में, और ये अभी भी ऑन गोइंग है, तो देखना पड़ेगा. मार्केट कभी भी और बुलिश हो सकता है अगर ईरान ने कहीं फुल फ्लैश वॉर डिक्लेयर कर दी अगेंस्ट इजराइल. बाकी इजराइल का ये कहना है कि ये जो ऑपरेशन है चलता रहेगा जब तक सारे के सारे इंस्टॉलेशन डिस्ट्रॉय नहीं कर देते हम ईरान के अंदर. सो मेजर न्यूज़ है, मार्केट उसी पर रिएक्ट कर रहा है थोड़ा बहुत. क्रूड ऑयल पर थोड़ा संभल के ट्रेड करना. मॉर्निंग से 2 ट्रेड मिल चुके हैं, थोड़ा साइडवेज गया है मार्केट. लेट्स सी क्या कंटिन्यू करता है मोमेंटम या फिर थोड़ा सा रुकता है करंट एरियाज के आसपास. लाइक भी करते रहो गाइस जिन लोगों ने लाइक नहीं किया स्ट्रीम को. डोंट फॉरगेट टू लाइक द स्ट्रीम एंड सब्सक्राइब द चैनल. सब्सक्राइब भी कर दो चैनल को जो लोग सब्सक्राइब नहीं कर रहे हैं. सब्सक्राइब करना चाहिए, कम ऑन। नेचुरल गैस को भी देखोगे, मॉर्निंग पे अच्छा खासा सेलिंग में आया था, उसके बाद फिर थोड़ा रिवर्स कर गया। यहाँ पर एक बाइंग का लग तो रहा था बट लिया नहीं, थोड़ा सा डाउट हो रहा था इसलिए लगाया नहीं बाइंग वाला ट्रेड नेचुरल गैस में। ठीक है, कोई इशू नहीं है, देखेंगे कुछ नया ट्रेड फिर से बनेगा तो। अभी कोई नया ट्रेड नहीं है, साइडवेज ना चला जाए नेचुरल गैस अब कहीं। अभी नहीं है, अभी नहीं, रुक जाओ, कुछ बनता है तो देखते हैं। इंडियन मार्केट भी देखोगे गैप डाउन के बाद पॉज ही रह गया पूरे दिन भर। मॉर्निंग से देखोगे बैंक, सॉरी ये आपका नेचुरल गैस भी ओवरऑल देखा जाए तो फर्स्ट 15 मिनट की कैंडल के अंदर ही ट्रेड कर रहा है। अभी भी उसका हाई और लो ब्रेक करके नई कोई कैंडल फॉर्म नहीं करी है अभी भी। थोड़ा इंटरेस्टिंग रहेगा यहाँ पर क्या करता है, उस बेस पे निकलता है अपसाइड या फिर वापस थोड़ा बहुत और। क्योंकि थोड़ा सा अगर ये ऊपर निकल गया ना तो ऊपर कुछ लेवल भी नहीं है फिर से मार्क करने के लिए, बिकॉज उतना पीछे 15 मिनट का चार्ट ही शो नहीं कर रहा है, काफ़ी पीछे का लेवल है वो, एंड उस लेवल पे 15 मिनट का चार्ट नहीं दिख रहा है। तो उस केस में फिर थोड़ा सा हम हायर टाइम फ्रेम ही यूज़ करेंगे और कोई ऑप्शन नहीं है। ये डे हाई का ही रेजिस्टेंस है, जो रेजिस्टेंस है अगर इसके ऊपर कहीं चला गया तो फिर प्रॉब्लम हो जाएगी, फिर थोड़ा सा टाइम फ्रेम इंक्रीज करना पड़ेगा। ठीक है, 15 मिनट में तो नहीं दिखेगा लेवल। एयर इंडिया फ्लाइट मेक्स इमरजेंसी लैंडिंग इन थाईलैंड फॉलोइंग बॉम्ब थ्रेट, पुकेट एयरपोर्ट। एयर इंडिया के साथ क्या हो रहा है ये? इसराइल स्टैंड विथ इंडिया एम्बेसडर कंडोलिंग। तो यहाँ से क्रूड ऑयल में नेचुरल गैस तो थोड़ा और ऊपर चला जाए तो बेटर रहेगा। यहाँ पर मल्टीपल टाइम टेस्ट हो गया लेवल भी, एक बार, दूसरी बार, तीसरी बार, चौथी बार। जहाँ से सेलिंग आई थी ना मार्केट में 310 के आसपास, मार्केट ने लोअर लो बनाया नहीं, आज भी लोअर लो नहीं बना रहा है। वो तो ऊपर का जो रेजिस्टेंस बना है कल का, कहीं ना कहीं वीक माना जाएगा अब। पहली बार में यहाँ से एक सेलिंग आई थी, मार्केट ने लो बनाया था, दूसरी बार लोअर लो बनाया था, थर्ड टाइम आई हायर लो बनाया, तो ये 4 टाइम जाएगा अगर यहाँ से ऊपर जाता है। और ब्रेकआउट के चांस उस केस में बढ़ जाएंगे काफ़ी ज़्यादा। एक तो गैप अप हुआ है, समझ में नहीं आ रहा वो कैंडल पे हुआ क्या है, तो फॉरेक्स का चार्ट ही देखना पड़ेगा, एमसीएक्स का देख नहीं सकते। क्रूड ऑयल में यही लेवल है और तो कोई लेवल बना भी नहीं है, तो एक सेलिंग का ट्रेड अगेन। वैसे तो मार्केट न्यूज़ की वजह से बुलिश है, बट रेजिस्टेंस है, तो देखते हैं वापस सेलिंग आती है तो। ओके, तो एक छोटा सा फिर से प्लान यहाँ पर रखेंगे। लेट्स सी इस बार कितना टारगेट मिलता है, ज़्यादा तो उम्मीद नहीं है, बट थोड़ी बहुत सेलिंग जरूर आएगी। रेजिस्टेंस जब तक कैंडल क्लोज नहीं हो जाती तब तक इंटैक्ट तो रहेगा। एसएल भी बड़ा बन रहा है काफ़ी, 50 पॉइंट, नॉट लेस देन दैट। टारगेट देख लेते हैं कितना रह सकता है, 1:3 मान के चलते हैं। ठीक है भाई, ये टारगेट और एसएल छोटे छोटे दिख रहे हैं क्रूड ऑयल में, लेकिन ये है नहीं एक्चुअली में। ठीक है, फ्यूचर चार्ट के अकॉर्डिंग देखोगे, पहले ट्रेड में एसएल वो 78 पॉइंट का बन रहा था, टारगेट भी लगभग 300 पॉइंट का था। दूसरा ट्रेड देखोगे, इसमें एसएल थोड़ा 30-40 पॉइंट का, 30 पॉइंट का ही था, इसका टारगेट भी 200 पॉइंट का था, तो ये भी थोड़ा सा उसी हिसाब से बनाया हुआ है। कि नीचे ऐसा कोई अभी और सपोर्ट तो बना है नहीं, देखने के लिए तो मिल नहीं रहा है। रिटेस्ट ही है नीचे, वो भी हो गया एक बार तो। सपोर्ट एंड रेजिस्टेंस है, इसका मतलब ये जब तक कोई नया सपोर्ट नहीं बनता तो इसका मतलब नीचे रीटेस्ट जोन तक पूरा ओपन रहेगा। बट नॉर्मली ऐसा होता नहीं है, अगर कोई न्यूज़ आती है या फिर नॉर्मल मार्केट मूव करता है तो मोस्ट प्रोबेबली नया सपोर्ट बनाना ही पड़ेगा, तभी गिरेगा और तभी एक चांस बन सकता है। एक बार ट्राई और कर सकता है, ऐसे तो टेस्ट हो गया तो फिर अब चांसेस कम ही है, बट लेट्स सी। कल तो टेस्ट कर ही लिया एक बार। इतना बड़ा फॉल आएगा क्रूड में फिर से, या ये जाएगा ब्रेकआउट करने इस बार? लेट मी नो इन द कमेंट बॉक्स। ये भी तो टेस्ट हो गया, सारे लेवल टेस्ट हो गए। वन गाइस, लाइक करते रहो सभी लोग। ये आया नहीं है 50% के आसपास, ये हो गया तो मोस्ट प्रॉब्लम मुझे लग रहा है नीचे वाला ही लेवल होगा स्ट्रॉन्ग। प्रोडक्ट होने के चांसेस कम ही हैं। ठीक है, तो न्यूज़ की वजह से ऊपर गया था, प्रॉफिट बुकिंग आई, वापस रिकवर कर गया। वन ब्लैक बॉक्स रिकवर्ड फ्रॉम एयर इंडिया। Netflix worker net 45 million from sales of company stock. Really? One black box recovered from Air India plane crash site, police sources say. Russia says Israel attack on Iran was unprovoked and illegal. Israel hits Iran nuclear facilities and missile factories again. Next era worker net $45 million from sales of company stock. Iran threaten US after Israel strike nuclear sites. US President Donald Trump is posting now on Truth Social saying he had given Iran chance. Uh, Iran chance. Trump urged Iran to make a deal before it's too late. Major news. Israel launches strike. Israel expect Iran to respond with a missile and further drone attack, according to an Israeli military official who spoke on condition of anonymity because the information is not public. Israeli defense system has been operating and the threat isn't over yet, but a lot of UAVs on the way earlier today were intercepted, the official says. US President Donald Trump is posting now on Truth Social saying he had given Iran chance after chance to make a deal, and urging it to make one now before it's too late. He doesn't directly address Israel over his strike, which were carried out with US knowledge but without US assistance. The IEA is actively monitoring the impact on crude oil market from the Israel-Iran situation. Markets are well supplied today, but we are ready to act if needed. The EIA oil security system has over 1.2 billion barrels of emergency stock and has proved vital to safeguarding the world economy.
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Lisa, these major moves in global markets come after Israel launched waves of airstrikes against Iran's nuclear program overnight. The operation targeted Iran's nuclear scientists and generals, killing a number of high-ranking military officials. Israeli Prime Minister Benjamin Netanyahu announced the strikes in an overnight message.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists working on the Iranian bomb. We also struck at the heart of Iran's ballistic missile program.
Israeli Prime Minister Netanyahu says the strikes will continue for as many days as it takes to remove this threat. The country's defense minister, Israel Katz, said he's declaring a state of emergency after what he described as a preemptive strike against Iran.
Well, Nathan, now comes the response from Iran. Israel says Iran launched over 100 drones toward Israel and that their air defense systems are responding. In a televised address, Iran's armed force spokesperson said Israel and the U.S. will receive a, quote, harsh blow. Tehran University professor Mohammad Marandi says Iran has no other option.
The only way forward is to make sure that the Israeli regime regrets attacking Iran, Iranians, and infrastructure that is legitimate and which is monitored regularly by the International Atomic Energy Agency.
Professor Mohammad Marandi at Tehran University. Iranian state media say the strikes killed the head of Iran's Revolutionary Guard Corps and the military's chief of staff. At least 2 other senior Revolutionary Guard Corps officials were also killed.
And hours before the attack, Lisa, President Trump said he hoped Israel would not strike Iran.
Well, I don't want to say imminent, but it looks like it's something that could very well happen. Look, it's very simple, not complicated. Iran cannot have a nuclear weapon. Other than that, I want them to be successful. I want them to be tremendous. We'll help them be successful. We'll trade with them. We'll do whatever is necessary.
Well, President Trump's words appear to have gone unheeded. Secretary of State Marco Rubio put out a statement after the attack saying the U.S. was not involved and warned Iran not to retaliate against American interests in the region. Later, President Trump told Fox News he was not surprised at the attack and said he had spoken with Prime Minister Netanyahu several times in recent days. It's as reaction around the world pours into the escalation, Lisa. Former NATO Supreme Allied Commander in Europe, Wesley Clark, says Israel forced America's hand.
President Trump does not want a war, he said that, but also he does not want Iran to have nuclear weapons. So I think Prime Minister Netanyahu has taken the decision away from President Trump at this point.
Retired General Wesley Clark spoke to Bloomberg overnight. These Israeli strikes come after the U.S. ordered some staff to leave its embassy in Baghdad and authorized families of military service members to move out of the Middle East.
Well, Nathan, we saw immediate major moves in the markets following the attacks. At one point, oil surged 13%. Right now, Brent crude at $73 a barrel, up about 4%. Defense stocks on the move this morning. Shares of Lockheed Martin are up 4%, while Northrop Grumman are up 2%. Oil-related stocks also rising. We have Halliburton, ConocoPhillips, and Schlumberger are at least up 4%.
And we'll continue to monitor the situation in the Middle East, of course, Lisa. But let's move now to the latest on the anti-deportation protests in Los Angeles. The situation does appear calmer now after 3 nights of curfews in the downtown area where demonstrators had been clashing with police. Last night, California Governor Gavin Newsom touted a legal victory in his fight with President Trump over National Guard deployments in the city.
Courts have ruled on the Guard. They will be back under my command, and he'll be relieved. Donald Trump will be relieved of his command at noon tomorrow.
Well, that comment from Governor Gavin Newsom may have come too soon, though. A federal appeals court put the judge's order on hold, allowing the Trump administration to continue using the military to deal with the protests. Another hearing on the case is now set for Tuesday.
Well, meantime, in India, investigators are searching the site of yesterday's deadly Air India plane crash. Prime Minister Narendra Modi, he met with the lone surviving passenger of the crash that killed 241 people on board and several people on the ground. The London-bound Boeing 787 struck a medical college hospital when it fell into a residential area in northwestern India. Just minutes after takeoff, here is Air India CEO Campbell Wilson.
I would like to express our deep sorrow about this event. This is a difficult day for all of us at Air India, and our efforts now are focused entirely on the needs of our passengers, crew members, their families, and loved ones.
Air India CEO Campbell Wilson. Local media say at least one of Boeing's Dreamliner's black boxes had been found. It's unclear whether that black box is a flight data or cockpit voice recorder.
A wild Game 4 to the Stanley Cup Final. Florida Panthers had a 3-0 lead in the second period. Back came the Edmonton Oilers. They led 4-3 in the final minute of regulation. Sam Reinhart tied the game for Florida, but then Leon Draisaitl with his 4th overtime goal of the playoffs. Edmonton won 5-4. The series is tied at 2. J.J. Spahn with a 466 bogey-free. He leads the U.S. Open at Oakmont by 1 shot. A struggling first round for Scotty Scheffler. That's your Bloomberg Sports Update.
That's news when you want it with Bloomberg News Now. I'm Lisa Mateo.
I'm Nathan Hager, and this is Bloomberg.
What
Remember
are we
when a
learning
single
about the
technology
possible causes of this devastating crash?
Well, still it is too early to know for now, Tom. Good morning. So I think the key developments really are around the finding of one of the 2 black boxes. We don't know if it's the flight data recorder or the cockpit voice recorder, and we don't know as well what condition it is in order for investigators to start downloading the data and getting a final readout in the minutes before this tragic crash. But as investigators get to the scene on Friday in Ahmedabad, it has turned from a search and rescue to a recovery phase as they ramp up investigations into what has happened. And of course, apart from that, we've got the likes of Kelly Ottberg of Boeing, who's cancelled his appearance at the Paris Air Show next week as he goes and tries to deal with the crisis at hand.
Progress never stops, neither should you. At PwC, we make sure
where this isn't exactly a green light, it's not exactly a red light, but they've been in a situation where the Israelis were eager to attack, and allegedly the attack order came earlier this week, even before the vote in Israel. And the Americans could have put more pressure on them to stop them, but probably did not. And this, I think, suggests, again, going back to this point about the negotiations, trying to pressure the Iranians and put a lot more leverage on them to say that they really have no choice but to cut a deal with the United States on terms that are presumably, at least in the Trump administration's eyes, going to be more favorable to the U.S. after this attack than before.
Whether it's a green light or an orange light, does Tehran see a difference?
I'm not sure Tehran has the ability to do anything about it. I mean, certainly Israel is quite vulnerable right now. I thought the Marco Rubio statement last night was that the Iranians should not retaliate against any U.S. assets. They didn't say anything about Israeli assets, was very telling. And, I think the U.S. sees this as a conflict between Israel and Iran, and Israel wanted to do this attack. But I don't know if Iran has the power to strike anywhere that's going to hurt the U.S. other than what you were talking about with your previous guest, which is, of course, oil prices, which are obviously up on this risk.
The U.S. says it wasn't involved in helping Israel with this attack. Will it be involved in helping Israel with its defense? We already know that Iran is sending over some 100 drones, and potentially we could see ballistic missiles as we did in April of last year.
Yeah, we don't know yet. I mean, the U.S. was key to defending the Israelis during that salvo of missiles that Iran sent over in April. U.S. assets had not been repositioned in the region in order to help with that kind of defense. So it doesn't look like there's anything extraordinary the U.S. is capable of doing right now. The U.S. did evacuate earlier this week a number of their families and personnel from bases in the region. I think it's very hard to see the U.S. walking away from Israel if the Iranians are mounting a massive counterattack that threatens it. But on the other hand, the Israeli promise to allow this to go for several days is a clear indication that they're now going after not only Iranian ballistic missile facilities, nuclear facilities, but they also want to go after their ability to strike Israel. And so I think that alone could also end up crippling Iran's ability to launch weaponry into Israel.
Iranian state TV said that the talks, or that they were going to send a representative to the talks in Oman on Sunday, are off. Where does this leave Tehran and Washington in terms of potential negotiations for a nuclear deal?
Yeah, the U.S. this morning said that they were planning to still do it, but it does seem very unlikely that you can continue these talks under these circumstances. I mean, what's happening inside Iran, I think that once the dust clears, this could be a fairly large shakeup of their military command, with their top leaders being killed. And it's possible that the Israelis are trying to strike at their political command as well. So I think it's difficult to forecast beyond the next several days because this offensive is not over yet. And but once that happens, it's going to be a while before you get these talks rebooted and get the Iranians fully engaged again.
Hey, John, appreciate your reaction this morning. Thank you, sir. John Lieber there of Eurasia Group. Following this attack, crude is higher now by more than 9%, 74.31. I think the key line there at the very end. This offence isn't over yet. No indication that this mission, this operation, is complete.
No indication. Already know that Iran is vowing to retaliate, and they already sent over drones to Israel that they were able to shoot down. Also, we saw Jordanian airspace intercept some drones. So what you see now is potentially that this is not just going to be an escalation between Iran and Israel. Other neighboring countries potentially, not because they want to, may end up being involved and are going to defend their airspace. This just shows that this is going to be days of escalation, which is why you see this geopolitical risk premium in the oil price.
You asked the perfect question. The U.S. didn't say yes. The U.S. didn't say no. Will Iran identify any difference between the two?
I believe Tehran will view that as tactically the United States saying yes, because they knew this was going to happen and they didn't stop it.
Up next on the programme, we'll catch up with Stephen Cook of CFR following Israel's attacks on Iran. Live from New York City this morning, you're watching Bloomberg TV.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
The flood of investment agreements.
Deals were once again on display.
The Saudis are open for business.
The cessation of sanctions against Syria.
Another big victory for the Crown Prince. Concerned that not enough guardrails may be set up just yet.
Headline after headline.
Trust Bloomberg for on-the-ground coverage.
The numbers will be quite substantial.
Up-to-the-minute reporting.
Driven the price of oil down.
And the analysis you need.
He's basically going to vault this region into the same sort of sphere as the US and China.
No one covers geopolitics like Bloomberg.
Live from New York City this morning. Good morning. Here's a flavour of the price action for you. Cross-asset equities heading lower. We're moving south. We're down by more than 1% on the S&P, negative by 1.4 on the Nasdaq. In the bond market, check this out. Yields across the curve bleeding just a little bit higher now by a single basis point, 437 on 10s. Think of this as a three-way tug of war. Risk aversion versus inflationary developments versus doubts about haven status of the Treasury market altogether. I don't know what to do with this Treasury market, and maybe that's the problem. In the commodity market, here's the inflationary development. WTI and Brent rallying hard, up by 9% on WTI, 74.13 on Brent crude, up by more than 8%, 75.35. That's the cross-asset price action. Let's get you some morning movers with a few hours until the opening bell. It's Danny Berger with more. Hey, Danny.
John, just considering that energy board you just showed, it will be no surprise what is moving the most to the upside in the pre-market session this morning, and that is the big energy players, easily the best performing stocks in the S&P 500 pre-market. You're looking at ConocoPhillips up 5%, Exxon up more than 3.5%, Chevron just under 3.5%. It's been a good week for the energy players, too. They had already been rallying on hopes of better economic growth, given some of the data, so that rally really picks up speed with the latest conflict in the Middle East. Another play that typically develops when you see this geopolitical angst are defense and military type companies outperforming. And again, that is what we're seeing. RTX up 5.5%. Lockheed Martin up 4.6% with that playbook, and also Iran vowing retaliation on the U.S. included. Now to the downside, airlines being hit hard on the latest developments. All the majors falling this morning, at least some 4%. A couple things going on here. A lot of Middle East nations have closed their airspace. Perhaps that affects airlines more concentrated in the Middle East and Asia. But for these majors in the U.S., perhaps the concern is higher fuel costs off the back of that oil move, John.
Danny, thank you. Appreciate the update. More from Danny in the next hour. Some of the movers out there at the moment. On our radar this morning, our top story worldwide. Israel launching airstrikes across Iran, targeting nuclear facilities and killing senior military commanders. The move sparking concerns of a broader war in the Middle East, with Iran vowing to retaliate. Here's the U.S. response this morning. President Donald Trump saying Iran must make a deal before it's too late. The president posting on Truth Social after Israel's attack on Iran, saying he gave Iran chance after chance to make a deal, and they couldn't get it done.
He also gave Iran a timeline about 2 months ago, and this was going to be the 6th round of talks between envoy Steve Witkoff and the Iranians in Oman on Sunday. Iranian state TV has said that these talks are now over. The president is still trying to have a diplomatic path. Very challenging right now, given the fact that what you've seen from Israel overnight is, Jonathan, not just going after nuclear facilities, not just going after Iran's ballistic missile program, but going after top brass of the military. We are talking about the commander of the IRGC. This might be one of the most important people when it comes to the regime's military operation, a close advisor of the Ayatollah. Iran is very vulnerable right now when it comes to their senior military and also their intel collection, and how they're going to respond is going to be also challenging for them, given the fact that a number of commanders are killed.
We'll come back to this story in just a moment. I just want to bring you developments elsewhere on the tragic incident that took place yesterday morning. morning. Air India confirming that all but one passenger on board the Boeing Dreamliner that crashed yesterday died. Investigators searching the wreckage for clues on what caused the crash. The Hindustan Times reporting one of the black boxes has been recovered.
So when you listen to this man talk about what he experienced, who was able to walk away from this devastating, horrific crash, I think we should listen to some of his words. He said he was stuck for 5 to 10 seconds. He saw these lights. It seemed like it was pushing harder to take off. On the side I was on, that part of the plane didn't crash into the hostel. It landed on the ground floor. When the door on my side broke, I saw an opportunity to escape, so I got out. My left hand got burned when the fire started, but I was able to make it out. This is unbelievable. This one individual was able to walk away from this crash. Absolutely tragic. We do know that the Prime Minister is meeting at that airport now with his top officials, and this is just devastating for the entire country.
Absolutely devastating. We'll have more updates for you from Yahara throughout the next couple of hours or so. Let's turn back to our top story for financial markets worldwide. Oil rising after Israel struck Iranian nuclear facilities. Iran vowing Israel will pay a heavy price, promising a severe response. Joining us now in the commodity market, Bloomberg's Will Kennedy. Will, welcome to the programme, sir. Big rally this morning, up by anywhere between 8 to 9% over the last 30 minutes or so. Let's just start with the supply backdrop for this market, Will. Just how well supplied is the crude market currently?
It is fairly well supplied. We've seen OPEC put more oil into the market this year, a succession of increases of the 400,000 barrels a day. That was faster than people expected, but demand has been relatively strong as well. It's seen to be able to take that supply and trade in the 60s, but clearly this has changed completely the risk premium that people see in the market, and traders are now thinking about what's next and some of the scenarios for Iranian response.
Well, when it comes to Iranian response, Will, they've always threatened to close Hormuz, but they never actually do. Do you think that's on the table this time around?
It would be a dramatic escalation, but it's possible that they may decide a dramatic escalation is required. I think there are two reasons to be cautious on that. One, it would almost certainly drag the US military into the conflict, because I think the US has always made clear that it sees that keeping those straits navigable is a key goal for US foreign policy. And it would also antagonize China, who needs the oil to keep flowing out of the Gulf. So there are reasons to be cautious on that scenario, but there are intermediate scenarios where Iran decides to harass shipping in and out of the Persian Gulf. We see a quarter of oil exports globally go through that narrow waterway, and that's a playbook that their Houthi allies in the Red Sea have used in recent months and years, and that would force up prices, raise the stake for the global economy without that extreme scenario that may draw the US into the conflict. So it's definitely something to watch, but I don't think we should see it as a binary, closed, open thing. There are intermediate scenarios which oil traders will be very focused on.
Well, for the oil market then, is it more important to watch the proxies like the Houthis, and is it actually to watch the regime?
I think both. I think that we could see the regime act in the Persian Gulf. They have naval assets there. They could start seizing tankers, attacking tankers, raising the cost of tankers, forcing tanker owners to wonder whether they want to take their ships into the Gulf, and that would have severe disruptions to oil and shipping markets. I certainly think that's a possibility. We have seen other periods where the navies have had to escort ships in and out of the Persian Gulf. That's perhaps something that we should be thinking about. But I think the other thing that may keep a lid on prices is that clearly, despite recent OPEC increases in production, both the Saudis and the Emiratis have the ability to put many hundreds of thousands, if not millions of barrels of extra oil back into the market if we get an extreme disruption. And they also have the ability to supply some of that oil through routes that don't go through Hormuz, through the Indian Ocean in the case of the UAE, and through the Red Sea in the case of the Saudis.
Big rally this morning. Crude high by anywhere between 8 to 9%. Will, thank you, sir. Will Kennedy there of Bloomberg. Happy to lead our coverage. However, in London, I want to get you an update from the IDF, dropping just moments ago, saying the IRGC Air Force commander was killed in a bunker strike. The latest update from the Israeli Defense Force.
So this is just yet another top individual when it comes to the regime's military forces that was killed. And I think actually this is the most significant piece of information we have overnight. Because when it comes to the nuclear facility, so far the IAEA is saying that maybe they weren't able to penetrate so much into the nuclear facilities. What Israel was able to penetrate and show the vulnerability accountability of the regime is taking out top brass individuals. And this is a very closed circuit of individuals who are close to the Ayatollah. And we just keep seeing reports of more of these people that are now reportedly dead. The IRGC commander, the military chief of staff for that, and also, Jonathan, a number of top scientists that are working on this nuclear program.
I need to spend some time on the potential Iranian response. We can do that now with Stephen Cook, the Senior Fellow for Middle East and Africa Studies at the Council on Foreign Relations. Stephen, welcome to the programme, sir. What a timely opportunity to catch up with you. Stephen, can we start with Iranian defence and military capabilities, how degraded they've been, how degraded they've become, and not just theirs, but also the military capabilities of Iranian proxies as well. What is the current state of play?
Yeah, well, reporting coming out of Iran and Israeli reporting indicates that a tremendous amount of damage has been done to Iran's ability to respond. There are reports of James Bond-like Mossad operations in which they have disabled the ability of the Iranians to launch large numbers of ballistic missiles towards Israel, that they have targeted Iran's air defenses so that Iran is more vulnerable than ever. Thus far, the only thing that the Iranians have been able to muster are a wave of UAV strikes, most of which I believe have been shot down. As far as the proxies go, Hezbollah has said it will not respond to Israel's attacks on Iran. And in fact, the Lebanese government has said it will make sure that Hezbollah does not respond to Israel's attacks on Iran. We haven't yet heard from the Iraqi militias, but in the past, specifically last October, when the Israelis hit Iran previously, the Iraqi militias have said that they weren't interested in retaliation. That leaves the Houthis, and we'll have to see how they respond. But by early accounts, the Israelis have done a very significant amount of damage to Iran's ability to strike effectively. Of course, it's early days. The Iranians may have some tricks up their sleeves, but right now, all the advantage goes to the Israelis, who are once again undertaking attacks against Iran.
Stephen, if it's true that the U.S. and Israel have a tight security relationship, why would Israel choose to act and the United States not?
Well, we don't know for sure whether the United States was not in on this. There is a lot of Israeli reporting suggesting that this was in the last few days were an elaborate deception campaign. But I think in keeping with the president's worldview, Defense Secretary Pete Hegseth said it best before Congress just the other day, in which he said that Prime Minister Netanyahu is going to do what's best for his country and President Trump's going to do what's best for the United States. I think the Israelis' view is that the Iranians in recent weeks have crossed a certain threshold and that they just could not wait. There is a fair amount of Israel-U.S. security coordination, and as these attacks are unfolding, it's likely that the United States provided real-time intelligence to the Israelis. And of course, in retaliation, because Israel is part of CENTCOM, the United States and Israel and other regional partners will cooperate in defense of Israel as a result of that. But it remains to be seen. I think the president's posts on social media this morning would suggest he'd like to have it both ways. And maybe when you're the president of the United States, you get to have it both ways. But I think more needs to be, we need to find out more about the actual U.S. role here.
You just insinuated that you don't think this would hinder the U.S. response in defending Israel. So do you expect the U.S. to come out in full force in Israeli defense when we see Iran's retaliation?
We already see in the CENTCOM area of operations, the Jordanian Air Force is shooting down Iranian drones. And that is in coordination with the United States. So, yes, I do think that the United States will help in the defense of Israel in the event of a kind of massive Iranian response. And I do think that the United States would get involved if the Iranians seek to respond by, for example, closing the Strait of Hormuz or attacking shipping in the Persian Gulf.
We've been talking about for months, actually years, about Iranian enrichment and these breakout periods. Why now, Stephen?
Well, I think the Iranians have been working diligently at this and that their security situation has deteriorated over the course of recent months. I think we should be skeptical about the reports over these many years that Iran was not seeking to weaponize its program and has been diligently working throughout in order to develop weapons capability. I was privy to an open source briefing just recently, which made it clear that the Iranians really have never stopped their efforts to develop nuclear weapons.
So do you think today's attack was all about where they are in terms of their capability when it comes to their nuclear program? Or is there something else Israel knows that we have yet to be briefed on?
Well, I think for the Israelis, a certain threshold had been breached, and they felt that they did not have much time left before the Iranians weaponized. But I think that there's a broader goal here for the Israelis. The way this attack is unfolding is quite similar to what the Israelis did to Hezbollah in the fall of 2024, essentially an effort to decapitate the regime, make it render its ability to respond effectively quite weak, and provide an opportunity for a change in regime. It is the Iranian regime that is the danger, not necessarily Iran or the Iranian military or even the Iran nuclear program. It is the regime and what their intentions are to do with it. If you change the regime, you provide an opportunity for perhaps a more benign government there. An opportunity. This is a very, very risky strategy. But it seems clear based on how the Israelis have attacked the IRGC leadership, the military leadership, and he even reportedly took a shot at the supreme leader himself.
Stephen, I want to follow up on this. What you're saying is really quite important, because what I've heard so far this morning is something quite different, that this was a targeted, limited operation to degrade the military and nuclear capabilities of this country, and that regime change was something bigger, something that they weren't pursuing. If the Iranian regime believes that the Israelis are looking to topple the regime and they view this as the start of an existential threat, how does that shape their response in the coming weeks and months? Because I can tell you from a financial market perspective, a lot of people are thinking about the Strait of Hormuz. And some people would sit here and say, that's the big card, the nuclear option. They wouldn't reach for that. Maybe they look to de-escalate things from here. Are you saying this could play out differently?
Oh, I certainly think that that's the case, and I think that people are missing the point here. Prime Minister Benjamin Netanyahu has for months been talking about the Iranian people, how the Iranian people are suffering under this regime, that a different regime would be better for the Iranian people. And so I think that there is absolutely a broader goal that is here. The Israelis promised, Prime Minister Netanyahu himself promised on October 9th, 2023, to change the Middle East. That doesn't entail limited operations just against nuclear programs. Now, as I said, it's a risky strategy. The Israelis are far away. They are looking to greatly weaken this regime so that it can be more easily toppled. It's not a coincidence, I don't think, that the Israelis called their operation Rising Lion. Take a look at the Shah's regime. Take a look at their flag. There's a lion in the middle of it. So I do think that it may be existential for the Iranians and that they may try to retaliate in very, very significant ways. I think the question is, how much damage has the Israeli military done in last night's waves of attacks that are being undertaken now, waves of attacks that are being contemplated in the coming days, how much damage they've done to the Iranian ability to respond, and whether the Iranians, after all this, will be able to muster the kind of massive response against Israel or American bases around the region. They'll still have a lot of resources at their disposal. Certainly the ability to create chaos in other parts of the region. But will it be this kind of existential regional war that people have been warning about? So far, it doesn't look like it, with Hezbollah saying, we're not involved, quiet from the Iraqi militias. That may unfold in coming days, but the Israelis seem intent on not allowing that to happen.
Deeply thoughtful stuff. Stephen, appreciate your time, sir. Stephen Cook there of the Council on Foreign Relations. It's quite a take there at the end.
It's a little bit different than what everyone is saying, is that they just want to put a blunt and really stop Iran from having this nuclear program. What he is talking about is getting at the heart of actually what we've seen in terms of Israel targeting top military brass, not just the Islamic Revolutionary Guard commander, but also the IDF in the past 20 minutes, talking about the IRGC's Air Force commander. We are talking about top military officials close to the Ayatollah Ayatollah. Stephen Cook there said they also, Jonathan, took a shot potentially at the Ayatollah. This is regime change potentially.
Crude this morning higher by close to 9% now. WTI crude, we're up to 73.96. With an update on all of these stories worldwide, put it together in your Bloomberg brief. Here's Yahara Arnott. Hey, Yahara.
Hi, John. Israel launching another round of attacks on several locations in Iran, including the Natanz nuclear site. The Tasnim news agency reporting the city's airport was under, quote, heavy attack earlier. Iran also vowing lethal retaliation in response to a wave of Israeli airstrikes overnight that took out several top military leaders and damaged their nuclear sites. And we turn to President Trump's reaction to the attacks. He posted on Truth Social just about an hour ago, saying Iran must make a deal before it is too late, adding that he gave Iran chance after chance to make a deal, and they couldn't get it done. The post coming after the U.S. said it knew of the Israeli strikes beforehand, but was not involved. And turning to some company news here, Nippon Steel's planned takeover of U.S. Steel may not proceed if the Japanese company has, quote, insufficient freedom of management. Japan's Nikkei citing an unidentified executive as Nippon continues to push that U.S. Steel becomes wholly owned. Nippon declining to comment when reached by Bloomberg News. That's your Bloomberg Brief. John?
Hey, Yahara, thank you. Appreciate it. Up next on the program, geopolitical risk sparks a flight to safety.
What you're seeing is typically the reaction from not only risk assets, but from treasuries, from gold, so really across the asset classes. You're more likely going to see people fade those geopolitical risk events rather than double down on them.
We'll get you the market take next. We'll catch up with Robert Tipp of PGIM Fixed Income, live from New York City. This is Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you've built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Today's CFOs are reshaping the C-suite. Bloomberg's Chief Future Officer shines a spotlight on these dynamic leaders.
What's the hardest part of being a CFO?
It's hard to come up with that.
It's the vast responsibilities, the need to be engaged in different topics.
It's remembering which audience I'm speaking to and what I can say in that context.
The job is not just being the executive of the finance function, it's being an executive for the company.
I would say it's prioritization.
Complete the sentence. The hardest part of being the CFO is
telling people no. It's hard. It's the right thing to do, but it's always hard.
So being just like a touch of a heartbreaker, basically.
Yeah.
We have a plethora of good opportunities. Some are really, really good, but as we strive for the great ones, sometimes those really, really good ones have to be left behind.
Chief Future Officer, only on Bloomberg. The top names in business are on Bloomberg.
We view the tariff situation as something that will be resolved over the next 6 to 9 months. Even if you end up with a base level of 10%, divide that 10% up 3 ways, it doesn't have a huge impact on inflation. In terms of global growth, it's something the world can absorb.
Nobody covers business like Bloomberg. Bloomberg brings you breaking news 24 hours a day. Powered by more than 3,000 journalists and analysts in more than 100 bureaus across the globe. Bloomberg Television. Context changes everything. Bloomberg loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
Punchy move in crude this morning, up by 8%.
of EMEA iShares fixed income strategy at BlackRock. Good morning.
Good morning, guys.
Nice to see you. I've got this amazing week coming up. It's quiet this morning, but we've got this amazing week coming up in terms of the catalysts that we're watching out for. Is it US inflation? Is it what is happening with these auctions? Is it the trade talks? What are you focusing on in terms of setting the agenda for this week?
Yeah, absolutely. I mean, yes, we do have a week packed of economic data, particularly eyes turn to U.S. markets and the implications for the U.S. bond markets in particular. So the auction, as you mentioned, the inflation. When it comes to kind of the inflation data, we don't expect like a spiraling out. I think inflation is kind of like anchored, obviously, above the Fed.
But it stays sticky, yeah.
It stays sticky. It is above the Fed's target. I think the point around the auction, it is another signpost to see investors' appetite or appreciation of how the U.S. is going to continue to finance itself. But questions around the importance of U.S. bonds within investors' portfolios, I think they're a little bit overstretched in terms of are people abandoning U.S. bonds. I think it's hard to imagine portfolios without U.S. assets. I mean, U.S. bonds is the largest fixed income asset class in the world. However, I am seeing, particularly here in Europe, investors looking to diversify income, particularly with European fixed income, which is actually a really good place to be right now.
Okay, let's just break that out into its kind of component parts. We'll come to Europe in just a moment.
Yeah.
Start in the States. Strong payroll data Friday. The labour market in the States is holding up. You could see sticky inflation coming through in terms of the inflation data we're going to see midweek. Where does that tell you about when we see the first rate cuts coming through from the Fed? Is it much later this year? Is it next year?
Yeah, I think the market is now pricing in 1 to 2 cuts this year, and I think the market has come closer to the view that we've held pretty much for the entire of this year. So I think the market is now pricing in fairly, like the Fed kind of 1 to 2 cuts later this year, and I think the economy is able to wait, and the Fed is in a good spot to kind of wait and see. But what we have seen from kind of investors is really a strong appetite to re-risk into fixed income portfolios. Is not putting us in a position to wait and see in terms of what clients are doing right now.
But with that, a steeper curve. So we're anticipating some Fed cuts, and we're expecting long end bonds to stay reasonably where they are now.
Exactly. So when it comes to kind of longer term bonds, like we have been for a long time being underweight longer dated US Treasuries. Having said that, it seems that 4.5-5% is like a resistance level for US Treasuries. But having said that, back in May, when kind of the 30-year went above 5%, we've seen buyers kind of buying the dip. We've seen some of the iShares flagship US Treasury ETFs seeing record flows on that day. So I do want to give you a balanced argument. We're underweight the long end of the curve, but there are people out there that they still see value in US Treasuries.
At the right price.
At the right price, exactly. We do definitely prefer to be staying short end belly of the curve, and of course international fixed income.
In terms of what is happening with the fold in the trade talks, how are you thinking about the trade talks this week? How high are your expectations for this providing a catalyst?
I mean, I don't think we're going to see a big kind of like reversal to what we already know this week. Of course, uncertainty remains. We do have like a series of events for the rest of the summer. So trade talks does remain up in the agenda. But I think somehow we have kind of like got used to kind of, navigate the uncertainty around trade talks. And that has been evident through bond ETF flows in May. That has been a record, the second largest month in history, where people have come back into the market, indicating that, some of the kind of slowdown of the headlines from what was April 2nd to now, it has created more of a kind of a calm environment that we're not heading into a significant slowdown in the world economy.
We're going to watch that space very carefully. Vasiliki Pahatoridi, head of EMEA iShares fixed income strategy at BlackRock, joining us here in the studio. I want to take you down to West London, to Olympia, because that is where we currently find the British Prime Minister. Keir Starmer is making the opening address at Tech Week. Let's take a listen to what he has to say.
Going to do so much, and every time you say over 5 years or 10 years, everybody says to me, shorten that, Keir. It's going to be more like 5 years and 3 years that we're going to bring about great change in so many aspects of our life, whether that's in health, where I've seen for myself the incredible contribution that tech and AI can make. Standing in a hospital up in the Midlands, talking to consultants who deal with strokes, and they showed me the equipment, the techniques that they are using AI to isolate for stroke victims exactly where the clot is in the brain in a microsecond of the time it would have taken otherwise, brilliantly saving people's lives in that particular occasion. And shortly after that, I had an incident where I was being shown AI and stethoscopes working together to predict any problems someone might have. So whether it's health or other sectors, it's hugely transformative what can be done here. Last Monday, in fact, I was standing in Scotland launching the Strategic Defence Review of the government. This was a review that I commissioned soon after we came into power to tell me what are the risks that we face as a country in this new era, what are the challenges, what are our capabilities, and how do we make sure that as we go forward, our capabilities match the risks and the challenges that we face as a country. And in that, tech and AI were absolutely central because, as you will perhaps have seen over the last 3 years or more, during this awful conflict in Ukraine, I've been back to Ukraine on a number of occasions in that 3-year period to have in-depth conversations with President Zelensky to make sure that our support is in the right place. But I was really struck the trip before last that I did, this was probably about 6 or 7 weeks ago, the extent to which technology and AI was now having a direct impact in that conflict was huge. In 3 years of conflict, the way in which that war was being fought had changed profoundly. And therefore, what I wanted hardwired into our defence review was a real sense of how AI and tech would be driving our defence of the future. There are so many examples across government. I've set the challenge to all of my teams to show me how they can use AI not just in the output of government, not just in the partnership with yourselves and others and the delivery of services, but also in the very way that we do government. How do we transform what we do? And there are so many examples of that. I spoke to a social worker in Downing Street at one of our receptions, and she explained to me with a smile on her face just how AI is slashing her paperwork and her caseload. And she showed and talked me through the way in which she's now doing her work. And what she said to me was that this was helping her transform the work that she did because she could concentrate on the human element of it. She could use AI and tech to help her with the parts that could be done more quickly using tech and AI, and that made her more human. And from that, I've always said, AI and tech makes us more human, which sounds an odd thing to say, but it's true. And we need to say it because, look, some people out there are sceptical. They do worry about AI taking their job. And I know for an audience like this is a debate that's been had perhaps many times, and we need to push past it. But for people listening to us, they worry about, will it make their lives more complicated? And even for businesses who get it, the pace of change can feel relentless. And I know you all get that and understand that, but when it comes to harnessing the power of this technology, I believe that the way we work through this together is critical. And that means a partnership. And partnership is at the heart of everything that we do in government. Working with you, you are the entrepreneurs who will drive this country forward. Our job as partners is to create the best possible conditions for you to succeed. And that's why events like this, conversations that we have in the margins, are so important, because we can only create the right conditions for you if we're having that conversation about what we're doing. You're able to put your fingerprints on what you're doing. Because, just look at the raw facts. This industry, this sector, supports over 2 million jobs. That's incredible. Or take this statistic. In 2023, Our AI sector grew 30 times faster than the rest of the economy. 30 times faster. That is incredible, particularly when we're driving for economic growth. So this is about what we can achieve. It's about, to me, who we are as a nation. What signal do we want to send to the rest of the world? And the signal I want to send is this: a Britain that once again, after years of chaos, is a stable partner for investors, that believes the future should be shaped by our democratic values, and that in this volatile world is unequivocally, unashamedly, defiantly even, open for business. And I think and hope you can see that in our approach to trade, in the new deals that we've done just in the last few months, determined as we are to create new markets, whether that's in India, in the US or Europe, all areas where we've made progress recently. You can see it, I hope, in our openness to investment as well. And on that front, I am really pleased to welcome what I see as yet another vote of confidence in Britain today, with the announcement that Liquidity will base their European headquarters right here in London. And that's a 1.5... Thank you. That is a £1.5 billion investment into our economy, which means better access to finance for entrepreneurs right across the country. It's a vote of confidence in our AI Opportunities Action Plan as well. And we put that plan out at the beginning of the year. We're really proud of it. 50 recommendations, all of them accepted by the government. And at the heart of it is partnership in action. And it shows our ambition that we are determined to be the best state partner for tech entrepreneurs anywhere in the world. That's the bar, that's the ambition that I've set for my government. And so on that front, I can announce today also that we're committing an extra £1 billion worth of funding to scale up our compute power by a factor of 20. Now, you know how important that is. That's a huge increase. A huge increase in the size and power of Britain's AI engine, which means, of course, in this global race, we can be an AI maker and not an AI taker. And more importantly, that we have the digital infrastructure that we need to make sure AI improves our public services, because we do have a defining mission on that in the plan. A responsibility, if you like, to harness this unprecedented opportunity and to use it to improve the lives of working people. And this is a shared mission. We're a mission-driven government, but this is a shared mission. Because that social fear that I was talking about a little moment ago, trust me, I think that is the challenge for adoption. I think it's a far greater challenge than the regulatory barrier, although, as you know, that can be quite a challenge. But it is an area where the government can help, where we can do our bit in this partnership. So if we take planning, for example, which is a huge priority for this government, we are going to build more homes, more labs, more data centres. And we're going to do it much, much more quickly. So our planning and infrastructure bill going through Parliament at the moment is a real game changer. And each of you in this room will know just how important it is to change our rules on planning and infrastructure and the regulatory environment. And where that can then drive growth in building of homes, what a difference that will make. Again, the human that sits there with the tech and the AI, because the security of having an affordable home is hugely important. I come from a working class background, and at times we struggled as a family to make ends meet, but we owned our own home. And that gave me a sense of security, a base camp, if you like, on which I could build my life, my opportunities, and my aspiration. And I want that to be there for everyone in the country, that base camp. And AI can help on this. And this is how we explain and lead people down this transformative path of AI. And in that way, and pushing forward, we have developed a powerful new tool. And we've done this in-house. I'm really proud of this, that as a government, we've taken on the challenge and developed in-house just to prove that governments can innovate. We use that word all the time, and some people don't associate it with government. We've developed what we call Extract. And this is being trialled in councils in Exeter, Westminster, Nuneaton, and Bedworth. And what it does is it takes old handwritten planning documents and puts them into digital form in seconds. So jobs that would otherwise have taken hours and hours done in seconds. 100 planning records a day. And the usual, by the way, the average up till now is 5. So you can see it's a huge productivity boost. And so we want to roll that out across the country. And that doesn't just show that government can innovate, it also means faster planning decisions, which I think will come as relief to many people in this room and beyond, both in AI and growth, frankly, in any business that is seeking to grow. And of course, it's money saved for councils, so they can spend their money on other things, and it turns into more growth and more investment. But most of all, it speeds up the future that we need. AI innovation making a difference for working people. And the same, of course, is true across the public realm. We're looking at how can AI speed up discharges from hospitals, hugely important. We have long waiting lists in our hospitals are busy, and one of the problems is how do we get people out the back door more quickly. AI can help with that. Same with the asylum backlog. How can AI and tech help us deal with that more quickly? Or teachers, helping them personalise the lessons for their pupils. Again, using their time to good endeavour, making them more human, giving that interaction so that every child gets the best possible chance in life. And what a difference a good teacher, personalising what they do, can make to so many children. So in every case, we can show AI innovation making a difference for working people. But if we're truly to succeed in this mission, then one of the biggest barriers is, of course, skills. And you will all have debated this many, many times. There isn't a conversation about AI and tech and growth and investment and business that doesn't in the end come back to this question of skills, a key concern in any business in technology, actually any business pretty well across the country. And also one of the great worries for working people. It's the same for any parent. Always your number one thought is, how will this affect my children? What does it mean for their future? So today, I am really delighted to announce what is a step change in how we train homegrown talent for the AI age. A partnership with 11 major companies to train 7.5 million workers in AI by 2030. And we also have a commitment from NVIDIA to partner on new AI talent pipeline. And Jensen is here with us. We'll be in conversation just now. We're so grateful for that partnership. And that allows us to expand their lab in Bristol. And that will make a huge difference to opportunity and jobs in the Southwest and beyond. And in the spirit of partnership, we're also going to bring the full powers of government to bear with the new Tech First training programme. That's up to 1 million young people trained in tech skills that will be so crucial for their future. That's a £185 million investment embedding AI right through our education system, starting in our secondary schools with subjects like computer science. At universities, a new scholarship programme for high-flying students, supporting the best and brightest postgrads so they can focus their research on the next frontier. So from school all the way through. And on top of that, extra support for small businesses and entrepreneurs, hugely important, so they can recruit the technology skills that they need. And this, trust me, is a package I think that will make a massive difference to the aspirations of working people. And at the end of the day, that is what this must be about. I want young people in the poorer parts of my constituency And I'm thinking in particular of a place called Somerstown. This is between Euston and King's Cross. King's Cross, where there's so much of that tech, entrepreneur, AI brilliance. There are children in Somerstown, just literally a stone's throw away, who look out of their classroom windows and don't necessarily see that they can make the journey that that stone would take if they threw it at King's Cross. And I want them to look out at the technology sector and feel, yes, I can be part of that success. This could belong to me. And so this work we're doing with schools, with universities, with colleges is so important to make them feel they've got a role, they've got an aspiration, they've got a future. And you can't aspire to do something unless you can see it and feel it and understand what it is. And in this country, the technology we build needs to be built in that way. And whilst I'm on Somerstown, I do just want to give a short example of that and praise the tech sector for investing in Somerstown, because I've thrown this challenge out to them many, many times to say, how do you make the children in the poorest part of my constituency aspire to work in your sector? And Google AI have opened a campus there in Somerstown, taken up that challenge. It is tremendous. I went there for the opening. It's right next to the secondary school where I envisaged in my mind's eye those students who wouldn't necessarily see their future in AI, and now that campus is right next to their school, so they can do those lessons, they can go there, they can see it every day. A really good example, and thank you to the tech sector for stepping up to that challenge. But now we need to go further. By the end of this Parliament, we should be able to look every parent in the eye in every region.
The British Prime Minister speaking at Tech Week, Keir Starmer down in West London. We will return to that conversation in just a moment. He is going to be sitting down with the NVIDIA CEO, Jensen Huang, who is in the front of that audience. Poppy Gustafsson, the UK's investment minister and former CEO of cybersecurity firm Darktrace, is going to be joining him. If you would like to carry on listening to the Prime Minister, you can do so. He is available on Live Go on your Bloomberg terminal. But let's turn our attention now to the wider picture for the UK and the AI picture that it is looking to develop. Matt Bloxham joins us now. Matt, the Prime Minister just wrapping up, perfect timing. In terms of the challenge he faces in attracting investment into the UK, what is it?
That there's lots of competing parts of the world where that investment is actually going. I think we heard NVIDIA talk about this European road show they're doing, and I think from an NVIDIA perspective, if you're a shareholder in NVIDIA, you're looking for countries like the UK to invest their money into AI, which will ultimately flow to NVIDIA. And the other way, the UK government wants NVIDIA to put money in. And I think both are going to be a bit disappointed by what we hear today, I think.
OK, a bit disappointed. Well, let's listen in and find out whether or not we are going to be disappointed. Let's take you back to West London, back to Olympia. Poppy Gustafsson, the investment minister, is speaking, introducing Jensen Huang, and with the Prime Minister sitting next to her. Let's listen in.
In their everyday lives.
Well, I think this is a really important issue, and I know Jensen and I were discussing this earlier on today. Sometimes in these audiences, we have this conversation about what does it mean for people in their living room, in their kitchen, and we're concerned about how they see it, because your stance on AI and tech, I think, really matters. And I always ask myself, which of the two types are you? Are you someone who leans in and sees these fantastic opportunities? Or are you someone who sort of leans out and says, well, this is a big risk, I'm not so sure? I think we need to lean in. I think this is brilliant, transformative across. I mean, I've mentioned health because in a way that, for me, always brings it alive for working people who do want the security in relation to their health. But also the examples of the teachers and the social care workers, overburdened perhaps at the moment, who want to use the human bit of what they do to better effect, and therefore can use AI and tech to do it, or in the defence sector. But what I said just now is really important, because very many people say to me in the conversations I have about AI and tech, It's the regulatory environment here. It's your planning, your infrastructure, the regulatory bodies that are holding us back. And that is certainly true. And the more I've tried to get stuff done as government, the more I've shared your frustration, by the way. But I do think that there's this almost cultural question, which is how do we lead people on this path? This change is going to happen. It is going to transform our lives. We're going to look back and see this is a hugely important era. I genuinely believe that our job, our joint jobs, by the way, because I think governments can't do this alone, we have to do it with you, is to lead in this period and to show people the huge opportunity and how it will bring more security for their lives. And we must always step up to that, but we can only do it in partnership. I don't think a government can do it on its own. I don't think entrepreneurs can do it on their own. I think it has to be done together. And it's for everybody who wants to see AI and tech go as far as we all do, we have to bear that responsibility, I think. But Jensen, I know we were just thrashing this about half an hour or so ago.
Well, first of all, I want to say that you hosted a terrific event yesterday. Brought together the AI tech entrepreneurs, many that I work with. So many from your cabinet were there, and urging them, supporting them, encouraging them, showing them your interest, your knowledge of the space, and your commitment to helping them. And I just thought it was a fantastic day, and it was great to see Demis there and Eric Schmidt there, my friends, and Alex from Wave and Synthesia and 11 Labs and River Lane, and there's just so many companies we work with here in the UK, and it's really exciting to see your commitment to them. This is an extraordinary moment. You're absolutely right. We have to lean in. It's an extraordinary moment. There's no question that AI is incredible technology.
Yeah.
And everybody talks about how it can understand information of almost any kinds. It can generate information of almost any kinds. AI can now reason and think and solve problems and use tools. And we know for a fact that we're going to be more productive. We know for a fact that we're going to be more secure because AI is smart. And because AI is smart, it's going to be better cybersecurity agents for us. We know that we'll be safer because AI is such incredibly smart software. It'll keep cars more safe. And so we know these things. But the thing that is quite extraordinary, and it's an incredible opportunity for the UK, is that AI is both a technology, but it is also an infrastructure. It's an infrastructure because it affects so many industries simultaneously. And it affects, of course, healthcare and government and education and manufacturing and financial services. Because this technology is so broad and so transformative to every single industry, it will be considered infrastructure, just as electricity was infrastructure, just as information, connectivity that came about because of the internet is infrastructure. Now we're going to have a new infrastructure, and this new infrastructure is called artificial intelligence. And it's vital that we invest in this infrastructure here in the UK, and with your support, we can do that.
I think just changing the language and the way we say it is hugely important in terms of the commitment that we make and how we work together. And as I said a few moments ago, the speed at which the change is going to happen, and persuading ourselves that the timeframes we would normally expect for pretty extraordinary change just have to be truncated all of the time. And you can see it right before your eyes in what we're able to do as a government. How we're looking across all of the functions of government in each of the departments. We've got Peter Kyle here, who's the Secretary of State, who's charged not with just running his department, but looking across all the departments. He's I've asked him to go into every single department in government and take up the challenge with them of how can you use AI and tech to transform what you were doing, as well as the delivery at the other end. And I think that's a sort of statement of intent as the way that we want to operate.
So, and I love hearing about how we're sort of really driving that adoption. And we talked a little bit about that sort of investment in terms of the infrastructure that we need and the opportunity that you have in the UK. But how are we thinking about the investment in this sort of skills piece? And could you talk a little bit about how we're creating the skills that will be needed?
Yeah, I said a bit about this in the words just a moment ago, because I think the skills challenge operates at a number of different levels. There's obviously the sort of basic question, which is, can the sector get the skills it needs in the time it needs them? And that's why what we've been able to announce today is so important in terms of the sheer number of people that we can work with across businesses of all different sizes. And this is often more of a struggle, I think, for smaller businesses in terms of getting the right skills in the right place. So what we've set out today in relation to the 7.5 million people who will be trained from different backgrounds and different jobs in AI, hugely important. I'm personally very excited about the initiative in relation to our schools and universities and postgrads, because I think that training young people earlier on in AI and tech means that they will obviously be better skilled as they come into work, but also they'll be much better at it than us. I've got a 16-year-old boy and a 14-year-old girl, and they already understand AI and tech in a way which is really difficult to even have conceived of a decade ago. And to get them learning at school, I think will give them that spark. I'm a really big believer, this is my Somerstown school story, that you can't, often we ask young people, what do you want to do when you grow up, or what do you want to do, for a living or a career or whatever it may be. I genuinely think it's hard for young people to answer that question if they haven't been exposed to things like AI and tech, because you can't aspire to do something if you don't really know what it is, or it's mysterious and you think it's for other people, not for me. That's one of the biggest inhibitors for me in life, by the way, is children who think that's for other children, other young people, it's not really for me. So by doing what we're doing in schools, we're opening this out, not just for businesses and the sector to have the best talent coming in the pipeline, but for young people to be the brilliant next generation. And the speed it's going, we won't get to a next generation. That'll be 5 years and they will already know far more than we do. But that is really exciting in its own right.
You're absolutely right, Prime Minister. In fact, I would say, and this is a very important concept, AI is the great equalizer. And let me explain why. For the last 50 years, 60 years, computer science became a field of science. And it was available to tens of millions of people out of billions of people. And this technology was hard to use. We have to learn programming languages. We have to architect it. We have to design these computers that are very complicated. And so tens of millions of people were able to benefit from this particular field. But now, all of a sudden, there's a new programming language. This new programming language is called human. Most people don't know C++, very few people know Python, and everybody, as you know, knows human. And the way you program a computer today, to ask the computer to do something for you, even write a program, generate images, write a poem, just ask it nicely. And the thing that's really quite amazing is the way you program an AI is like the way you program a person. You say, you are an incredible poet. You are deeply steeped in Shakespeare, and I would like you to write a poem to describe today's keynote. And without very much effort, this AI would help you generate such a wonderful poem. And when it generates it for you, you could say, I feel like you could do even better. And it would go off and think about it, and it would come back and say, in fact, I can do better. And it does do a better job. Yeah. And so this way of interacting with computers, I think, is something that almost anybody can do. And I would just encourage everybody to engage it. And just as the Prime Minister said a second ago, almost every children is already doing that themselves naturally. And this is going to be transformative.
I think it's such an interesting way of looking at it in terms of that skepticism some people have, or people are very, it's human nature almost in terms of change. But as an equalizer and as a human equalizer, that means it can operate on different levels for different people. So I think it's a great way of looking at it.
Anybody can learn how to program an AI.
I find it incredible that the children of today, like when they become grandparents and they reflect back, the earliest, most antiquated piece of the technology that they could possibly imagine is a technology that we are so excited about today. And I love that sort of pace of change and the sort of skills as we think about that transition.
I think the other bit on skills, just before I forget it, is being clear that here in the United Kingdom, we want to attract the best talent in the world in here at that level. And I think it's really important that that's a message we're really clear about, particularly just at the moment. And so that's a really important part of Tech Week as well for me.
So let me draw on that piece a little bit more. So if we think about AI and we think about building all of this great infrastructure that we'll need to support the next generation of AI companies, something that sort of Peter Kyle and I get very excited about is you can't just build it, you've got to then also use it. And how do we create an AI ecosystem, and how do we drive the biggest impact from the opportunity that AI presents here within the UK?
Prime Minister and I were talking yesterday, and I used this word, and if you don't mind, I'd like to use it again. UK is in a Goldilocks circumstance. In fact, UK is singular. In any other region, it's singular in this condition I'm about to describe. UK has one of the richest AI communities anywhere on the planet. The deepest thinkers, the best universities, Oxford, Cambridge, Imperial College, amazing startups, DeepMind, I mentioned Wave and Synthesia, and 11 Labs, and incredible thinkers in computer science, really, really excellent digital biology. Of course, the discovery of DNA was here. Incredible, incredible research community. The second is the third largest AI venture capital investment anywhere in the world. The third largest, of course, the largest of the two, United States and China, is fairly obvious. But the UK is the largest AI investment area anywhere else in the world. And so between these two ideas that you're rich with great computer scientists, it's a fantastic place for VCs to invest, the ecosystem is really perfect for takeoff. It's just missing one thing. It is surprising, this is the largest AI ecosystem in the world without its own infrastructure, which is the reason why we're talking about it so much.
Yeah.
Which is the reason why Prime Minister's announcement of investing in computing, 20 times more computing, is such a big deal. If you were a particle physicist, you need a linear accelerator. If you are astronomer, you need a radio telescope. And so each one of these fields of science needs its own instrument. If you're in the world of AI, you do machine learning. You can't do machine learning without a machine. Yeah. And so the ability to build these AI supercomputers here in the UK will naturally attract more startups. It will naturally enable all of the rich ecosystem of researchers here to be able to do their life's work. And I think it's just such an incredible place to invest. I'm going to invest here, as you know, many in the local community. The UK is such a great place to invest because of all the things that I've just said. We're going to start our AI lab that you mentioned, Prime Minister, and we're going to partner with UK to upskill the ecosystem of developers into the world of AI. We're going to invest in helping start off the AI ecosystem of infrastructure. And once we get the flywheel going, then research, startups, businesses, more consumption of infrastructure. Infrastructure enables more research, more breakthroughs, more companies. That flywheel will start taking off. It's already quite large, but we just got to get that flywheel going.
No, I mean, firstly, the confidence it gives when you explain it that way is huge from our point of view. We're really pleased to be seen that way, and thank you so much for that vote of confidence in the investment. But to the wider group here, I think this question of the ecosystem, us showcasing what we have, it's very un-British to sort of showcase what you have, but we need to showcase what we have, but also to have this as a two-way conversation, because that ecosystem isn't something that, in a way, the government has to understand and sit on a platform and sort of say to you. It's something that is two-way. Almost everything we had in our action plan that we produced in January of this year was as a result of conversations with people in this room and beyond this room. Nothing was plucked from the sky. It was all part of a conversation. And that, for me, is the way in which we do partnership. Partnership isn't two people or two bodies, two entities trying to do the same thing. A partnership is where two or more bodies come together, understanding how they complement each other, how they actually do different things to achieve something bigger together. And therefore, this week, in addition to the sessions that we have like this, there are the opportunities, which I want everyone in this room to take, to give us your views on the ecosystem, on the place, on the data centres, on what we're doing with capital, on the skills piece, because that way you can put your fingerprints on what we're doing. That way we can have the many conversations. And I want you to feel that this is your opportunity to talk to all of us, including me. And we had really good discussions yesterday. These discussions, first-hand discussions, are really important to me and to Peter Kyle and to the whole of the Cabinet, because they are our opportunity to have a conversation at this level about what works, what doesn't work, things that we can tweak and do differently, and to hear firsthand what the attributes are in this country we should be making more of, or where there's that gap that we should be seeking to fill. And so I see London Tech Week not as a one-off staged event, but as a part of an ongoing conversation. And I want everybody to feel encouraged to talk to me. Peter is here. And if you can't get hold of us in one of these sessions, just make sure you're in touch with my office. Varun is here. I don't know where he is in the audience. His door in number 10 is literally about 10 yards from my door. That is how close we are working on AI and tech. So please take that opportunity, because we will do a better job if we work in that partnership with you. What you see in terms of policy and output from the government will be better if it's got your fingerprints on it. And so please take that opportunity. And that's why we had a really great discussion yesterday.
Well, I'm just excited about London Tech Week. I'll make this prediction. London Tech Week. This is
This is an iHeart podcast.
Today we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager.
And I'm Lisa Mateo.
Now, Lisa, these major moves in global markets follow Israel's waves of attacks overnight against Iran's nuclear program, targeting nuclear scientists and generals, killing a number of high-ranking military officials in Iran. Israeli Prime Minister Benjamin Netanyahu announced the airstrikes in a message overnight.
Israel will never allow those who call for our annihilation to develop the means to achieve that goal. Tonight, Israel backs those words with action. We struck at the heart of Iran's nuclear enrichment program. We struck at the heart of Iran's nuclear weaponization program. We targeted Iran's main enrichment facility in Natanz. We targeted Iran's leading nuclear scientists working on the Iranian bomb. We also struck at the heart of Iran's ballistic missile program.
Israeli Prime Minister Benjamin Netanyahu said the strikes will continue for as many days as it takes to remove this threat. Israeli Defense Minister Israel Katz said he declared a state of emergency after what he described as a preemptive strike against Iran.
Well, now, Nathan, comes a response from Iran. Israel says Iran has launched over 100 drones toward Israel and that their air defense systems are responding. In a televised address, Iran's armed forces spokesperson said Israel and the U.S. will receive a, quote, harsh blow. Tehran University professor Mohammad Marandi says Iran has no other option.
The only way forward is to make sure that the Israeli regime regrets attacking Iran, Iranians, and infrastructure that is legitimate and which is monitored regularly by the International Atomic Energy Agency.
Professor Mohammad Marandi at Tehran University. Iranian state media say the strikes killed the head of Iran's Revolutionary Guard Corps and the military's chief of staff. Israel's defense minister says most of the Guards Corps Air Force senior command was killed in a strike on their underground bunker.
Elisa, hours before the attack, President Trump said he hoped Israel would not strike Iran.
Well, I don't want to say imminent, but it looks like it's something that could very well happen. Look, it's very simple, not complicated. Iran cannot have a nuclear weapon. Other than that, I want them to be successful. I want them to be tremendous. We'll help them be successful. We'll trade with them. We'll do whatever is necessary.
And this morning in a social media post, President Trump wrote, quote, I gave Iran chance after chance to make a deal, but he said they couldn't get it done. He says he told them it would be much worse than anything they know. He added that Iran must make a deal before there is nothing left. In his words, quote, there is still time to make this slaughter, with the next already planned attacks being even more brutal, come to an end, end quote.
Well, reaction around the world, Nathan, pouring into this escalation in Middle East tensions. Former NATO Supreme Allied Commander in Europe, Wesley Clark, says Israel has forced America's hand.
President Trump does not want a war. He said that. But also he does not want Iran to have nuclear weapons. So I think Prime Minister Netanyahu has taken the decision away from President Trump at this point.
Retired General Wesley Clark speaking to Bloomberg overnight. Now, the strikes by Israel come after the U.S. ordered some staff to leave its embassy in Baghdad and authorized families of military service members to move out of the Middle East.
And Lisa, we are seeing immediate major moves in the markets following the attacks. At one point, oil surged 13%. Right now, it is up nearly 9%. Defense stocks on the move this morning as well. Shares of Lockheed Martin up more than 4%. Northrop Grumman up 2%, and oil-related stocks are rising as well. Halliburton, ConocoPhillips, Schlumberger, all up at least 4%.
Well, while we continue to monitor the situation in the Middle East and the markets, let's move now to the latest on the anti-deportation protests in Los Angeles. The situation in L.A. a bit calmer now. This is after 3 nights of curfews in the downtown area where demonstrators had clashed with police. Last night, California Governor Gavin Newsom touted a legal victory in his fight with President Trump over National Guard deployments in the city.
Courts have ruled on the Guard. They will be back under my command, and he'll be relieved. Donald Trump will be relieved of his command at noon tomorrow.
That comment from Governor Gavin Newsom may have come too soon, though. Now a federal appeals court is putting that judge's order on hold and allowing the Trump administration to keep using the military to deal with the protests. Another hearing on the case has been scheduled for Tuesday.
In India, Lisa, investigators continue to search the site of yesterday's Air India plane crash. Prime Minister Narendra Modi met with the lone survivor of the crash that killed 241 people on board, along with several others on the ground. The London-bound Boeing 787 Dreamliner struck a medical college hostel when it fell into a residential area of northwest India just minutes after takeoff. Here's Air India CEO Campbell Wilson.
I would like to express our deep sorrow about this event. This is a difficult day for all of us at Air India, and our efforts now are focused entirely on the needs of our passengers, crew members, their families, and loved ones.
Air India CEO Campbell Wilson. Now, local media say at least one of the Boeing's black boxes has been found, though it's not clear whether it's the flight data or cockpit voice recorder. Time now for our Bloomberg Sports Update, and for that, we bring in John Stashower.
A wild Game 4 to the Stanley Cup Final. Florida Panthers had a 3-0 lead in the second period. Back came the Edmonton Oilers. They led 4-3 in the final minute of regulation. Sam Reinhart tied the game for Florida, but then Leon Draisaitl with his fourth overtime goal of the playoffs. Edmonton won 5-4. The series is tied at 2. J.J. Spahn with a 4-under-66 bogey-free. He leads the U.S. Open at Oakmont by one shot. A struggling first round for Scottie Scheffler. That's your Bloomberg Sports Update.
Thanks, John. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager.
I'm Lisa Mateo, and this is Bloomberg.
Remember
Very exciting times across the wealth management space in Asia, massive market, obviously. India, of course, growing, ready for a quantum jump, so to speak. Sunil, if I may start with you. You've been observing the market and, in fact, participating for over 3 decades now. How have you seen the Indian market evolve so far?
Yeah, I think India is getting even excited and very excited day by day. As they say, AI is a moment. Indian economy is a moment for the world at large. It is going to be the world's growth engine. And if you look at India, the key structural changes which actually make India really a talk of the town is Indians have started understanding how to invest their savings. India is a savings economy. India is actually 27-28% of the GDP is the savings. Indians have traditionally been investing into real assets and gold, which has dramatically changed. And that has changed to that extent where Indian individuals, Indian HNIs, ultra HNIs, and the Indian diaspora become the largest contingent in the last 5 years in Indian capital market. At ASK, we believe sun, moon, and that we only believe data. So I would like to give data because data doesn't lie. Look at the market. Indian market has moved from 1.2 trillion US dollar to 5 trillion US dollar in the last 10 years time. The resultant output is the mutual fund, which is very retail portfolio, has actually had moved from 120 billion US dollar to 800 billion US dollar, which is like 6x. And it's grown at 20%. Within the mutual fund, if you look at the equities, which has actually moved from 60 billion US dollar to 360 billion US dollar, which is again 6x in the last 10 years time. And the most interesting is the alternative investment fund, the private market, has moved from barely 3 billion US dollar to 160 billion US dollar. This is like a massive private investing growth India has seen. And I think this all indicates that Indian economy and Indian consumer actually have got asset allocation right. And that's where the India story actually has been, is actually doing what it is reflecting into Indian economy, because Indian economy, which is growing at 10-11% nominal GDP growth, 7% real growth, 4% inflation, 10-11% nominal growth, the asset and wealth management industry is actually growing double the size of the nominal GDP growth of the country. So last 10 years actually have been given to the regulators to bring in the regulation which is probably friendlier for investment, It is friendlier to the investors for protection point of view. It is more transparent and disclosure focused, which is the need for any investor, local or global. And I think that shift is structural shift. The last one, the financialization of saving, is what India story is all about. We have $1 billion customers plus having bank account, and as small as 20-cent transaction without any cost, you can do it from a mobile to other person or other vendor, which actually has changed the whole India's way of transacting with each other, investing with each other. The most important here, and just to give you one more data point, whatever Visa does, the transaction for the year, India's unified payment system does it in 1 month. You can understand the scale of financialization of savings, which means a lot to the India for consumption, for investment, and for lifestyle. That's the change we have seen.
Thank you, Sunil. Gautami, if I could turn to you at this point, indeed massive financialization happening on an interoperable digitization platform. But the Indian market is also very fragmented. You have the main hubs, Delhi, of course, Bombay, but you're seeing massive growth coming from the tier 1, tier 2 cities, the smaller cities, so to speak. You also have a massive pool of HNIs growing there. That's really the biggest growth opportunity in the country. How does a firm really build scale in India to realize the potential of that very fragmented but very large market?
Good morning, everybody. I wanted to tell you first that I represent Kotak Mahindra Bank, which is the 3rd largest private sector bank in India. Otherwise, the context will not be clear. We cater to retail customers, wholesale banking customers, so corporates, and then also to the high net worth, ultra high net worth individual customers. Because we are a banking platform, we are able to cater to the entire length and breadth customers in India. To answer your question, Janet, most importantly, we have a branch presence across India because of the banking network, and thus we are able to cater to tier 2 and tier 3, that is the next in level cities in India. But what becomes most important for us is, are we going to be able to build enough branches across the country to be able to reach? The answer probably is no, because you will have a cost implication because of that. So what we have done is for the retail customers, and I'm bringing that point because it becomes relevant here. For the retail customers, we have created technology platforms where an ability to onboard on the banking platform is done digitally, an ability to invest through our technology platform is done digitally. So the involvement of a human element to that extent is reduced, and thus very critical to achieve scale. And scale can only be achieved if you're using technology by your side. So that's our retail strategy. We feel that this segment is going to exponentially grow as well in India, as we heard from Sunil, the kind of numbers that we are looking at. Then you come to the private banking or the UHNI segment that we all deal with. Now this segment again is growing exponentially because of the fact that one, there are a lot of IPOs which are coming up. Second, because there's a lot of sales which are happening of India Inc. And that happens because you have reached immense valuations and you want to cash out. It also happens because of the generational shift which is happening in India and probably in any country. You see the next generation is not necessarily interested in running the businesses which their parents or their grandparents created. And thus you see a lot of sale of businesses which happen, and thus the growth in the wealth segment is again big. For that segment, we are very clear, it's going to be a model which is a combination of tech and human intervention. If I am speaking to our ultra high net worth individuals, he's not going to be extremely happy looking at the reports that we submit on a mobile app. He will need interactions. And this is an assumption or a belief that he will need interactions. We have to go to the levels that AI is going to probably question all our jobs, okay? But having said that, with innovation, with proper products that we kind of curate for these set of clients, by ensuring that we are able to add value by intervention of a human angle in it, we are trying to use both the models, the digital model and the human model, to ensure that we are able to reach the customers at length. The strategy that we have created, Janet, at Kotak is we've segmentized our clients. Became very important because each client needs basis their segments are very different. So today as we speak, we have a professional segment which caters to the professional clients, chartered accountants, lawyers, doctors, which are growing a lot in India. The ultra high net worth individuals segment and the high net worth individual segments. Additionally, we also have a segment which is called the non-resident Indian segment. We see a lot of interest of people who have left India 2 decades back or 3 decades back, living in US, Canada, UAE, Singapore, Hong Kong, who are interested in Indian markets, who understand the Indian markets, who have families and friends in India who've made tons of money in the Indian markets. And thus the interest that is there in India is humongous. We know of ASK here who have funds set up outside India to get money into India. We have Kotak funds set out outside India to get money into India. So this segment is again growing. So we are looking at it segment-wise to ensure that we have products which will cater to every segment, and we make a seamless entry into India for NRIs and people in India. We are trying to segment and create niche practices for catering to each segment.
Thank you, Gautami. Divij. Gautami, of course, massive wealth management services with Kotak. You have a very influential advisory service. And you speak to all of the client ranges really that Gautami spoke about, both in India and outside. What are the key questions that your clients are asking you? What are the problems they're trying to solve within the Indian market?
Yes, absolutely. And I think for a context, so I work with a boutique investment advisory firm. So our main client base is in the HNI and the ultra high net worth segment. I predominantly look after the latter as well as family offices. So again, very high touch segment. The landscape that has been very well articulated by Sunil in terms of the macro and the structural changes that you're seeing in India is something that we're facing. And we see a big shift away from, tier 1 cities, the major metros, Delhi, Bombay, as you alluded to, remain extremely important, but there is a big development of wealth that's happening all across the country. Tier 2 cities, tier 3 cities, and for us it's a very exciting opportunity. The questions that we see families coming to us with, irrespective of where they're from, and as you know, within the high net worth and the ultra high net worth segment, there is a commonality in terms of problem statements that they come to us with. The way Indian wealth management has been historically distributed across to clients remains very fragmented. So most clients come to us having multiple wealth managers. And so the first problem that they want to solve for is truly understanding what their overall exposure is, being able to see and manage their risk a little bit better. So even something as simple as help us with our MIS and our consolidated reporting. That's a starting point. Secondly, a lot of the families are also multi-generational. And with that comes very different kind of solutions that you have to kind of solve for. Here we're talking about transference of wealth from one generation to the other. In more established multi-generational business families, you would go so far as helping them in terms of setting up structures for succession planning, estate planning, but then also coming into helping create more of a framework, a governance system, a family governance or a family constitution, so that they have certain rules of engagement in which they can operate on. And these families also, whether it's tier 1, tier 2, you're seeing them also becoming more multi-jurisdictional. You'll have families where children may go overseas, they stay on, they go to college over there, decide that they want to spend a little bit more time overseas, maybe not necessarily be part of the business. And with that, it leaves for different problems or challenges that need to be solved for the clients, because different jurisdictions come with different regulatory nuances that have to be solved for. Toughest, obviously, is if a client's child goes and settles in the US. the kind of planning that we have to do there is very different. But multi-jurisdictional families in terms of the own family construct, as well as now how families are wanting to also develop global allocations as part of their portfolio. And India has predominantly, we have very strict capital controls, but there are enough solutions that are there that the government has approved, which allow us to have conversations to actually start helping clients also develop overseas allocations. This is part of a portfolio diversification tool. It's a currency diversification, and the global markets play a very important aspect. Further to Gautami's point, we also see a two-way flow. So you have Indian clients who are keen to invest overseas, but one of the reasons we're all over here is there's so much interest from offshore, not only the NRI community and the Indian diaspora, but also global investors who are looking how to access India, and how to access India in the right way, with the right partner, make sure that governance is there, transparency is there. So we are also seeing a lot of interest inbound as well that we work to solve for. Another problem that families often talk about, the Indian wealth management industry has been predominantly, as I mentioned at the start, distribution-led, which means the solutions that are given to investors across are driven by product commissions. And today, 58% of the wealth management industry is actually through this distribution model, and only 14% is on advisory. If you look at the US is only 2% in terms of distribution, and almost 60% in terms of advisory. And there is, over the last 5 to 6 years, I've really seen an increase in terms of financial literacy with the clients that we're speaking to, who are demanding more transparency, who are wanting to get into conversations where they know that there is more of an alignment of interest. And this is also a big shift that we're seeing, especially as you go higher up the client value chain. So in the HNI and the ultra HNI segment, this is something that we're definitely seeing them demand of their service providers. And that's at Waterfield, that's all we've ever done for the last 14 years. We're a pure play advisory firm, and I think that's why we've been able to resonate so well with this particular segment of clients.
Divij, I wanted to turn to Gautami with something that you alluded to about the government giving opportunities and putting in place structures. There are, of course, capital controls in India in terms of how much families can take outside the country. But there are also opportunities within the country in terms of we have a national infrastructure pipeline with trillions of dollars worth of projects. We have a massive digitization push happening in the country. Prime Minister Modi's goal, of course, is to make the country a developed country by 2047. Gautami, what are you telling your clients? Where are the opportunities existing in this market to really channel wealth in? And at the same time, what are the obstacles that they could face within the Indian landscape?
So quickly, we in Kotak look at the trend which Divij was explaining. We call it Globe to India, where global people are interested in India, and India to Globe. Let's not forget the India to Globe leg, because of capital control regulations, is restricted. So per financial year, an Indian resident can take out only $250,000 US. Is that a big sum of money? Not at all. If you have a listed company promoter in India whose kids are in US and wanting to settle in US, it will take, so after the death of the patriarch, one can take out $1 million US. So if there's 100 million, it will take 100 years for the wealth to go out. So that's the kind of restriction that we have in India. So to answer Janet's question, a lot of families are looking at how they can take the wealth outside India, especially because their second generation is outside India, and for diversification. So two-pronged strategies, diversification, at least we tell our clients that 20% of their wealth could be diversified in another currency, and dollar is the currency that we talk about. And second is because the second or the third generation does not want to run the businesses, wants to go out of India, how does this capital go? I think some other countries will have the same problems and the same situations faced by some of you while advising your clients. When it comes to India again, traditionally, it has been equities and debts, and all of us three here will agree on that. But when equity markets are doing very well, alternates come up. Alternates have been the flavor in 2007-8 before the crisis. We, in fact, launched an art fund way back in 2006-7 because you wanted alternative ways to invest. Okay. Were we mature enough in 2006 to understand the art fund? Question mark. But alternates get a space, and so is the case in India now. There's a lot of interest in alternate assets. Now we also see a lot of interest in private credits. So you see a lot of funds which are set up by international managers in India doing private credit business. So that's something which is gaining a lot of traction. You see a lot of real estate play through structures like REITs and InvITs. Okay? You have a lot of private equity and real estate funds again, where you are able to participate in a pre-IPO situation, or again a private credit situation, or an infrastructure fund, or special situations which are sourced by the fund manager in a company, like a demerger, like a merger, like a big acquisition, and you know that the valuations of the company will go up. So you acquire some of these companies in your fund. So you see a lot of growth in all these asset classes. Most importantly, as I was talking about India to globe, and I explained about the restriction which exists, we also have something which is called GIFT City, which has been established under the guidance of Prime Minister Narendra Modi. That GIFT City enables an Indian HNI who has a entity, maybe LLP or a partnership or a company, basically in any form, a business entity. You are entitled to take out 50% of the net worth of that company to be deployed in global funds. That's a huge market which we see, or a huge trend that we see, and we see thus a lot of foreign banks and fund houses wanting to capture this market. We have always seen MNC banks like HSBC, Standard Chartered being in India, and they're increasing their presence now. But we've seen JB and LGT also having private banking presence in India. And that itself shows that the way the landscape is growing, people want to participate in the India growth story. And lastly, one point which Divij mentioned, models like advisory, distribution, where people make, where the wealth manager make commissions, are prevalent. But you also see multi-family office models which are coming up, because you need to cater to not just the investment requirements, but the overall holistic requirement of a HNI client, be it succession planning, be it family business succession, be it simple restructuring of their companies, be it philanthropy, be it concierge, be it anything which a HNI or a UHNI family will want to do.
Sunil, we are now down to less than 10 minutes left in the conversation. So I want to ask you about these product ranges that we have. Gautami mentioned alternates is a massively growing space within the Indian market. And of course, ASK, backed by Blackstone, is really big into the alternate space. What kind of product innovation are you really seeing in the Indian market that's an opportunity for clients?
Absolutely. I think at ASK in 2022, when we thought of doing the transaction corporate action with Blackstone, and we realized that diversification of assets of the HNIs, ultra HNIs and family offices is the key. We were more pivoted to the public equity long only investing style, which is the most important style in India, and which generates significant alpha, because India is still an alpha market, though at the same time we can't miss the beta part of the market as well, correct? And the passive and active are the new styles which are going to come in. But when we interacted with Blackstone as a whole, and we realized that Indian HNIs and ultra HNIs are now getting diversification as one of the key theme in their portfolios, we thought of creating an alternate investment vertical. And that vertical primarily focused on private market focused, which is private credit, which is the most important part of the growth driver Indian economy would require, because banks and non-banks have their regulatory constraint in structuring those kind of credit transactions, which probably gives a significant opportunity for the alternate investment funds to do the private credit business. Second part is the real assets business, which is a private equity real estate business, whether it's a high yield credit, whether it's a performing credit, whether it's a private equity. I think all these three, because Indians understand real estate well, and they are in a way over-allocated to equities, real estate as asset class, but investment into real estate, where underlying is real estate, understands them the most. So I think that is also one area which is done quite well. We diversified apart from private credit and real assets business to hedge solutions business. And in HNIs and ultra HNIs, to get into a long short absolute return funds, index plus funds, and the market neutral strategies is something which is completely new to the Indian market. The size of that market probably is increasing exponentially, and we clearly thought that that is one area we should get into, and we are seeing the reciprocation happening. So in terms of asset allocation, we need to create product and services which probably our ultra HNIs, families are diversifying into, and that's what we did in alternate investment side. Private equity is also another interesting area which we would explore at some point of time, but then you have to choose the path. Either you are early stage, you are mid-market, or you are going to be the M&A or acquisition. I think that space we have yet not explored at ASK, but Blackstone obviously is quite large in M&A space. That actually helped us in diversifying our client portfolios.
A lot of innovation clearly happening in India, a lot of asks from the clients for product diversification. Divij, do you think India prices risk adequately? Has the market really been tested amid all of these products and demand coming in?
I think it's a very relevant question, especially when you're seeing the valuations today. And in terms of the risks that India face, I would first start off with a positive, and that even in the current backdrop of geopolitical risk and trade uncertainty, the current growth as well as market momentum remains very strong in India. But I think it's also very important to clarify that resilience does not necessarily mean you're immune. And to this effect, if you look at the construct of even our equity indices, about 16 to 17% of ownership in terms of market cap is still through foreign owners. And if we continue to see, if we see sustained outflows from foreign investors, that has an impact on market sentiment. It has an impact on price action. And even though we have a very robust domestic demand that keeps a lot of liquidity continuously coming into the market, it's something that still can have an impact in terms of what we see in the markets per se. The second point is that today Indian equities still trade at a 20 to 30% premium over the emerging market peers, as well as historical averages. This, on the plus side, is a testament to the perception on the opportunities, the structural opportunities that lie ahead. But there is always that risk also of mean reversion. And that would happen if you have a consistent set of follow-on risks in terms of our growth drivers that we associate. For example, weaker public capital expenditure, lower urban consumption, and you also see, as I mentioned, geopolitical risks, market turmoil. That would lead to a higher chance of mean reversion. And we do see a few risks on the horizon. If global political, geopolitical tensions continue, we have geopolitical tensions that are also a lot closer to home. that one has to also be cognizant of. We are susceptible to a certain extent to commodity price volatility. Rupee depreciation can also have an impact. And these are things that we have to keep in mind, even as portfolio managers, that portfolios have to be almost all-weather. You have to also look to bring in proper risk management into the tools. But India is exposed to risk. We are very resilient, but that does not mean we can't be impacted.
Well, Divij, one of the panels this morning was, of course, trading in an environment where there's chaos.
Yeah.
And India, of course, is right at the heart of chaos. Arguably, this is a country that has dealt with chaos through the decades. But in the final closing moments of our panel, I want to ask all three of you a question with the request that we keep it to a succinct one-sentence answer. And the question is this: every day, all of us wake up to a different world. In India, we go to bed. There's always a tweet, a Truth Social post coming out from the US. The world is different when we wake up. So, very succinct answer. 3 years down the line, I'm not going long. I'm not Prime Minister Modi. I'm not President Xi Jinping. I'm going only 3 years. 3 years down the line, when we're having a similar conversation, what kind of Indian market will we be speaking about? Sunil, if I could start with you.
Sure. So, I know that one line I will give you, but I'll borrow 2 lines for that. Financial risk, economic risk, both India stacks up so well, and that is all self-mitigated by virtue of India's own positioning, and I'll not go into details. The geopolitical risk is the only risk which actually currently, so the risk is going to be coming from outside into the Indian market and not really. India is now 4th largest, and here is my prediction for the next 3 years. If we happens to meet after 3 years, India will be decisively a 3rd largest economy in the world. Today we are 4th largest. So in 3 years' time, we will surpass Germany's economy as well. Yeah.
Gautami. So quickly, our brand campaign is a sentence called "Hausla hai to ho jayega." You all will not understand this because it's Hindi, but have the courage to dream big. That's our campaign for the Indians, the aspirational Indians that we are dealing with. And we think, and I believe in what Sunil said, that we should be the 3rd largest growing economy, and the interest will remain there. One small comment: I'm wearing a sari, and on the sari you see cycles. When I come next after 3 years, I'll have an autonomous aircraft, a fighter aircraft, speeding with growth and success.
Divij, same question to you. No cycles on your suit, unfortunately.
No cycles, unfortunately. Not any that you can see anyway. One setup to my point that I want to make is I spent 25 years outside of India, predominantly across Asia and Europe. And for me to move back 3 years ago, it was on the professional aspect where I just see a tremendous opportunity of wealth creation across the country. It's very entrepreneurial. The landscape has already been set in terms of the structural numbers. And our RBI governor has captured a philosophy which I think is the most apt way to finish this off. He said this in DC recently, is India is not an investment destination. We are your partner in prosperity. And that's where I see us continuing to remain in 3 years.
This is an iHeart podcast.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. It is a significant escalation in the Middle East.
Moments ago, Israel launched Operation Rising Lion.
Israeli Prime Minister Benjamin Netanyahu addressed his nation after launching a wave of airstrikes on Iran's nuclear and ballistic missile sites.
Targeted military operation to roll back the Iranian threat to Israel's very survival.
And the attacks continue this morning on Natanz, Iran's largest uranium enrichment facility. We get more from Bloomberg News Jerusalem correspondent Dan Williams.
That would be consistent with what we heard from the Israeli Prime Minister early this morning after it emerged that Israel had carried out this very dramatic, unprecedented, but long-expected attack specifically on nuclear sites, nuclear assets, people involved either directly with the technology of the nuclear program or at the highest levels of the military command structure.
Bloomberg's Dan Williams reports the attacks killed Iran's top generals, including the head of its Revolutionary Guard Corps. Iran is vowing to retaliate, as we hear from Bloomberg's Jumana Bersace.
The Iranian regime is clearly on the back foot. Several of their very senior commanders were taken out in this strike. Many of their main facilities, nuclear facilities, were hit, but not, I should also just reiterate, not entirely defunct now. They have been damaged, but this is why on the Israeli side they're saying that there is more work to be done so that they can ensure that Iran don't go down the route of further nuclear enrichment.
Bloomberg's Jumana Bersace. In a Truth Social post this morning, President Trump urged Iran to make a deal, quote, before there is nothing left. Bloomberg's Tyler Kendall has more from Washington.
I was at the White House on Monday where President Trump did confirm that he had a phone call with Israeli Prime Minister Benjamin Netanyahu, and it does appear, it is our understanding, that these leaders have spoken multiple times in recent days. But the action does come in apparent defiance of President Trump, who told reporters yesterday at the White House that he did not want Israel to ultimately do this strike because he did not want it to derail these talks.
Bloomberg's Tyler Kendall. And in an interview with ABC News, President Trump called Israel's attack on Iran excellent, saying there's more to come. And in a follow-up Truth Social post, the president said he gave Iran a 60-day ultimatum to make a deal 2 months ago. He says today is day 61. Now they have perhaps a second chance, end quote. The prospect of wider war is sending a risk-off move through markets, though. Right now, S&P futures, Dow futures are down 1%, NASDAQ futures down 1.2%, NYMEX crude oil is up 7.5%, and COMEX gold is up 1.1%. President Trump is touting a legal victory in California after a federal judge ruled against him on deploying National Guard in California.
Courts have ruled on the Guard. They will be back under my command, and he'll be relieved. Donald Trump will be relieved of his command at noon tomorrow.
Governor Gavin Newsom of California spoke before a federal appeals panel put a temporary hold on Judge Charles Breyer's ruling. Another hearing is set for Tuesday. On Truth Social this morning, President Trump repeated his claim that if he hadn't deployed troops to Los Angeles, L.A. would be burning to the ground right now. There's a strong reaction in Washington to another incident in the City of Angels. Democratic Senator Alex Padilla placed in handcuffs after interrupting a briefing from Homeland Security Secretary Kristi Noem.
I was there peacefully. At one point, I had a question, and so I began to ask a question.
DHS says Senator Padilla was not wearing a Senate pin and didn't identify himself. A video of the incident appears to show otherwise. For fellow California Senator Adam Schiff,
for him to get that kind of abusive treatment, every senator who works in this Capitol should be offended by this.
But House Speaker Mike Johnson says the Secret Service did what it was supposed to do. As for Senator Padilla,
I think that behavior at a minimum is, it rises to the level of a censure.
DHS says it was, quote, disrespectful political theater. Investigators are combing the wreckage of Air India flight AI-171 to determine what caused the Boeing 787 Dreamliner to crash yesterday, killing all but one of the 242 people on board. India's aviation minister says one of the two black boxes on the plane has been found. That Dreamliner crashed into a medical hospital in Ahmedabad, where med students were eating at the time. Shares of U.S. Steel are down 4% in the pre-market. Japan's Nikkei Nikkei news service is reporting that Nippon Steel's planned takeover may not happen if the Japanese company is not given sufficient freedom of management. Round 2 of the U.S. Open is underway at Oakmont Country Club. J.J. Spahn sits atop the leaderboard at 4 under par. He tees off just before 1 Wall Street time. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager, and this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
The entire auto sector is higher today.
And analysis on the companies making news on Wall Street.
Tesla's been a stock that's been in focus. Shares have really been all over the map this morning.
Listen to the Stock Movers Report from Bloomberg.
Let's talk about some other decliners.
It's your short audio report on the day's winners and losers in the stock market.
Second biggest driver in terms of points for the S&P 500.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
Progress never stops. Neither should you. At PwC.
And I want to start there, considering the fact that you've talked about how the U.S. is going to go bankrupt and how it's on an unsustainable fiscal path. Are we seeing that priced in, or is there still a reckoning to come?
Well, it's certainly behaving differently than it was for the last 4 decades. I mean, what we've seen is in the last 15 years, there's been a number of corrections on the S&P 500. And in every single one of them, when the S&P goes down more than 10%, the dollar index, the trade-weighted dollar index goes up. This time, the dollar went down when the S&P 500 went down almost 20%. That's strange. Things are behaving differently. Usually when the Fed starts cutting interest rates, rates across the yield curve go down. The 10-year Treasury almost always goes up immediately following the first Fed rate cut, and then it keeps rallying for a while. This time, the 10-year yield went up, and the yield curve is steepening. So I think what we have is a recognition that the interest expense for the United States is untenable. if we continue running a $2.1 trillion budget deficit and we continue to have sticky interest rates. One thing that people fail to appreciate is how much the average Treasury payment has gone up. The average yield, the average coupon on Treasuries was below 2%. The entire Treasury market, all 30-odd billion of it, you average it all together. Some of them are old, you know, they were issued with higher interest rates, but it was below 2%. Now it's pushing 4%. And as long as bonds are maturing, and there's trillions and trillions of dollars of them maturing, a lot of them were issued back in, 2009, 2008, these other time periods. Even if you just issued them in 2019, some of these are starting to come due. And they were issued with coupons of 0.25%. And now it's 4.25%, so it's 400 basis points higher. So this problem continues to build. And there's an awareness now that the long-term Treasury bond is not a legitimate flight to quality asset. It's not responding to lower interest rates. It's not really responding to an inflation rate, which is now 2.5%. Probably going to go higher on the inflation rate because the ones that are rolling off from a year ago, I mean, the cumulative, I think, headline CPI that came out today, it was a 0.18. But the one that was rolling off, I think, was 0.1. And if you do the next 2 months, those 3 months together, that quarter, the cumulative rise from a year ago was 0.1. So we're likely seeing the low point in near-term inflation. So yeah, I think the reckoning is coming, is that we have to somehow figure out how we're going to deal with $37 trillion. I mean, we're actually going to hit the 37 trillion number for real. It's still 36.95 trillion, but it's going up quickly. So yeah, there's going to have to be some pretty creative thinking, and the market's starting to believe that. So the previous group talked about the capital flows, and one of the reasons that the U.S. is underperforming at this point is so much money came into the United States since, say, 2015 or so, or 2005, and there was a net investment position. Foreigners were investing more in the U.S. than the U.S. was investing outside the country, to the tune of $3 trillion. That was about 15, 17 years ago. It's now over $25 trillion is the net investment position, and the dollar is falling. So it's not inconceivable that some of that $25 trillion that came in over just a couple of, not even 2 decades, could go out. And so this is a moment where finally you have the setup where non-U.S. investment, even if you're a dollar-based investor, you should be thinking about increasing your allocations to non-dollar investments. And it's already working. It's already working.
So there's so much to unpack there. I want to talk about the idea that there could be this 25 trillion or some of it that moves away from the U.S.
Trillion.
Right, exactly. Yeah. Whatever it is, yeah. 3 trillion. You're getting trillions of dollars moving out of U.S. assets.
Yeah.
How high or what kind of behavior do you have to see in the 30-year bond to like it again, given the fact that you've been very vocal
I've been
about
thinking about this for a long time, and I've come to the idea that as the Fed eases, and when the economy really does weaken more, the Treasury rate will continue to go up at the long end. And so for now, we're very uninvolved in the long-term Treasury bond. But there will come a moment where you have to pivot, because there's going to be a response. And I've got many ideas of what that response might be, but one of the leading candidates would be quantitative easing. So you get to a point where the rate is so uncomfortably high. What is that number? I'm going to guess 6%, where they say this is going to be something that we're going to be running a $5 trillion budget deficit with all this bond issuance when we go into a recession. And so they'll pivot. I believe this is a sensible idea. There's other ideas too, but the leading candidate is they will announce quantitative easing on buying long-term treasuries. And when they do, you have to very quickly, and hopefully you do it the day before they announce it, but we don't have access to the day before stuff. That's for the primary broker dealers. But you would need to buy long-term treasuries as much as you possibly could, because when that gets denounced, it'll be just like when they announced buying corporate bonds in COVID, where all of a sudden the corporate bond market went from down, 20 points to right back to where it started in just a matter of a few days. You could get a 20-point rally on the long bond if they announced that they're buying the long bond, because that would be a 100 basis point drop.
You said that if the Fed were to cut rates, that might cause a sell-off in 30-year treasuries.
It's already happening. They started cutting rates September of 2023, and the long bond has gone up in yield significantly since then, 100 basis points.
And you think that will happen again?
Why not? I mean, it's a paradigm shift. We have a tremendous paradigm shift that's going on, where money is not coming into the United States, where the long bond is not a flight to quality asset. Gold suddenly is the flight to quality asset. People, I think Costco is selling gold retail and they can't keep it in stock, and gold has gone from, it was living at $1,800 an ounce not very long ago, and once it broke above 2,000, it was just straight up, and now it's basically a third of 10,000. 3,333 and 33 cents it was actually when I looked at it yesterday. So I think gold is a real asset class. It's no longer for lunatic survivalists and wild speculators. It's viewed as an asset class, and central banks have been accumulating gold. Gold was stuck in the mud because for a decade or more, central banks were selling it down. They've bought it all back.
So are you buying gold?
I've owned gold since it was $300, and I also own some gold miners personally. But they bought it all back. It's amazing. They sold it at like $300, $400, and they're buying it back at $3,000. See, central banks are not very good long-term investors.
Well, maybe they could use advice from you. One thing that we've been hearing about in a number of the panels this morning has been about the corporate debt market.
Yeah.
And one thing that I've gathered from talking with people at DoubleLine and reading your outlooks is that you've reduced your allocation to below investment grade credit.
Systematically over a 2-year period.
To the lowest level, I believe, since the inception of DoubleLine.
That's right. We have higher quality portfolios today relative to strategy style than any time. We run closed-end funds that are leveraged. We have the lowest leverage of all time. We had 45% leverage versus net assets, and in one of our funds we're at 7%. And we're there because we want to be a liquidity provider when you get paid to be a liquidity provider, and you're not now. The spreads are very uninteresting in the credit market. Just as the valuation of the S&P 500 is incredibly uninteresting. When we had the big sell-off in April, people were like, yeah, we were kind of asleep at the switch. The market was really overvalued. We really should have been thinking more cautiously. Well, it's more overvalued today because the S&P 500 is down 1 or 2%, and earnings estimates have been cut significantly. So if you look at the forward PE, it's higher now than it was at the all-time high back in February or early March.
So what are you sort of anticipating? What kind of
I anticipate a great buying opportunity. I don't know when it's going to happen, but it's getting close. I feel that the environment feels a lot like 1999 relative to AI is just map over .com for AI. I also think it feels a lot like 2006, 2007. It's funny. One of the hardest things to do in the investment business is to learn and fully appreciate how long everything takes to happen. It takes forever for the problems to actually show up. It takes forever for the defaults to finally arrive. But people anticipate changes with great enthusiasm. So AI, of course, was embraced with great enthusiasm. Electricity was all the rage back in 1900 because people realized that electricity could change the world. And I think we can all agree electricity changed the world in ways that are bigger than AI will change the world, in my opinion. Electricity is like amazing. But there was a huge boom in electricity stocks in the first decade of the 20th century. But electricity stocks boomed so much that their relative performance
And I want to start there, considering the fact that you've talked about how the U.S. is going to go bankrupt and how it's on an unsustainable fiscal path. Are we seeing that priced in, or is there still a reckoning to come?
Well, it's certainly behaving differently than it was for the last 4 decades. I mean, what we've seen is in the last
on both sides, the attack, the
years,
threat of retaliation, the promise to fully dismantle Iran's nuclear program. How much damage was there actually, and what will Israel do next? I mean, President Trump, when he tweeted this morning, said essentially, you know, listen, we couldn't get to a deal, and but Iran needs to make a deal now. Do it before it's too late, all caps. So he's sort of suggesting only going to get worse. So the suspicion there is that the U.S. and Israel, obviously the counterpoint to that is President Trump has, over a long time, billed himself as the anti-war president. So he's going to be under a lot of pressure not to get involved directly.
Yeah. That I want to also talk about the regional significance. Another question has come through. What are the chances of Iran targeting assets in the Middle East as retaliation, oil infrastructure of GCC countries, and U.S. infrastructure and interests? And just for those who maybe are not as familiar with the history, remember back in 2019, there was an attack that took place at Abqaiq, that is the Aramco facility. And since then, in March 2023, there has been a resumption of diplomatic relations between Iran and Saudi Arabia. But of course, the question many people are asking today is whether some of those assets within the GCC, and specifically in Saudi Arabia, could be deemed a target as well. And Dan, also please speak to the potential to target U.S. assets in the region too.
Yes, hi. I actually imagine Iran would be holding off on that. It doesn't appear to be it's in interest to push more countries, more powers into Israel's corner, given that all of them appear, at least formally, nominally, to be fence straddling here. Yes. We've had no revelations, no open admissions of, for example, which countries those Israeli jets overflew en route to Iran. We can probably guess which countries they were just by looking at the map. But given the fact that's not been made public, that gives cover, at least declarative, to other countries that might have helped, that have welcomed, if only tacitly, this development. And I think the Iranians would think very hard whether they want to make this a multipolar confrontation or keep it direct at Israel, in the understanding that that might be something the Iranians can handle, or at least prevent from escalating out of control. Targets. Trump, I think, would be outraged by the idea of U.S. losses here. There was a preparatory drawdown of forces about 2 days ago, diplomatic personnel, some military personnel in the region, which points strongly to the possibility that the Americans were forewarned about this. They definitely care about being struck. They have been struck before by Iranian militias. A direct strike by Iran on a U.S. base at this juncture would be flagrant, and I think might be enough to bring in the U.S. militarily offensively on Israel's side, in addition to whatever passive defense assistance it offers.
And a reminder to our viewers, please submit your questions as we continue throughout our discussion, picking up on several of them now. But I want to bring it back to those U.S. Iran nuclear discussions that have been taking place. Golnar, a 6th round of those discussions were supposed to happen this weekend in Oman. Unclear at this point whether those discussions are still going to take place. What is the future of those talks from the Iranian perspective?
I think it looks unlikely that they're going to happen now. I think what's happened overnight is very much the worst case scenario from the Iranian point of view when it comes to the decision to actually engage in talks with the Trump administration. There's a lot of talk on the Trump administration on the US side about what Iran needs to do to prove itself or to demonstrate various things, whether it's about its nuclear program or its conventional weapons program or its behavior. But from the Iranian point of view, they still see Trump as an individual who effectively jettisoned the 2015 nuclear deal that Iran had, the existing nuclear deal that Iran had with the United States, for all its faults that both sides say that it had. Iran says that it was sticking to that agreement. And from its point of view, it sees Trump as somebody who needs to demonstrate to Iran that he can be trusted, that he won't sign a deal and then abrogate it later, that he won't continue to apply sanctions on Iran once Iran has promised to reduce its atomic activity. That's the point of view that Iran has had going into its engagement with the US, and now it's in a situation where it sees that Israel is pretty much starting, a war with the Islamic Republic. This is the strongest military offensive on Iran, I think, since the Islamic Revolution, or at least going back to the Iran-Iraq War when Saddam Hussein's forces invaded Iran. So it's doubtful at this stage that they're going to meet on Sunday. So that opens up lots of broader, very crucial questions about Iran's position in the broader non-proliferation structure that's been kind of holding global security together to some extent since the Cold War. Iran is a signatory to the NPT, and it has said before that if it's threatened or if its nuclear sites are attacked, it will consider withdrawing from the NPT like North Korea did in 2003, and then deciding that it can do whatever it wants with its atomic activity. And that's very, very, very dangerous from the point of view of people like the IAEA and the West.
Nick, let me turn it back to you because maybe if we zoom out a little bit, if you think of the three main foreign policy goals of the Trump administration, it's been getting to the Ukraine and Russia to speak and potentially bring about peace there, the Gaza portfolio, and of course, US-Iran nuclear discussions. All of those three arrows, so to speak, have been tested. And I just wonder how much of a setback the attacks overnight constitute to those US-Iran nuclear discussions in light of what Golnar was just talking about right now.
I mean, it's a great question, and I think that's why you're seeing, in a lot of ways, some of the explanations happening now that suggest that President Trump was actually in on this when there's a lot of evidence pointing to the contrary. I mean, more broadly, if you look at these initiatives, the president had said he was going to solve the Ukraine crisis. He said the Hamas attack would never have happened on October 7th. And he said Iran was essentially President Joe Biden's fault. So as you can see, the real world tends to be a lot more complicated. I think the big question now is, where does the U.S. go from here? Do they, as one of your questioners was suggesting, get involved militarily? There's going to be strong pushback from the MAGA wing that does not want the U.S. involved in wars of this nature. It's really hard. I agree with Golnar. It's really hard to see the Iranians agreeing to sit down at the table after Israel essentially decapitated much of their military structure and a lot of their nuclear ability. So President Trump is going to have some really big questions that he's going to have to face. And very important, if Iran decides to shut down the Straits of Hormuz, if oil does stay elevated and really start to pinch pocketbooks in the U.S., I mean, we are a global news organization. Our readers are from all over the world, but you can be sure that President Donald Trump is thinking about this from a very domestic lens. And if you start to see economic pressure in the U.S. because of this, if gas prices at the gas station down the street in New Jersey go up by 50 cents or $1, he's going to be under a ton of pressure to do something to wrap this up. And whether or not he has any control over that is another matter entirely.
Dan, I believe you wanted to jump in and say something there before we move on to the next question.
Yes, just to follow up on Nick's point, I think the mystery around the degree to which Trump was in on this ahead of it may be deliberate and it may be quite genuine in the sense that he may have actually hedged until he could assess the success of this operation. He's famously transactional. He famously likes a winner. Nothing sells like success. And his shift in tone from yesterday to today may simply be due to the reports that this went Had this been a failure, had it been a debacle involving, say, US forces extricating Israeli pilots and the like, he might have taken a more public, more voluble distance from it. So I have a feeling that as long as it goes well from Israel's perspective, he might be happy to ride along with it. And if it goes sour, things.
Let me put this question to maybe Dan and Golnar. Dan, I'll start with you. A question from a viewer. What is the absolute worst yet not impossible scenario? U.S. directly attacking Iran and or Russia attacking Israel. So how do you weight the probability of those actions?
I'd say a replay of 1973. It didn't come to it, but certainly the big powers mobilized during the 1973 war in what appeared to be open blows between the Soviet bloc and the US at the time. Were Russia and China to weigh in now, Russia and or China to weigh in, this would go beyond a regional conflict to a big power conflict. And we've seen through history, including the last century, how quickly alliances and partnerships like this can spill over into major global escalation. I think the chance of that happening is very slim, but that would be my worst case scenario.
Nick, let me put the question to you. U.S. directly attacking Iran, is that a possibility? I mean, we know that President Trump has warned that if there's no diplomatic solution, then he wouldn't hesitate to go down the military route. Is it a likely scenario, though?
I mean, this is the question that is just going to fuel all of our reporting over the next few days, because you have two competing impulses from the president. One is the desire to make threats, and potentially what happens if he then is forced to follow through with those threats. If we find that Iran, if its nuclear capabilities, if its enrichment capabilities are essentially undamaged and it can continue and the Iranian threat remains, and if it's posed to him that Israel can't do this without U.S. help, he's going to have to do that or make a decision on that. The problem is that goes against his entire ethos and everything he campaigned on as the president who started no new wars in his first term, who is the peace president. If he then goes in and has U.S. forces launching a major military attack against a major U.S. adversary that has countries like Russia on its side, it's going to undercut him so deeply politically that you have to imagine that's going to really be something that is going to potentially hold him back.
Well, Nick, I know that you're having a very busy day. Nick Wadhams, national security reporter in Washington, D.C., and I know you've got to rush off and continue with your news reporting. So thank you for joining us for the Q&A. However, we are going to continue our discussion. Golnar, I want to come back to you because earlier on we talked about the potential ways that Iran could retaliate. And we spoke about the military route and the potential disruption to the Strait of Hormuz. But we haven't talked about the Iranian proxies in the region, the likes of Houthis, Hezbollah, Hamas. So walk us through what potential the Iranian regime actually has to activate the proxy route should they want to escalate this even further.
So I think the only credible option right now are the Houthis in Yemen. As we know, Hezbollah in Lebanon has been heavily weakened by Israel, by their bombardments in Lebanon and southern Beirut last year. Hamas, of course, has been nearly all but completely wiped out as the war continues in Gaza, again by Israel's bombardment of Gaza in response to their attack on Israel in October 2023. And one of the very key points in this network of allies that Iran had in the region, Syria, in the form of President Bashar al-Assad, that's also gone, and that's a very key part of that whole axis, that so-called axis of resistance. That's also gone, and I don't think there are any signs that Iran has managed to rebuild Hezbollah specifically at all, or in any significant way in the past year. And part of that is because the IRGC have also been very directly targeted, not just today. I think a lot of this actually goes back to what we mentioned earlier, which is Donald Trump's drone strike on Qasem Soleimani, who was the head of the Al Quds Force, which was the elite unit of the which is the elite unit of the Revolutionary Guard Corps. He was and is seen as the sort of Iranian architect and mastermind behind this forward defensive strategy that Iran had of building up these allies of proxy groups, armed groups, and political parties linked to armed groups and militias in countries like Lebanon, and Palestine and in Iraq to defend and act in Iran's interests, basically, and to attack and challenge Israel. That structure has essentially kind of crumbled since Israel's bombardments last year. And Soleimani, and the weakness started when Soleimani himself was killed. So in some ways, there's a line that goes back to 2020 at least, and is kind of working its way around to today. And the attacks on Iran are getting closer and closer. And at the same time, parallel, we've had a series of assassinations on Iranian nuclear scientists since 2020 that have been working to challenge and weaken the nuclear program. So I think we have to also think of a kind of longer game regionally where the Israelis have been, you know, possibly to an extent, kind of looking at a very long-term way of weakening the Islamic Republic to the point where it doesn't have an effective means of deterring further attacks.
Dan, let me turn to you. A question came in earlier. Is this the third or fourth attack of Israel on Iran in the past year? I believe it is the third. You're probably better informed than I am. But if Iran was sitting on the negotiation table with the U.S., why would the U.S. support this attack? Though, to be clear, this would be implicit support because they weren't actively involved in the attack overnight. We know Israel's agenda is not to have a peace deal with Iran, but why would the U.S. sabotage its own peace talks?
I would dispute that Israel's agenda is not to have a peace deal with Iran. Israel, throughout its short history, has had a pretty consistent record of pursuing peace with countries that show an interest. Iran, under this regime, is constitutionally committed to seeing Israel destroyed. So I think the logic of the question got things in reverse. And I think as for the diplomacy, the negotiations, the way they were going, we had open statements from the Trump administration that they weren't going. They've appeared to be sputtering for several weeks now, and that's over a core dispute. Legitimately, Iran, from its perspective, does not want to give up uranium enrichment. Legitimately, from the U.S. perspective, Iran must give up uranium enrichment, and that's a position that Israel has supported. Uranium enrichment is the core of an independent energy program. It's also the core of an independent potential bomb fuel program, a program that would produce the fuel required to make nuclear weaponry. So for Iran to be credibly stripped of the means one day, potentially, should it want, it would have to give up on that core capacity. Until this point, it has been unwilling to do so. It's stated openly that this is a red line. And I think the hope is, and you can read as much quite easily into Trump's recent statements, that having been battered in this opening salvo, as Golnar noted, salvo of an unprecedented scale in the history, at least, of this Iranian regime, this Iranian administration, the Iranian leadership may actually be faced in a position where its own existence, its continued existence, is in jeopardy unless it concedes on this point and re-enters talks willing to discuss stripping it of its uranium enrichment.
I'm not really. I can't say what. Obviously, I'm not. I'm not in a position to say what the Iranian establishment or the establishment of the Islamic Republic thinks or sees. But from the perspective of someone who's covered Iranian politics for a long time and who covered the talks that led to the 2015 nuclear deal, I remember quite vividly Prime Minister Netanyahu making various attempts to sabotage or sabotage wouldn't be my word, but many analysts would use that word. But definitely to discourage the US and the West from entering any kind of deal with Iran. And he has repeatedly said that Iran is years away, or 6 months away, or 5 years away from developing a nuclear weapon. And he's done that using flashcards and cartoons and uh, um, cartoon manifestations of the bomb in at the the UN General Assembly when he's given speeches, and it's almost become privately between among some Western diplomats a bit of a running joke. And right now, obviously, there are very serious consequences to what Netanyahu has been saying for many years. But from Iran's point of view, it has agreed, or it did agree in 2015, to a very rigorous, the most rigorous inspections regime that the IAEA has actually imposed on any country. And it had opened its nuclear sites, all its declared nuclear sites, to the IAEA, and it was enriching uranium to very limited levels of 3.67%. It only stopped doing that when Trump left the nuclear deal in 2018 and then imposed really rigorous, like, sanctions that were far stronger than the previous regime under Barack Obama.
Yeah.
And I think so. So I think to say that Israel is a sort of a benign peace-seeking, agreement-supporting actor in this situation, I'm not sure. Certainly from the Iranian perspective, that's realistic, or a reflection of what's actually been
Yeah.
the case. And let's not forget, sorry, just to finish, that on Iranian soil there have been scores of attacks. Again, attacks on nuclear scientists, on various parts of infrastructure, cyber attacks on nuclear facilities for years and years and years, that Iran has always blamed on Israel. And Iran has also constantly brought up this point that Israel has never opened itself up to scrutiny by UN nuclear monitors ever, and it is not a signatory of the Nuclear Non-Proliferation Treaty, which Iran has been a part of since its inception in 1967.
I've got a couple of minutes left. Before I go to Dan, the final answer, I've noticed a theme with some of the questions that have come through. Robin's now just asking, is China going to help Iran? A short while ago, we had another question about whether Russia was going to help Iran. Golnar, does Iran have any allies that could help it craft its response here?
So Russia's been a very important partner to Iran, particularly since Trump withdrew from the nuclear deal. And even more so after Russia invaded Ukraine. So that alliance has got stronger. Iran, we know, has been helping Russia militarily in its invasion of Ukraine. It's supplied Russia with drones, and the two have also significantly expanded their economic ties and their military ties, and the extent to which they trade both on defense and economic and financial things. And that's a lot of that is because Russia is also, probably after Iran, the most sanctioned country by the US in the world, probably second to Iran. So they've kind of found cold comfort in each other's company. At the same time, Iran has a troubled history with Russia. Iran has a very problematic past historically. Russia once occupied Iran, and that occupation was seen as quite brutal by much of the Iranian population, and that kind of memory lasts. Not just socially in Iranian society, but also politically. And I think the Iranians, they really appreciate and they are very grateful, I think, for that Russian support that's grown recently. But I think they're also extremely clear-eyed about the extent to which Russia wants to get involved militarily. And that's, Russia's also very stretched because of its engagement and its invasion and its attacks on Ukraine. So the last thing it probably wants is to open another front on its borders, involving Iran and involving Israel. With China, I think there's more of a question mark. China, again, has a long-standing relationship with Iran. These countries are brought together by the fact that they're on this non-aligned axis, where they're not aligned to NATO, they're not aligned to the United States, they're not part of the Western Northern Hemisphere bloc of countries. These things keep these countries together. But as you know, China is also an extremely pragmatic actor. And I think it will be very interesting and important to see how it handles this. It has a lot of interests in the Middle East, not least of all the fact that it needs a secure energy supply and source for oil and fossil fuel imports from the Middle East. It's crucial for China. That's what is most important to it. And then secondary to that, it has a lot of investments as part of its Belt and Road Initiative in the Middle East and in North Africa, and it would want to keep those safe.
Yeah, Dan, I want to end this discussion asking you a question about the relationship between the Israeli Prime Minister and President Trump. You were on our show back in April when Netanyahu went to the White House, and at the time, ostensibly, he was there to talk about tariffs, but later reporting emerged suggesting that they had also discussed Iran. And at the time, President Trump pushed back and said that the US want to pursue these nuclear discussions. A lot was made out of the daylight or apparent daylights between the two leaders. How is that relationship now, and how will it influence where we go from here?
Again, I'll return to my earlier point about Trump essentially being a transactional president, like many politicians, Netanyahu included. I do think he responds to what he sees as strongman success on the part of his interlocutors. There was a cold spell in his relationship with Netanyahu after he was out of office, replaced by President Biden. He was unhappy with Netanyahu congratulating Biden on his election. But I think once Netanyahu, Israel under Netanyahu, turned the tide of this war, specifically in the summer, last summer when it came to Hezbollah, and to a degree then against Iran, Trump saw something to appreciate in the man in terms of his performance, what he could bring about. In terms of that episode in the Oval Office in April, it would appear Netanyahu, as you said, thought he'd be discussing one thing, ended up hearing another about the resumption of negotiations between the US and Iran. But I think judging from what's Trump has now said, he apparently told Netanyahu, give it 60 days, 2 months. If it doesn't work out in diplomatic track to my satisfaction, we'll try your method. That appears to be what's happened now. And the question is whether Trump will be able to parlay the success, what appears to have been the success of this military action, into negotiated terms from the US perspective, or whether he will let this military pressure continue until a conclusion, until a full destruction, if Israel is capable of doing that.
Dan, thank you very much. Well, we're going to leave it there. I want to thank my colleagues, Dan Williams, Golnar Motivali and Nick Wadhams for joining us today. And we thank you all for listening in and asking really great questions. If you want to listen back to this conversation or share it with colleagues or friends, the recording will be posted soon. So feel free to bookmark this webpage. And you can follow the latest developments on Bloomberg.com. You can also sign up for our Balance of Power newsletter for the latest political news, analysis, charts, and dispatches from around the globe. Find the full selection of all of our newspapers and newsletters at bloomberg.com/newsletters. So thank you for joining us and have a great day.
गाइस 7 पीएम होने वाला है. यूएस मार्केट इज गोइंग टू ओपन इन फ्यू मिनट्स. 9 मिनट रह गए हैं यूएस मार्केट की ओपनिंग पे. थोड़ी देर पहले फिर से न्यूज आई थी कि इजराइल ने और अटैक करना शुरू कर दिया है ईरान पे. कंटिन्यूसली अटैक हो रहा है ईरान पे. लेट्स सी कॉमोडिटी क्रूड ऑयल पे क्या इंपैक्ट होता है, बिकॉज अभी तो म्यूट हो गया है दोनों ही, क्रूड ऑयल भी नेचुरल गैस भी. बाकी 7:30 पर एक डेटा भी है, ध्यान रखना. 7 पीएम यूएस मार्केट ओपन होगा, उसके बाद मुझे लगता है थोड़ा बहुत मोमेंटम आएगा. एंड देन आज 7:30 पे कंज्यूमर सेंटिमेंट और इन्फ्लेशन एक्सपेक्टेशन का डेटा, ये भी गोल्ड और सिल्वर को इम्पैक्ट करता है. बाकी तो और कोई न्यूज़ अभी है नहीं. अटैक वाली न्यूज़ मैंने आपको बताई दी, शेयर भी कर दी थी टेलीग्राम पे. लगता है यूएस मार्केट के बाद ही मूव करेगा. बाकी नेचुरल गैस भी मॉर्निंग पे एक सेलिंग आई थी, उसके बाद से ये बिल्कुल ही साइडवेज हो गया उसी लेवल पे. ना थोड़ा सा भी ऊपर आ रहा है ना नीचे जा रहा है. लाइक भी करते रहो गाइस. बाकी लास्ट ट्रेडिंग सेशन है, फ्राइडे है आज. कल सैटरडे संडे 2 दिन मार्केट क्लोज रहेगा. 16 को ओपन होगा सीधा. अब तो ज़्यादा रिस्क भी मत लेना. मॉर्निंग से देखोगे 3 ही ट्रेड बने हैं. मॉर्निंग पे एक सेलिंग का ट्रेड बना था, फिर रिटेस्ट से बाइंग का, एंड नेचुरल गैस में एक सेलिंग का, फिर ऊपर से क्रूड ऑयल में एक सेलिंग कह सकते हो. उसके बाद तो साइडवेज ही है मार्केट. क्रूड भी मूव नहीं कर रहा, नेचुरल गैस भी मूव नहीं कर रहा है. एज एक्सपेक्ट कर सकते हैं 7 पीएम पे कोई बड़ी कैंडल बन जाए. या फिर कोई नया सपोर्ट वगैरह बना दे. अभी तो बिल्कुल ही साइडवेज हो गया है बहुत छोटी सी रेंज में. किसी की कोई ओपन पोजीशन चल रही है तो एसएल कॉज पे रख लो. डोंट टेक द रिस्क नाउ. If anybody have in any open position, put the SL on cost to cost in system. बाकी मंडे को एक्सपायरी भी है शायद ऑप्शन की क्रूड में. Iran vows to continue nuclear program despite Israeli strike. Looks like Israeli Prime Minister Benjamin Netanyahu is hitting the phones. Either way, he is expected to speak not just with US President Donald Trump but also with Russian President Vladimir Putin and with British Prime Minister Keir Starmer. According to a statement from his office, he already spoke with the leaders of Germany, France, and India. Kremlin spokesperson Dmitry Peskov was quoted by Interfax as condemning the escalation with Iran. देखते हैं कुछ अटैक का कुछ और भी होता है तो, बिकॉज जितना होना था मोमेंटम आ चुका है इसराइल की ओर से. बाकी ईरान की ओर से अभी कोई खास रिटेलिएशन तो हुआ नहीं है. मॉर्निंग पे कुछ ड्रोन जरूर भेजे थे, बट उसके अलावा देखोगे तो देर इज़ नो रिटेलिएशन, बिग रिटेलिएशन फ्रॉम ईरान. बाकी एयर स्पेस भी देखोगे क्लोज हो गया है क्या शायद, मुझे लग रहा है मिडिल ईस्ट में. एक बार एयर स्पेस देखें. फ्लाइट रडार का डेटा अगर चेक करोगे तो वहाँ पर भी जिस हिसाब से एस्केलेशन बढ़ रहा है करंटली अगर देखें तो मिडिल ईस्ट के ऊपर स्पेशली अगर आप देखोगे ईरान का जो एयर स्पेस है इतना तो अभी बंद नहीं हुआ है, ठीक ही चल रहा है। लाइक थोड़ा बहुत ईरान ने अपना पूरा एयर स्पेस पूरा बंद कर दिया क्या? पूरा ही बंद कर दिया इन लोगों ने तो। वाह, ठीक है। अब एयर स्पेस देखोगे अगर तो इट इज़ कम्प्लीटली शट डाउन। ईरान का एयर स्पेस कम्प्लीटली शट डाउन है, एक भी फ्लाइट नहीं जा रही ऊपर से, ना ईरान के ऊपर से, ना इराक के ऊपर से, ना सीरिया के ऊपर से। अ, तो ईरान का, इराक का, सीरिया का, जो इराक, ईरान एंड सीरिया, इन तीनों का जो एयर स्पेस है वो कम्प्लीटली शट डाउन हो गया है। ऑन दी अदर हैंड अगर आप इजराइल का और बाकी जो बीच में कंट्रीज पड़ती हैं लाइक कुवैत, कुवैत का तो ठीक ही चल रहा है, अभी अभी भी ओपन है एयर स्पेस। कतर का भी और बहरीन का भी ओपन ही है। यूएई का भी अभी फ़िलहाल के लिए एयर स्पेस ओपन है एंड सऊदी अरेबिया का भी ओपन है। इसराइल का देखें एक बार, इसराइल का एयर स्पेस भी बंद ही लग रहा है मुझे तो। एक ही प्लेन दिख रहा है, वो भी लुक्स लाइक प्राइवेट ओनर का है, स्मॉल जेट प्राइवेट ओनर का ही है, विच इज़ विद इन द कंट्री के अंदर ही चल रहा है, तो कोई बहुत ज़्यादा बड़ा तो नहीं है। जॉर्डन का भी बंद हो गया है स्पेस, एक ही प्लेन जा रहा है बस यहाँ से, वो भी बहुत पहले सऊदी अरेबिया से निकला था। तो ईरान का तो एयर स्पेस बंद पूरा। ओके, 1 मिनट रह गया है यूएस मार्केट की ओपनिंग में। 1 मिनट इज लेफ्ट गाइस, सिर्फ 1 मिनट रह गया है, ध्यान रखना। यूएस मार्केट ओपन। ये इंडिगो की फ्लाइट कहाँ जा रही है? लेट्स सी कुछ मूव आता है तो। अब लाइक भी करते रहो गाइस, जब तक जिन लोगों ने लाइक नहीं किया है फटाफट से एक बार लाइक कर दें सभी लोग। ठीक है, थोड़ा बहुत मोमेंटम आता हुआ। डेटा भी है 7:30 पे, उसका ध्यान रखना, ठीक है, वो इम्पैक्ट करेगा। गोल्ड को देखोगे, गोल्ड भी कल मॉर्निंग पे जब आज ओपन हुआ था काफी अच्छा चला गया था ऊपर, ऑलमोस्ट 2% के ऊपर, फिर सेल ऑफ आया और फिर कंटिन्यू मार्केट अपसाइड की ओर। वॉर की वजह से नीचे भी नहीं आएगा, गोल्ड आना था इसको नीचे, रेजिस्टेंस तो अच्छा था काफी ऊपर। अभी भी रेंज ब्रेक नहीं कर पाया है, नेचुरल गैस स्टिल इन अ रेंज।
What are we learning then about the possible causes of this devastating crash?
Well, still it is too early to know for now, Tom. Good morning. So I think the key developments really are around the finding of one of the two black boxes. We don't know if it's the flight data recorder or the cockpit voice recorder. And we don't know as well what condition it is in order for investigators to start downloading the data and getting a final readout in the minutes before this crash, this tragic crash. But as investigators get to the scene on Friday in Ahmedabad, it has turned from a search and rescue to a recovery phase as they ramp up investigations into what has happened. And of course, apart from that, we've got the likes of Kelly Ottberg of Boeing, who's cancelled his appearance at the Paris Air Show next week as he goes and tries to deal with the crisis at hand.
ओके नेचुरल गैस स्टिल नॉट मूविंग, वही रेजिस्टेंस का रुका हुआ है, रेजिस्टेंस पर ही। लगता नहीं है आज ऊपर जाएगा। मॉर्निंग से देखोगे फर्स्ट 15 मिनट की जो कैंडल बनी थी उसी के अंदर बैठा हुआ है, भी फर्स्ट 15 मिनट की कैंडल के अंदर ही है। लेकिन नेचुरल गैस नहीं मूव ब्रेकआउट ही नहीं कर पा रहा इस लेवल का स्टिल होल्डिंग द रेजिस्टेंस लाइक करते रहो कम ऑन गाइस
News when you want it with Bloomberg News Now. I'm Nathan Hager. Friday morning trading is underway on Wall Street with a distinct risk-off tone on new geopolitical tensions. That is the sound of the opening bell from the floor of the New York Stock Exchange. At the open, the S&P 500 is down 0.9%, down more than 50 points. The Dow Jones Industrial Average is lower by about 1.2%, or about 500 points. And the NASDAQ Composite is on the decline by 1.1% as well, down about 210 points. The 10-year Treasury yield up about 2.5 basis points to 4.38%. NYMEX crude is up nearly 8%, trading above $73 a barrel after a significant escalation of tensions in the Middle East.
Moments ago, Israel launched Operation Rising Lion.
Israeli Prime Minister Benjamin Netanyahu addressed his nation after a wave of attacks on Iran overnight. More than 100 targets hit by about 200 planes. Israel's ambassador to the U.S., Danny Danone, says it won't stop there.
The goals are very clear. We want to make sure that Iran will not pose a threat not only against Israel but against the entire Western civilization. And specifically, we have two main goals: to eliminate the nuclear capabilities and to stop the production of ballistic missiles.
Israeli Ambassador Danny Danone tells Bloomberg surveillance the operation will take days or weeks. You can hear more on the surveillance podcast. Bloomberg Jerusalem correspondent Dan Williams tells Bloomberg Daybreak the first wave of attacks has already dealt a heavy blow.
The primary target was the Iranian nuclear program, which they say was on the verge of a potentially irreversible development in the direction of weaponization. However, they also targeted senior personnel, both from the nuclear program and from the military, the chief of staff, the head of the IRGC.
Bloomberg's Dan Williams. And while Iran is vowing to retaliate, President Trump is warning them not to in strong terms. Bloomberg's Tyler Kendall has that from the White House.
In a series of posts on Truth Social earlier today, President Trump touted American military might, suggested that more equipment could be flowing into Israel shortly, and made clear that the U.S.'s stance is that they want Iran to make a nuclear deal before it's, quote, too late. In a follow-up post, he said that he gave Iran a deadline, which they ultimately did not meet.
Bloomberg's Tyler Kendall at the White House, where President Trump is scheduled to meet with his national security team this morning. CNN is reporting he'll speak with Prime Minister Netanyahu today as well. And officials are telling the Associated Press the U.S. is shifting military resources in the Middle East in response to Israel's strikes and possible Iranian retaliation. In India, investigators have recovered the flight data recorder from the Air India Boeing 787 that crashed just after takeoff yesterday from Ahmedabad in western India and slammed into a medical hostel tower. All but one of the 242 passengers and crew on board perished. This is the survivor's brother.
He video called my dad. As he crashed, he said, "Our plane's crashed." All of that. I don't know where my brother is. I don't see any other passengers. I don't know how I'm alive, how I exited the plane.
That survivor, Ramesh Vishwas Kumar, was seated by the left window in the first row of economy class of that 787 Dreamliner. Back in this country, a federal judge has blocked one of President Trump's efforts to overhaul federal elections. The judge sided with Democratic state attorneys general against the president's executive order from March 25th that would require proof of citizenship to register to vote and would allow only mail-in ballots that are received by Election Day. The AGs argued the order usurped states' constitutional power. President Trump is touting a legal victory after a federal judge ruled against him on sending the National Guard to protests in Los Angeles.
He must work under the constraints as a constitutional officer of the Constitution of the United States of America. That's what this court order demands of the President of the United States. He is not a monarch. He is not a king. And he should stop acting like one.
California Governor Gavin Newsom spoke before a federal appeals panel put a temporary hold on the judge's ruling and set a hearing for next Tuesday. President Trump praised that decision on Truth Social and repeated his claim that L.A. would be burning to the ground if he hadn't called in the troops. Another incident in Los Angeles is sparking a new divide on Capitol Hill. Democratic Senator Alex Padilla of California was placed in handcuffs after he tried to interrupt a briefing from Homeland Security Secretary Kristi Noem. The senator says he wanted to ask a question.
We've gotten little to no information in response to our inquiries.
DHS says Senator Padilla was not wearing a Senate pin and didn't identify himself. Video shows Padilla saying his name. Fellow Democratic Senator Mark Kelly reacted on Capitol Hill.
To force him out of what I thought was a press conference, that's my understanding. It's just, again, inflaming the situation. And he had every right to be there.
But House Speaker Mike Johnson says Padilla ought to be censured.
I think the senator's actions, my view is it was wildly inappropriate. You don't charge a sitting cabinet secretary.
DHS says it was, quote, disrespectful political theater. Round 2 of the U.S. Open is underway at Oakmont Country Club. J.J. Spaun still sits atop the leaderboard at 4 under par. He tees off just before 1 this afternoon. And that's news when you want it. With Bloomberg News Now, I'm Nathan Hager. This is Bloomberg.
$719 730 पे डेटा है, देखते हैं क्या इम्पैक्ट डालता है गोल्ड और सिल्वर के प्राइस पर। इम्पोर्टेंट डेटा रहेगा आज के लिए क्योंकि लास्ट ट्रेडिंग सेशन है तो मार्केट कुछ तो मूव करेगा और बिफोर क्लोजिंग डे, क्योंकि मार्केट फिर सीधा मंडे को ही ओपन होगा फॉरेक्स का भी। क्रूड ऑयल भी थोड़ा गिरता हुआ आफ्टर यूएस मार्केट ओपनिंग। नेचुरल गैस अब लग रहा है शायद ब्रेकआउट कर जाए ऊपर की ओर। ये एक सपोर्ट एरिया यहाँ पर भी था ना, दिस वन। ये एक रेजिस्टेंस था, मार्केट सीधा गैप डाउन ही ओपन हुआ था, पर आया ही नहीं। मुझे तो लग रहा है कि यहाँ तक सीधा ब्रेकआउट हुआ, रिटेस्ट कर लिया। ठीक है, बाकी देखो क्रूड ऑयल में भी नीचे का लेवल जो अभी जहाँ से रिटेस्ट हुआ है, ऑलरेडी वहाँ से रिटेस्ट कर चुका है एक बार, दूसरी बार देखते हैं फिर से करता है तो। अगर क्योंकि मॉर्निंग पे एक रिटेस्ट ऑलरेडी दे चुका है ये, क्या फिर से रिटेस्ट देगा? नीड टू बी सी, क्योंकि एक बार नॉर्मली रिटेस्ट सपोर्ट नहीं है ये, रिटेस्ट था, एक रेजिस्टेंस एरिया था, सीधा गैप अप कैंडल ही ओपन इक्वल टू लो बनी थी पहली, ओपन इक्वल टू लो बन के सीधा ब्रेकआउट कर दिया, तो ओपन इक्वल टू लो पे सेल नहीं कर सकते, रेजिस्टेंस था तो ब्रेकआउट हो गया, ऊपर गया, रेजिस्टेंस से नीचे आया, यहाँ फिर रिटेस्ट पे रिटेस्ट कर दिया। देखना पड़ेगा फिर से रुकता है या नहीं, क्योंकि और कोई रेजिस्टेंस तो नहीं है। एंड व्हाट अबाउट द टारगेट एज वेल? देखो अगर ये नीचे कहीं ब्रेक हो गया क्रूड ऑयल तो वापस कल के लेवल पे आ जाएगा अगर 6000 6010 के नीचे कहीं सस्टेन होता है तो जब तक उसके ऊपर है बुलिस कह सकते हैं रेंज बड़ी बना दी है। अगर 6010 के नीचे कहीं चला गया क्लोजिंग बेसिस पे तो फिर थोड़ी प्रॉब्लम होगी। और जिस हिसाब से कैंडल्स बन रही हैं ऐसा भी हो सकता है कि प्राइस थोड़ा ज़्यादा ही करेक्शन दे दे। डिपेंड अपॉन द ऑल कैंडल्स। ये जो करंट कैंडल अगर थोड़ा नीचे नीचे क्लोज होती है पुल बैक में जाती नहीं है ऊपर देयर इज अ वेरी हाई चांसेस कि नीचे का रीटेस्ट ब्रेक हो जाएगा। ऑल डिपेंड अपॉन दिस करंट कैंडल एक क्लोजिंग कहाँ देती है। नीचे आ जाए थोड़ा क्लोजिंग बेसिस पे पुल बैक ना दे और ऊपर ना जाए तब एक चांस बनेगा। अगर पुल बैक दे दिया तो स्टिल नीचे रीटेस्ट स्ट्रॉन्ग ही मानेंगे। तो लेट्स सी एक कैंडल कहाँ क्लोज होती है इसके बेसिस पे, नहीं तो एक ट्रेड और बन जाएगा यहाँ पे फ्रेश ट्रेड। 40 लाइक्स हो चुके हैं। 40 लाइक्स पे रुकना नहीं है और लाइक करते रहो गाइस, कम ऑन। 100 लाइक्स का टारगेट रखते हैं, कम ऑन। लास्ट फ्राइडे 100 लाइक्स टारगेट। जिन लोगों ने लाइक नहीं किया करो फटाफट से सभी लोग। हाँ हाँ तो अच्छा मोमेंटम है। देखते हैं कैंडल क्लोजिंग पे डिपेंड करेगा कहाँ होती है। नेचुरल गैस बोर कर दिया, कोई नहीं आएगा मोमेंटम अब। 7:30 का डेटा भी आ चुका है। 7:30 का डेटा देखोगे प्रीलिम कंज्यूमर सेंटीमेंट और इन्फ्लेशन एक्सपेक्टेशन दोनों के दोनों डेटा, एक डेटा न्यूट्रल है एक पॉजिटिव है डॉलर के लिए, नेगेटिव फॉर गोल्ड एंड सिल्वर। तो दोनों डेटा में से एक डेटा न्यूट्रल फॉर गोल्ड एंड सिल्वर, एक डेटा नेगेटिव फॉर गोल्ड एंड सिल्वर। अब आज और कोई डेटा नहीं है, डेटा डन। क्रूड ऑयल सेलिंग बुक कर लें या और होल्ड करें, ये करंट कैंडल का क्लोजिंग का वेट कर लो। अगर ये करंट कैंडल 6260 के ऊपर कहीं चली गई तो निकाल देना सारी क्वांटिटी। अगर ये 6260 को नहीं टच करती है उसके नीचे ही रहती है या और नीचे आ जाती है तब थोड़ा और होल्ड कर सकते हैं डे लो के लिए। तो थोड़ा सा ध्यान रखना इस चीज़ का, किसी ने सेल किया है अगर क्रूड ऑयल में। एक कैंडल कहाँ क्लोज होती है बड़ी इंपॉर्टेंट है। इसको ब्लू कलर से मार्क कर लेते हैं। सभी लेवल तो टेस्ट हो गए हैं, ये भी एक बार, ये दो बार, एक बार ये भी एक बार, ये भी एक बार। तो ऐसा लग रहा है कि फ्लैग बन रहा है एक्चुअली, दिख रहा है ये नहीं ऊपर जाएगा तो वहाँ रुकेगा तो होते कंसोलिडेट कर रहे हैं इस लेवल पे। तो दोनों साइड आने के चांसेस रहेंगे। सही है, एक बार देख लेते हैं इसको कितना मूव और करेगा। यहाँ पर तो चांसेस ही कम लगते हैं। हाँ ऊपर रेजिस्टेंस पास में ही है नेचुरल गैस का। एक तो ये अपनी फर्स्ट 15 मिनट की कैंडल की रेंज से निकल नहीं रहा है बाहर, विच इज नॉट गुड। मॉर्निंग देखोगे फर्स्ट 15 मिनट की कैंडल के ना ऊपर कोई कैंडल क्लोज हुई है ना नीचे कोई कैंडल क्लोज हुई है, पूरा का पूरा साइडवेज। का रेजिस्टेंस भी वो वैसे मल्टीपल टाइम टेस्ट है। लेट्स सी अब और कितना देर होल्ड कर पाता है। तो एक थोड़े से ऊपर अपर लेवल से देखते हैं। ठीक है, ये इसको मत मानना, ये रेजिस्टेंस ऊपर है बट इतना भी नज़दीक नहीं है नेचुरल गैस में। ठीक है, वो 315 के आसपास है, यहाँ कहीं। वहाँ से सेलिंग भी आ गई थी, उसके बाद फिर ये फेक ब्रेकआउट किया इसने यहाँ पर एक। फेक ब्रेकआउट करके वापस नीचे, कल परसों ही वहीं से सेलिंग आई है। फेक इतने बार रेजिस्टेंस हिट कर चुका है, अब तो निकल जाएगा, वो ऊपर और आ जाए। ये भी नहीं है। ये तो कहीं से भी एफिची नहीं है। इसको ले सकते हैं। लग नहीं रहा नेचुरल गैस मूव करेगा, लगता है अब सीधा 8-8:30 के बाद ही मूव होगा ये। चांसेस ही कम लग रहे हैं जब मार्केट क्लोज होने वाला होगा नॉर्मली तभी मूव कर रहा है अभी UK's Prime Minister Starmer says UK has grave concern on Iranian nuclear program.
Progress never stops. Neither should you. At PW.
We have a lot to talk about, and one of those things is a recent call from Jim Chanos. Of course, he's a legendary short seller. He came out recently and said basically buy Bitcoin, short strategy shares. And just to set the scene here, I'm curious what you make of that.
You know, I don't think he understands what our business model is. We're actually the largest issuer of Bitcoin-backed credit instruments in the world. So last week, we just raised $1 billion by selling a preferred stock, non-cumulative, called Stride. That means we basically borrowed money that we never have to pay back, that we pay a dividend on, but we could suspend the dividend if we needed to. So Jim has been thinking that we somehow needed to sell the equity. We now are in a situation where we have Strike, Stride, and Strife, 3 publicly floating preferred stocks that are not dilutive to the equity. They all meet a different market requirement.
Right.
That $110 million of Bitcoin we bought last week, that was acquired without issuing any common stock. So what's going on here is that we're using our $60 billion of Bitcoin collateral to issue credit instruments. They never come due. There's no liquidation risk. there's not even an interest rate risk, right? It's a non-cumulative preferred, and we could suspend the dividends.
Right.
So at the end of the day, if he's lucky enough to short the stock below 1 times NAV, we're going to issue the preferreds, buy back the stock, and make money for our shareholders. If the stock trades at a weak premium, we're just going to sell the preferreds. And if the stock rallies up, he's going to get liquidated and wiped out.
Well, let's talk about that premium, because that is the heart of his short call on strategy, as you point out here. So he said recently on a podcast that shareholders are paying around $220,000 for Bitcoin that trades at $110,000, but the company is doing everything it can to close that spread, which is great. There's a catalyst. So he's referring to the fact that you are selling your own shares and buying Bitcoin. But when it comes to the premium that strategy shares enjoy over the price of Bitcoin itself, do you think that that's sustainable? The fact that, like he points out, that basically the value of your company is trading at twice that of Bitcoin itself.
What he still doesn't understand is we're not a holding company or a closed-end trust. We're an operating company. So when we issue, trust can't leverage the Bitcoin. They can't issue preferred shares. They can't issue permanent shares of equity at a premium. We can. Our company's generated a BTC dollar gain equal to about $8.4 billion in the first 2 quarters of this year. That's the equivalent of earnings for a Bitcoin treasury company. Our target for the year is $15 billion. And so he's valuing the business that's generating $8.4 billion of shareholder value at 0. And he's hoping that somehow the equity will trade to NAV. But what he's not paying attention to is, if we can issue preferred shares that yield 10% and invest it in Bitcoin, which has been going up 57% for the past 4.5 years, we're capturing the 47% arbitrage effectively risk-free for our common stock shareholders. And if you want to value the company, you have to value the company's ability to generate Bitcoin yield or Bitcoin gains over and above the actual holdings of the Bitcoin the company has.
So, as you said, you have about $60 billion, $64 billion worth of Bitcoin. Your company is worth about twice that at $106, $107 billion in market cap. And you also have, obviously, an enterprise analytics software business. How do you break down the value of the rest of your company, ex-Bitcoin holdings?
If the company generates $10 billion of Bitcoin gains this year, you got to put a 10 or a 20 multiple on it, right? So the Bitcoin treasury company operation is worth a multiple of 10, 20, 30, or 40 times the BTC yield we're generating. That's the number one source of value for the operating business. And then the company also has $60 billion plus worth of Bitcoin. And I would say to investors, look at it that way. A BTC dollar gain is like our earnings equivalent. And then the Bitcoin NAV is the assets on the balance sheet. And you should just look at the earnings equivalent and put the multiple that you think is appropriate on it to come to an opinion about the value of the entire enterprise.
Michael, nobody has to explain the rapid rise in Bitcoin to me. I started buying Bitcoins at $800. I bought one as low as $600, but I spent them, unfortunately. How do you expect the asset to continue a price increase at these levels that we've seen? I mean, can it keep that up over the next 5 years, over the next 10 years? And at what point do we see, winter coming again? Because that's been a permanent fixture of this asset class, right? It's gone from 0 or 1,000 to 20, and then back down to 3 or 4, and then up to 50, and then back down to 15, and now up to 110. Like, when does it drop again?
Winter's not coming back. We're past that. We're past that phase. If Bitcoin's not going to 0, it's going to $1 million. And you have all the evidence you need to determine that, right? The President of the United States has determined he supports Bitcoin. The cabinet supports Bitcoin. Scott Bessent supports Bitcoin. Paul Atkins has shown himself to be an enthusiastic believer of Bitcoin and digital assets. Ken Taz at CFTC feels the same way. The banks are going to custody Bitcoin. Bitcoin has gotten through its riskiest period. The accounting has been corrected. There's now only 450 Bitcoin a day available for sale by natural sellers. That's the miners. At this level, that works out to about $50 million of Bitcoin available for sale every day. If that $50 million is bought, then the price has got to move up to find any seller that's price sensitive. Now, if you do the math, you'll actually see the Bitcoin treasury companies by themselves are buying the entire natural supply.
Yeah.
BlackRock and the ETFs are buying another measure of that. And we've got nation-state actors coming into the space. So I think when Bitcoin rallies, if it surges to 500,000 or $1 million, then maybe we could talk about it crashing down by $200,000 a coin. But at the current price levels, it only takes $50 million to turn the entire drive shaft of the crypto economy one turn. And you've got the Trump media organization announcing $2.5 billion. You've got GameStop announcing $500 million. You've got my company that's raising billions and billions of dollars. So the writing is on the wall. Bitcoin's moving higher.
Okay, so there's a few things to dig into there. One, that in your words, Bitcoin winter is not coming back. I'm rereading Game of Thrones right now, so that statement gives me the shivers. But I did want to go to the competitive landscape, if you can phrase it that way, and you went there naturally. You think about the ETF suites out there. IBIT, for example, already up to $72 billion in assets. There's a lot of Bitcoin treasury companies that have come to the scene. As you mentioned, 21 Capital comes to mind, started by Jack Mallers, and they all have the intention of just accumulating Bitcoin. That would be good for the price, Michael, as you say, but do you worry about the competition out there to buy Bitcoin? It's going to become more and more expensive, and everyone's competing for a shrinking pie, if you will.
I think we're in a digital gold rush, and you've got 10 years to acquire all your Bitcoin before there's no Bitcoin left for you. The competition is a virtuous competition. Metaplanet's the hottest company in Japan right now. They went from 10 million to $1 billion market cap to a $5 billion market cap. They're going to raise billions of dollars. They're going to pull the liquidity out of the Japanese market. So they'll be raising capital in Tokyo and the Tokyo Stock Exchange. Obviously, none of the rest of us are trading or selling equity in the Tokyo Stock Exchange. So it's not competitive. It's cooperative. There are companies coming public in Brazil right now, like Orange BTC, that'll come public in some time frame, and Melius. They're actually supporting equity capital markets in Brazil. You know, the GameStops, they already had $6 billion of capital. And so for them to start to take some of that capital and funnel into Bitcoin, it's good for all of us. Nakamoto and 21, they'll bring their own particular twist. Our company is a very particular business model. It's to issue Bitcoin-backed credit instruments like Bitcoin-backed bonds and especially Bitcoin-backed preferred stocks. We're the only company in the world that's ever been able to issue a preferred stock backed by Bitcoin. We've done 3 of them in the past 5 months. We're not competing against the Bitcoin treasury companies. We're competing against ETFs like PFF, that have portfolios of preferred stocks or corporate bond portfolios that are trading as ETFs in the public market. And the way we compete is we offer 400 basis points more yield on an instrument that is much more heavily collateralized and more transparent. And we're not going to saturate that market anytime soon. That's $100 trillion or more of capital in those markets.
It sounds like, you know, when you talk about what you're doing in terms of financial engineering, in terms of financial markets with Bitcoin, clearly I mean, you're doing a lot more than just holding the Bitcoin. So it's, I think, unfair to compare you to an ETF. But it sounds like you may be inviting competition from a JP Morgan, for example, which then makes me wonder, when does this asset start to convince the naysayers? You know, Jamie Dimon has famously said it's worthless. Warren Buffett has called it probably rat poison squared. When does it win those people over?
People called electricity worthless and aircraft worthless too when they didn't understand them. So I welcome the competition from JP Morgan. I hope they enter the space. Our advantage is that we're 100% Bitcoin. So whenever we create a preferred stock, it has the Bitcoin performance, and it has a measure of Bitcoin performance and a fraction of Bitcoin volatility. That allows us to issue the most liquid preferred stocks in the world at the highest performance. Strike was up 29% when the rest of the market of preferreds was down 6%. Strife was up 22% when the rest of the market was down 4.6%. It's impossible to issue Bitcoin-backed convertible preferreds and Bitcoin-backed fixed preferreds unless you're willing to make 100% of your balance sheet Bitcoin. So I'm not really worried about competition from JP Morgan or Berkshire Hathaway. I would love for them to enter the Bitcoin space, buy up a bunch of Bitcoin. When they do it, they'll be paying $1 million of Bitcoin. The price will go to the moon. That will be good for the entire crypto economy and beneficial to everyone that holds any BTC-backed equity or credit-based instrument.
Well, I'm still thinking about you saying that you view yourself in competition not with the Bitcoin treasury companies, but with some of the ETFs that hold preferred shares, that is the strategy that they're tracking. And when it comes to your own financing and the fact that you have been pivoting to issue more preferred stocks to fund your purchases, why is that? Why go towards preferreds rather than convertible bonds? Is it just a question of demand, or is there something else to it?
The convertible bond market normally is a short duration investor. They want to hold the bond 3 or 4 years, and the calls that are embedded in the bonds are capped calls, capped at 130% of the strike, of the conversion price. And so that's a short duration call investor and a short duration credit investor. What we sold with Strike, STRK, was a perpetual call option, good for 100 years or forever. And then we sold a perpetual dividend you could hold for 100 years and give to your grandkids. So long duration credit, long duration call, and that preferred never comes due for us. So we don't have liquidation risk, we don't have credit risk. So it's a much better instrument if you intend to invest in a volatile asset like Bitcoin and hold the investment forever. Now, the other point I'll make, Katie, is if you think about what we're competing against, there's like $80 billion worth of corporate credit and preferred equity-based ETFs that we identified. Most of them charge a fee of 50 to 80 basis points a year. Most of them generate a yield of 6 or 7%. And most of them have very heterogeneous, opaque credit, low volatility, and very low liquidity. We're offering preferred instruments that have 8 to 10% dividend yields at par, 10 to 100x higher liquidity. They trade really, really hard, very, very liquid.
Right.
And they're homogeneous credit, and they're 6x over collateralized. So it's a very compelling instrument if you believe in Bitcoin as a digital asset.
So just to finish the thought here, and I'm looking at Invesco's preferred ETF, the ticker there is PGX. That charges an expense ratio of 51 basis points. It has about $4 billion in assets. When you say that you're in competition with funds such as this one, are you referring to the fact that you're competing for investor attention with these ETFs? I just want to make sure I'm understanding your point.
Yeah, what I'm saying is you go buy that and maybe you get 7% yield effectively, and you pay the 50 basis points. And some of that is QDI eligible and some of that is taxable. When you buy one of our preferreds, like Stride is yielding like 11% plus right now, and Strife is yielding 9.5%. You buy that, it's all QDI eligible. It's trading 10 to 50 times more liquid on a dollar for dollar basis. It's very homogeneous credit, and you get an extra 400 basis points of yield, better tax treatment, et cetera. So we're actually competing against that. We're offering tax efficient, zero fee, fixed income yield to someone that wants to hold that in their portfolio.
Michael, I would, at least in the top 5 most important characteristics of Bitcoin is its security, right? I mean, scarcity has to be one near the top, and the ledger obviously was a genius move by Satoshi, but it seems to be uncrackable. And I'm wondering if that will hold true far into the future with the development of quantum computing. Do you worry about that?
I don't worry about it. And I make the point, Microsoft and Google market their quantum projects, but they would never sell a quantum computer that cracked cryptography because it would destroy their own companies. And there isn't a practical use case for those quantum projects they've been marketing. I think at some point, a decade out, maybe 10, 20 years, maybe whenever, there'll be a powerful computer. It may start to threaten modern cryptography. When it does it, it'll be a threat to Microsoft, Google, JP Morgan, the US government. It may be a threat to Bitcoin. When it is a threat, all of these organizations are going to upgrade their crypto protocols to be quantum resistant. You'll see it coming a mile away, and every other digital entity in the world is more vulnerable to that idea or that threat than Bitcoin. And so they're all going to upgrade, and we'll be talking about it while you're reviewing Microsoft stock or Apple stock exposure.
I don't want to go too deep into this, Michael, because it's only a half-hour program, but I feel like AI could, everyone's worried that AI may turn on us, and this could be a way in which AI has real power. Is that not the kind of thing that keeps you up at night?
I'll make a point here. The typical person might do 10,000 transactions in their lifetime, maybe 100,000 if they're very busy. The AIs are going to do 100,000 transactions a minute. They're not going to suffer the existing credit systems and the existing banking systems of the 20th century. They're going to want to move digital money at high frequency at the speed of light. That means digital assets like Bitcoin over the Lightning Network or via layer 3 protocols. The demand for digital capital, which is what Bitcoin is, and digital networks like Lightning and like all of the crypto protocols that are being worked on right now, it's going to go through the roof. So I think AI is really a demand driver for Bitcoin. It's going to accelerate the entire digital assets economy. And no, I'm not worried about the threat. The AIs can't crack, public-private key cryptography. What they can do is imitate you and talk you into doing something stupid if you're listening to them. And so they're a threat to all the other systems in the world, not to Bitcoin.
this is an iHeart podcast.
Today, we expect more from technology. Companies making the biggest productivity gains aren't just adding more tools, they're choosing integrated solutions. Find out more about these solutions later in this podcast.
News when you want it with Bloomberg News Now. I'm Nathan Hager. Tensions remain high in the Middle East after Israel's overnight airstrikes on Iran's nuclear and ballistic missile sites. Israel's ambassador to the United States, Danny Danone, says this won't be the end of it.
It was a major attack. More than 200 aircrafts participated in the attack. Many targets, many senior military officials were eliminated last night, and we will continue until we will know that Iran is in the point that they cannot continue with their efforts.
Israeli Ambassador Danny Danone spoke on the Bloomberg Surveillance podcast as attacks continued this morning on Iran's biggest uranium enrichment facility, Natanz. Now, the U.S. is warning Iran not to retaliate against American targets. The Associated Press reports the U.S. is shifting military resources in the Middle East in response. UK Prime Minister Keir Starmer is urging all sides to de-escalate.
Look, I do recognise Israel's right to self-defence. There's no doubt about that. But I am very concerned about the escalation of this situation, which is why, along with Germany and France, we're really clear that de-escalation is what is needed here.
UK Prime Minister Keir Starmer also says there are no obstacles to finalizing a trade deal with the U.S., and an agreement there could happen soon. Starmer spoke to Bloomberg's Michelle Hussein in London. President Trump is also expected to speak to Prime Minister Netanyahu today. That's according to CNN. The president told ABC News after the strike he thought it was excellent. And in a Truth Social post this morning, the president urged Iran to make a nuclear deal, quote, before there is nothing left. Bloomberg's Tyler Kendall reports from Washington.
I was at the White House on Monday where President Trump did confirm that he had a phone call with Israeli Prime Minister Benjamin Netanyahu, and it does appear, it is our understanding, that these leaders have spoken multiple times in recent days. But the action does come in apparent defiance of President Trump, who told reporters yesterday at the White House that he did not want Israel to ultimately do this strike because he did not want it to derail these talks.
Bloomberg's Tyler Kendall in the nation's capital. Now, Iran says it will continue its nuclear program following the attacks. Supreme Leader Ayatollah Ali Khamenei said Israel will, quote, pay a very heavy price and should expect a severe response from Iran's armed forces. While these geopolitical tensions persist, we did get some new economic data. The University of Michigan's preliminary consumer sentiment index for June came in a lot better than expected, as we hear from Bloomberg's Michael McKee.
60.5 from 52.2. Current conditions, 63.7 from 58.9. And 58.4 for expectations from 47.9. The gloom is gone at the moment, or at least it was when they ended this survey.
Bloomberg's Mike McKee says inflation expectations for the next year also fell in this survey to 5.1%, down from 6.6 in May. The numbers aren't moving the market much, though. Right now, the S&P 500 is still lower by 1%. The Dow Jones Industrial Average is down 1.5%. The Nasdaq Composite down 1.2%. NYMEX crude still surging, up more than 7%, trading around $73 per barrel. In India, the investigation is just getting underway into the crash of Air India Flight 171, the Boeing 787 Dreamliner that plummeted just after takeoff from Ahmedabad in western India. Authorities say the plane's flight data recorder has been found on the roof of the aircraft. Bloomberg's Danny Lee has more.
It has turned from a search and rescue to a recovery phase as they ramp up investigations into what has happened. And of course, apart from that, we've got the likes of Kelly Ottberg of Boeing, who's cancelled his appearance at the Paris Air Show next week as he goes and tries to deal with the crisis at hand.
Bloomberg's Danny Lee. The disaster left just one survivor of 242 people on board. Ramesh Vishwas Kumar was seated at the left window of the first row of economy class. Back in this country, a federal judge has blocked one of President Trump's efforts to overhaul elections. The judge sided with Democratic state attorneys general against a March 25th executive order that would have required proof of citizenship to register to vote and would have allowed only mail-in ballots received by Election Day. Business executives around the world are watching developments in the Middle East. Ford CEO Jim Farley spoke with Bloomberg from Le Mans.
It's a really important region for us.
U.S. We're watching Turkey as well. We have a huge operation in Turkey. We export all the way through Europe and the U.K. So far, so good, but it's clearly a concern for all of us in business.
Catch our full conversation with Ford CEO Jim Farley on the Bloomberg Podcasts page on YouTube. Round 2 of the U.S. Open continues at Oakmont Country Club, and J.J. Spaun is still alone atop the leaderboard at 4 under par. He tees off just before 1 p.m. Wall Street time. And that's news when you want it with Bloomberg News Now. I'm Nathan Hager, and this is Bloomberg.
Remember when a single technology glitch could bring an entire workday to a standstill? I'm Mark Banfield, Chief Commercial Officer at TeamViewer. Today, most technical issues are recurring. If you know the patterns, these issues can be remediated before they impact your business. One major UK retailer discovered a single point of sale outage cost them around $1 million in lost sales during a single lunchtime. Now, using TeamViewer's digital workplace platform, the same company is able to identify and fix those issues before they even happen. But proactive troubleshooting isn't just about the incremental improvements. It's about fundamentally reimagining how work happens for everyone. And the companies that move first get competitive advantages in terms of efficiency, productivity, and innovation. To find out more, visit bloomberg.com/TeamViewer.
The data that matters for your investments.
The entire auto sector is higher today.
And analysis on the companies making news on Wall Street.
Tesla's been a stock that's been in focus. Shares have really been all over the map this morning.
Listen to the Stock Movers Report from Bloomberg.
Let's talk about some other decliners.
It's your short audio report on the day's winners and losers in the stock market.
Second biggest driver in terms of points for the S&P 500.
Subscribe to the Stock Movers Report on Apple Podcasts, Spotify, or wherever you listen.
This is an iHeart podcast.
We did it right. It actually starts right before our investor conference that we hold every fall. This year we had 40 participants. We raised about $400,000 that went, three-quarters of which went to Robinhood. It was fantastic. It's $10,000. It's a 6-month competition, one long, one short. And yeah, it's a lot of fun, actually.
Shout out also to Anna Nikolajewski, who got up there on the board with those.
She was our only female entrant. I hope we get a lot more ladies that'll participate this time.
So they have another chance coming up this fall.
Absolutely.
And I thought since we have you here, you could help us. Give us a tip. What's the one long you would hit for the next contest?
I would say probably the yield curve. It just depends on where I think it'll be higher at that point in time. Mine would be very esoteric, so let me think. Well, I would definitely be betting on substantially lower front-end rates. We'll have a new Fed chair within 6 months of that point in time, and I think Trump's going to pick someone who's going to be uber dovish.
Well, let's talk a little bit more about the yield curve. Matt and I were actually emailing at like 4 in the morning about the yield curve because it's broken a lot of hearts, that steepener bet. And the way you lay it out, short end rates coming down, you have concerns about the deficit potentially boosting the long end. It seems like a no-brainer, but it feels like it just hasn't worked. So what's different this time?
Well, it's working. It's just, it's vol adjusted. It's just a slow-moving train. But I think in the long run, it has to work. We are fiscally constrained, and we're going to have budget deficits of 6% plus as far as the eye can see. So one of the major offsets, if I was the president, would be to lower my interest rate costs by appointing a Fed chair who was as dovish as could possibly be. That's kind of the playbook when you're 100% debt to GDP and you're fiscally constrained. You can see it happening in Japan right now. Wade is reluctant to raise rates more than beyond 50 basis points, even though they have inflation. Pick a number somewhere between 2 and 3%. I think they fudge the numbers down all the time. You got wage growth at 3.5% there. So that's, historically the way that you get out of a debt trap is you run the lowest real rates possible. You lower your interest burdens, and I'm sure that's what we'll see beginning when the next Fed chair comes.
Well, we definitely want to talk about who the next Fed chair might be and who you would like to see. But let's talk first a little bit more about the deficit, because it feels like you take a look at the bond market over the past few weeks, the past few months, you can see those fears being expressed. But concerns about a higher deficit feels like one of those evergreen issues out there. So give us first your how you're feeling about the deficit projections that we've been getting, and also how you might invest around that.
Well, the big beautiful bill is really interesting. It's first of all, it's a genius in branding. The name of it's a genius in branding. But I think what you got to do is you have to go to first principles. What would the actual budget look like if we were trying to balance the budget? If we were actually trying to balance the budget, what is the counterfactual to the big beautiful bill? So if you actually had to balance the budget, it probably would be the big beastly bill. And at some point down the road, who knows when that's going to be? Maybe it's next year, maybe it's the next administration, maybe it's 10 years down the road. At some point, probably, the bond markets are going to call BS on governments around the world playing chicken with them, right? So to give you an idea, if we were to balance the budget today, let's assume, first thing I would do if I was president, I'd appoint the most dovish central banker I could to lower interest costs. So let's assume that I could make a pact with my chairman of the Fed that I'm going to go through an austerity package. I'm going to balance it, but I need you to really drop rates to, let's say, 2.5%. So if you drop rates to 2.5% and you get a 50 basis point reduction, or let's say even a 100 basis point reduction in 10-year rates, that saves you $175 billion. The starting gap is $900 billion, so that saves you $175. Now I'm down to $725 billion that I've got to find through tax hikes and spending cuts. So let's assume that we're going to do this fairly. We're going to do 50% tax hikes in the rich, because they've benefited the most in the last 30, 40 years. 50% spending cuts. What does that look like? On the spending cut side, I would just to make it simple, let's just call it a blanket 6% reduction in everything. Social Security, Medicaid, defense spending, you name it. I'm just going to cut everything 6% across the board. That's what it would take to get you $360 billion, half of that $725 billion.
Tough to do with Congress, right? You got to work.
I'm just saying there'll be a point where the markets are going to demand it. I don't know when it'll be. Maybe it'll be in my lifetime. Who knows when it'll be?
By the way, how do you invest around that? Because you famously made a lot of money shorting the yen and Japanese assets into the lost decade, which was another situation where you saw a country just boost its fiscal debt and deficits.
All right, I will get to that, but let me just finish the tax hike side.
Yeah.
So to get $363 billion in tax hikes, you're going to have to raise the top income rate to 49. You're going to have a 1% wealth tax annually, and you're going to have to raise the capital gains rate to 40.
Huh.
So if all we're going to do is stabilize debt to GDP, that's the big beastly bill that's somewhere down the road. And again, who knows when it's going to be. Remember, you have Italy, France, and Japan, who on the current projections will be in worse fiscal shape than we are, and they seem to be doing okay. Mm-hmm. And that's why we keep going with the kayfabe in wrestling, the suspended reality, where we like to watch the show, but we know it's not real. So we know that these 6% budget deficits are not sustainable in the long run, but it's okay because it's okay now. It's okay in the short run, and it feels good, and it's not hard. It's actually really easy. Remember, in the first Trump administration, he normalized 4% budget deficits. That's what we had pre-COVID. And now in this administration, he's normalizing 6% budget deficits. So, and I'm not judging, I'm just calling balls and strikes. That's where we are. So with that in mind, knowing that we have a whole pricing structure that's created on something that's not sustainable, it's really, really hard to invest for the long run, because the day that it'll probably be the bond market first, or maybe it's the dollar, who knows, the day that we're called to carpet on that, and the day that you actually went through that exercise that I just described, then you know that multiples on stocks will not be where they are right now.
Right.
But are you short the dollar? I mean, you mentioned you're into yields.
I would say that the easiest long-term trades are, the yield curve's going to steepen, probably to historic wides. We're going to cut short-term rates dramatically in the next year. And the dollar will probably be lower because of that. A lot lower because of that.
How much lower? We're off 10% from our high right now, 8%.
Yeah, I would say I think that's a year from today, that's probably a realistic assumption.
I want to go to one point that you made in that blueprint that you laid out, and that comes to appointing the most dovish Fed chair possible. Jerome Powell's term ends in May 2026. Right. We've heard from the president recently that he's going to announce some contenders sometime soon. Bloomberg News has reported in the past 24 hours that Scott Bessent has emerged as a pick. Kevin Warsh is under consideration. I mean, if you had your pick, who do you think is best suited for the chair?
Those are two great names. Those are two fabulous names. Again, if I was president, if I just think about President Trump, he's a growth guy, right? He's a loyalty and growth guy. You're going to be my pick if you're loyal to me. You're going to be my pick if you're a growth guy. And I'd pick a growth guy, and probably Scott would be more in line with that than Kevin would. They will have had a really close working relationship at that point. I also think, again, the playbook's pretty clear historically and right now. We are fiscally constrained. We're in a debt trap. You're going to have to run negative real rates to get out of it. That's what we did in the 50s. We had, if you'll remember, we had a variety of prices fixed by the Treasury while we had 5 and 6% inflation for a period of time. We're going to have negative real rates, and that's why you have to think about what is facing our policymakers in this debt trap as you construct your portfolio. So what would an ideal portfolio be in something like that? Well, what has worked so far? What has worked so far has been some combination of stocks, which won't do great, which would do terribly if we ever actually had, if they called us out and the bond market actually gave us an accident that then spilled over. But it would be some combination of probably gold, vol adjusted, Bitcoin, gold, stocks. That's probably your best portfolio to fight inflation. Vol adjusted, because the vol of Bitcoin's obviously 5 times that of gold, so you're gonna do it in different weights.
You said at one point you would allocate 1 or 2% of your portfolio to Bitcoin. Is it still?
Yeah, I mean, I think you just, particularly now that the roadmap is clear, then I mean, again, if I'm a policymaker, I'm going to run really low real rates. I'm going to have inflation running hot, and I'm going to tax the American consumer to get out of my debt trap. And that's exactly what Japan, who's the most fiscally constrained in the world, doing. And it works until the population throws you out because you let inflation get too hot. So maybe you're in a world with 3.5% inflation and 2.5% overnight rate, and you're kind of trying to run hot and grow your way out of it.
Well, let's talk a little bit more about equities. You know, you mentioned in that scenario that you laid out, equities obviously would do terrible, but where we stand right now, I mean, we're back to 6,000-ish on the S&P 500. We're slightly positive for the year. It feels like after the big performance that we saw in May, though, that people are not sure where to go from here. So assuming we continue along this path where inflation is under control, it seems like the labor market is under control and trade negotiations continue to progress. I mean, what's your base case on equities right now?
Well, again, so a year ago, I never thought the bond market would tolerate the big, beautiful bill. I just didn't think it would. I thought, wow. I thought there'd be a revolt. I thought bond vigilantes actually had some stuff. But
they'd come back out?
But they clearly haven't surfaced. And
we haven't seen inflation.
Well, there's a couple of things going on. One, we know 12 months from now, rates are going to drop precipitously with a new Fed chair. Was it last week when Donald Trump saw was it ADP? I'd drop rates 100 basis points.
Yes.
So we know where his head is. We know who he's going to point.
Well, and just now, the vice president, J.D. Vance, said this is monetary malpractice in a tweet reply to our Joe Weisenthal. So they really want the Fed to cut rates.
So that also is a tailwind for the bond market, right? Because you know short rates right now aren't going to be there a year from today. So that's a tailwind. And again, I think the biggest threat to the stock market has been our fiscal profligacy, something like the big, beautiful bill, because that was always going to be a threat to the safety and security of the bond market, whether investors would tolerate what's going on. And right now it seems like both globally and domestically that the world's okay with kayfabe, kicking the can down the road. We're going to suspend reality. It's okay. So, and in that scenario, again, if I have to make a decision on stocks and I think that rates are going to be 3% in 12 months, yeah, I'm probably long.
By the way, you keep mentioning kayfabe, and we're all kind of watching this, knowing it's fake, but don't really care right now. Is that because we're not invested? Because Brad Gerstner has this idea, and Ted Cruz was on Bloomberg talking about it yesterday. I think it's Invest America, where you give every child born $1,000 and then allow parents or relatives to invest $5,000 a year. Then by the time they're 18 and the stock market continues to appreciate, they have a serious nut. But they've got skin in the game.
Yeah, I think it's. See, I'm the budget.
Hawk, and you
don't
mind spending $4 billion.
And the cranky guy, but that's the best $4 billion that would ever spend in history, because the idea of making kids stakeholders from an early age in capitalism is so important. Oh my gosh! And then allowing employers or relatives or whatever to build that account so that at an early age they understand the idea of entrepreneurship, of free markets, of self-individual excitement about understanding how productivity actually works, how we build things through our own sheer initiative. I think it's just spectacular idea. It's the best $4 billion this government could ever spend.
So there's a good way to add to the deficit, and there's a bad way. That would be the best $4 billion. I'm very conscious of the clock. We only have about 8 minutes left with you. So let's talk a little bit about AI. You've expressed concerns about AI in the past. In May, I believe you said that, I mean, it could be pretty disastrous if you think about, if you really put your thinking cap on. But I'm curious from the investment perspective, when you wear your investor hat, how do you view it then? I mean, there's plenty of things to get concerned about, but we were having a great conversation with Cliff Asness of AQR last week. He's had a real change of heart when it comes to AI. He's embraced it. Are you embracing it?
Well, for sure I'm embracing it. We tested 2 models last week internally. We have a variety of quant teams at Tudor. We tested 2 models, commercially available models. Where AI has gone in the last 4 months, is so incredible. These models will democratize quant modeling for the markets. Like, I can just think, I've been an investment in quant modeling for the last 30 years, internally, externally, a variety of ways. And what these new models do is there's a huge barrier to entry if you think about quant modeling, which is I need to have dozens. If you look at the big ones, whether it's 2 Sigma or Jump or whom, they have hundreds, thousands of employees.
That's their edge. That's Cliff's edge, right?
With these new models, wow.
They lose the edge.
It's incredible what these new models do. And the reason that I bring that up, of course you have to embrace it in our business. There's larger issues regarding AI that I think, if you don't mind, I can't tell you because I don't really trade individual stocks that much. I'm actually using the models from a quant standpoint, so I can't tell you which companies to buy. It's pretty clear that this is obviously the most disruptive technology in the history of mankind. If I can just give you here's the way I think of AI. You're too young for this, but there was a great Twilight Zone.
Okay.
Great Twilight Zone episode where aliens came down to Earth and they had this, and they hand this book that says "To Serve Man," and everyone goes, "Hooray! They're gonna save humanity. It's a humanitarian guide," and it turns out to be a cookbook.
I was ready to push back, but you called me out. I haven't seen that episode.
Yeah. So anyway, we just had our Robinhood AI Poverty Summit on Monday, which I was at. Oh my Lord, the things that AI are going to do for education. There is no excuse for a low-income kid not to have the greatest education if his parents or caregiver is taking care of them. My gosh, they're going to have an individual tutor to walk them through everything. So it's really spectacular. The downside of AI is that we've been served, right? When I say we've been served, you had in February Elon Musk You can think what you think of him with regard to his moral compass, but he's the Thomas Edison of our time. Said AI has the 20% possibility of wiping out humanity. There's the safety side that should set off alarm bells throughout the world, particularly in this country, particularly with this administration. And then just last week you had Dario at Anthropic. Amadai, am I pronouncing that correctly?
Anthropic is good enough.
So anyway, he said that in 1 to 5 years, we could have 10 to 20% employment because of the displacement of white-collar jobs by AI. So now we have
10 to 20% unemployment.
Unemployment in this country in 1 to 5 years. So now you have this massive stability issue. You've got a safety issue and a stability issue, and within the big beautiful bill is a moratorium on AI regulation.
So no guardrails.
Oh my gosh, that is when you've just been certain, and no one. See, the interesting is no one in the AI community pushes back on this, right? Because anyone that understands it and sees how it's progressing, these models are increasing 1 to 500% in their efficiency every 4 months. Understand, these are real possibilities. So
Paul, how do we get to guardrails? Because in the case of the debt bomb, right, as Gary Schilling would call it, you've got bond vigilantes to push back. In the case of the AI bomb, which we fear, there's no government that's going to regulate this because they'll lose out to another government.
Right. So I've come to this realization in the last 2 years that actually I think libertarianism is as much of a threat to our society as socialism. It's the other end of it, right? And you've really got this libertarian bent that's taken hold of this administration. So many of the biggest backers, but oh my gosh, our country's built on. We're built on a system of laws and regulations about private property rights, laws against assault, robbery, etc. So what we have to figure out in a thoughtful way, which is why you have to sit down and begin a discussion. How do we have AI for good? How do we prevent the AI for bad, both on a safety standpoint and a security standpoint? One thing that we really need to do is, again, what is the government's responsibility? What are companies' responsibility? We're going to have this productivity boom, right? Capitalism is so spectacular at maximizing productivity, but it's actually really bad, and it's in the tails, I'll say. It's really bad about distributing income in a society, in a socially beneficial fashion. The best example can be, if we look at, say, since the mid-'80s, if you look and see how the productivity gains in the United States have been distributed, it's about 15% to the bottom 90 and 85% to the top 10. And so what happens when you do that? Well, you get the incredible divisiveness that we have right now. We have a crisis of trust in this country. No one knows who to trust. Hell, we had a faction of the Republican Party storm the Capitol in 2020 because they lost an election. So we're at a really socially fragile time because of wealth disparity, and now we have AI that, unless we think about how we distribute those productivity gains in a way. So is it, Dario mentioned, we're going to have a token on every time a model's used. Bill Gates said suggested, I think 6 or 7 years ago, maybe we tax robotics. There has to be we need to sit down and thoughtfully think through how we distribute the coming productivity gains so that people are happy and not unhappy.
Progress never stops. Neither should you. At PwC.
Catching a bit. A lot of this actually coming through on the back of this headline and comments coming from Donald Trump earlier on. Within about a week and a half and 2 weeks, we might get more as far as information goes on tariffs. And of course, that also leading to
Progress never stops. Neither should you. At PwC.
Now that confluence together with jobless claims jumping to the highest since 2021, that did help to push the dollar down further. Yesterday, it was at its weakest since mid-2023. Today, it's at its weakest since mid-2022, beaten out by every currency imaginable today. The Swedish krona, the Korean won, Swiss franc, the euro, yen, pound, peso, real, that's feeding into the Treasury moves and feeding into renewed bets for monetary policy easing.
The easiest long-term trades are, you know the yield curve's going to steepen, probably to historic wides. You know we're going to cut short-term rates dramatically in the next year. And you know the dollar will probably be lower because of that.
Absolutely. And a relatively strong auction of 30-year government bonds today, holding back the curve, steepening just a touch. And while all this did stir up volatility in equities, ultimately, stocks remain pinned in a tight range, the range that they've been in for the past week, with peak-to-trough moves over just the past 8 sessions of only about 138 points. The S&P today clinging to that 6,000-point line in the sand.
All right, well, speaking of kind of both of those items wrapped up together, you take a look at this chart. It's the Bloomberg Dollar Index versus the 10-year yield. And you can see ever since Liberation Day, so the beginning of April, the divergence where the dollar just continues to grind its way lower, whereas the 10-year yield grind its way higher. And I guess my question is, how long can that separation actually last? Does the yield have to come down to really wind up meeting the dollar? Or are we in a structural change here where you have maybe the back end of the curve really responding to, say, fiscal deficits and jumpy anxiety versus the dollar, which is also dealing with the change of U.S. exceptionalism?
Yeah, we have the dollar already down 8% or so to start the year. I can't even remember the last time we had an annual drop of that magnitude. Let's see how it works out, particularly when it comes to the other cross-asset price action. Bill Campbell joins us right now to kick us off to the close, Global Bond Portfolio Manager at DoubleLine. Bill, great to see you here. Let's start with the dollar here. Weakness once again. This wasn't necessarily a surprise coming into this year. I know a lot of people had bet on some material weakness in the dollar. I'm not sure they bet on this much weakness in the dollar. And the big question is this temporary, or should we just kind of prepare ourselves for a longer-term structural shift lower?
Romaine, thank you for having me on. I don't think I'm going to argue with Paul Tudor Jones on this one. I'm going to add actually an additional factor to his view that this is a longer-term structural trend lower in the dollar, likely over the next several years. Beyond just the easing inflation data and softening employment data, bringing forward the potential for Fed cuts, maybe to the fall or at least the end of this year, I would say that the real fuel underlying the structural view that the dollar can go weaker over the next several years is the unwinding of all the foreign investment that's come into the United States over the past 2 decades. And, more specifically, we've seen a ramping up of foreign investment over the past decade. Yes, we've had U.S. exceptionalism with high growth rates compared to other developed markets, with higher earnings growth rates relative to other developed markets and higher multiples. And what that's done is if you look at the BEA data, it shows that today, or as of the end of 2024, which is the latest data available, there's $62 trillion of foreign savings sitting in the United States in one form or another, whether it's portfolio investments, direct investments, or an additional investment such as real estate. Now, the first part of this dollar move that we've seen this year, in my opinion, is more driven by foreigners hedging all of that investment in the U.S. For the past decade, they've had the luxury of a relatively strong dollar, keeping the need for FX hedges relatively low. And that's been good because FX hedges are costly to foreigners. Currently, most foreign countries are looking at FX hedging costs between 2% and 4%. But now with the dollar trending down, those FX hedges have moved up. We saw the Taiwan lifers, it looked like last night, increasing additionally their FX hedges. But that's just the first part of the move, Romaine. I think that there is a lot of runway for this, for the dollar to move lower over the coming years.
What about with Treasury yields? And I mean, if that is what's occurring with regards to the impact on foreign investors, what becomes the effect on Treasury yields?
Yeah, what a great question. And Alex had set this up nicely with, a wonderful question as to, is this a structural break between higher Treasury yields and the lower dollar? And quite frankly, we at DoubleLine would answer yes. We do think that there is now a fundamental structural break happening. Not only is there going to be some reallocation, even if it's small, of that 62 trillion, that's a very large number when put into market context of foreigners, holdings of U.S. assets. But we also believe that the additional fiscal pressures, which have been very well covered, have increased term premium and will continue to do so. But one item that has been losing some of the headline attention is that both the Fed and global central banks continue to reduce the size of their overall balance sheets by purchasing less government securities. They're less involved, in global government bond markets. That also increases the need. So not only do we have increased supply, but we have a price-insensitive buyer that continues to step back in global central banks. And we think that this is a situation that doesn't have an end in sight, not only with the U.S. bill, working its way through Congress right now, seeming fairly large, but the U.K. is bumping into similar issues, Europe as well, where you're seeing the need for increased infrastructure and defense spending, and then also Japan.
So, Bill, and that's in essence also why we're seeing a lot of central banks buy gold at the end of the day. All right, Bill, so give me your best investment thesis with this in the backdrop.
So what we're advising investors to do is, one, don't panic. We like, and I might borrow from your clip of Paul Tudor Jones at the beginning, that we also believe that the curve will continue to steepen. We think that eventually the moderating inflation and softening labor market allows the Fed to cut interest rates, but that term premium, as we discussed, keeps back pressure to push back-end rates higher, and that's going to be a global phenomenon. So we like investing across developed market global government bonds in the belly to maybe the 5 to 10 year sector at most, but more in that front end to the belly of interest rate curves. Secondly, we're talking to investors about thinking on pullbacks or when the dollar increases, adding to international exposure. We think that over time, international exposure is going to benefit U.S. portfolios, and that's going to provide a decent diversifying offset in global fixed income portfolios going forward. And then for the time being, we still are favoring higher in quality credit trades as credit spreads remain very tight. It remains difficult for us to allocate too aggressively to lower yielding or credit opportunities.
All right, great stuff, Bill. Great insights out of you and really everyone over at the DoubleLine team. Bill Campbell, Global Bond Portfolio Manager at DoubleLine, kicking us off to the close. When we come back, a focus on those inflation numbers, CPI, PPI, both coming in over the last 2 days. Cool, like the other side of the pillow. A conversation with economist Veronica Clark over at Citi.
That's funny. All right, plus we power through with NRG Energy CEO Larry Corbin. He joins us to discuss how his company is going to manage that surging demand driven by AI.
And a little bit later, we're going to focus deeper on AI and tech with Adobe earnings after the bell and a conversation with the co-founder and CEO of Life360. Of course, that's the owner of the Bluetooth tracking device Tile. A lot of other location services there. You don't want to miss that conversation. Stick with us. This is The Close on Bloomberg.
Progress never stops, neither should you. At PwC, we make sure you're ready for what's next, with the expertise and technology you need to outthink and outperform. We're with you, sleeves rolled up, start to finish, so you can stay ahead, so you can protect what you built, so you can create new value. We build for what's next, so you can get there now. PwC, so you can.
Economic data of the morning, recurring jobless claims dropping to their highest level since 2021. Now, that, along with softer producer price inflation, pushing yields lower, dollar lower. Some saying that potentially the Fed could now speed up its rate cut timeline. Joining us now is Veronica Clark, U.S. economist at Citi. Veronica, does this help? First of all, is this sustained disinflation?
So I think it's too soon to see the tariff impact on inflation, but I do think there is a sustained disinflation, and that it is a very positive sign that we were going into this tariff period with an even faster slowing in underlying inflation than we were expecting. So we got the May, of course, inflation data this week. It was really soft across the board. We're getting another 0.1% increase in our for core PCE. That's a really soft increase in core PCE inflation. The Fed's going to be really encouraged by that before we see any of these tariff impacts.
So from that perspective, should the Fed be cutting sooner rather than later?
Yeah, I think they're still, unfortunately, in this wait-and-see mode. I think that's what we're going to hear from Chair Powell next week. I think that's probably what we hear from them in July, but we do have more data to go before we get to that July FOMC meeting, another jobs report, another inflation report. But I think as we're getting into September, they're certainly going to be cutting then.
I am curious to us about some of the survey data. We've made a lot of hay about the consumer sentiment data, either from the Conference Board or from UMich. We get an update on UMich tomorrow. And I'm curious, we've started to see a little bit of an uptick in some of those sentiment readings, both for consumers as well as small businesses. And I'm wondering, given that some of the tariff rhetoric is tamped down, or certainly not at the crescendo that it was just a few weeks ago, is that going to be enough to at least get people more comfortable with the idea of spending and more comfortable with the idea of where they think their lot in life is?
Yeah, that consumer survey data, it has seemed very sensitive to tariff-related developments. That University of Michigan survey in particular, it does seem like it's gotten more volatile after it had a methodology change last year. We have seen it improving even in some of that May data, after tariff delays. So maybe we see more of that in this early June data. But in general, it's just really not a great indicator for how people are actually acting. It's not necessarily a great indicator for how they're spending. And for that, I would look really more to the hard data on labor market conditions. And that's where these claims data this morning is a pretty important story. It does look like the labor market is loosening. I would think that has a bigger impact than sentiment on how people are spending.
So the 4-week moving average on those claims right now around 240,000. Is that above norms, below norms? Where is that? Give me some context.
Yeah, initial jobless claims, they're a bit higher than we've seen them for a lot of this year, but that level, around 240, 250, that's not necessarily a concerning level yet. I think as we were getting closer to maybe 260, maybe higher than 260, certainly if we're getting closer to 300, that would definitely be more concerning. But I'm actually more concerned about this increase in continuing jobless claims. That is a higher level, and I think that's telling us that if you do happen to lose your job, you're not quickly finding a new one. It's already been the case for the last couple of years that hiring has been very low. This looks like hiring that has maybe taken another leg lower. And that in itself could mean, higher unemployment, a rising unemployment rate.
I also wonder how much of that is companies just staying on pause because of tariff uncertainty. And if tariff uncertainty gives way to certainty, does the foot go on the accelerator?
Yeah, I think a lot of it does probably have to do with uncertainty. But unfortunately, if we're waiting for tariff certainty, we're probably waiting a while, right? We still don't know where the ultimate tariff rate is going to end up. Maybe people are feeling a bit more confident that they're not going to be these high, disruptive rates that we got on April 2nd. But it does anecdotally still seem like businesses are pausing investment, pausing hiring plans for now. And this was already a labor market with very low hiring. And if you're still trying to cut your labor costs, at some point, the last option might be to have some bigger layoffs.
Right. Before we let you go, Micron said that today it's going to plan to invest about $200 billion in semiconductor manufacturing. And I'm not going to ask you about the company specifically, but the idea that companies are making these big announcements, GM also did something similar. What is usually the time lag from announcement to, like, shovel in the ground?
Yeah, it is very impossible to know. Unfortunately, we get these headline announcements, and it's really hard to translate that into any kind of growth forecast. One, we don't know what kind of investment would have happened anyway. Are these just headlines, to spark some optimism? Maybe things would have been happening anyway. So how much more of a boost to growth is this? It probably does take, a number of quarters, maybe years to start to see it show up. This is also, presumably nominal investment, and maybe with higher prices, there's less real investment. So just really hard to know how these translate to a higher growth trajectory. And we're really not going to probably see that in the next quarter or two.
All right, Veronica, always great stuff. Veronica Clark, economist over at Citi. Remember the next two big data points that you missed data tomorrow on Friday and retail sales in the middle of next week. When we come back today here on the big program this Thursday, we await those results out of the home furnishings retailer RH. We're going to give you a preview of what to expect. That's coming up next. This is The Close on Bloomberg. All right, time now for our top calls. Big movers on the back of analyst recommendations. And we start off today with Oracle. Melius Research, which had one of the lowest price targets on the street at $163, boosting that to among the highest at $230. The analyst says the outlook for Oracle is looking bright after the software company's earnings beat expectations thanks to strong demand for AI infrastructure. A 14% gain on the day to a record high. Next in line, Tapestry. TD Cowen raising its recommendation on the company behind Coach and Kate Spade to a buy and lifting the price target to 100 from 90. The analyst sees the Coach brand securing its bag as it continues to attract more young customers and to expand its presence in Europe. That stock up for a fourth straight day. And finally, United Natural Foods. North Coast Research downgrading to neutral, this amid the fallout from a recent cybersecurity breach. Now, the company is the main wholesaler to Whole Foods grocery stores, and the cyber attack has knocked the company's systems offline and is still disrupting deliveries. Those shares down 2.5% on the day, but they're down 23% over the past 4 days, now to their lowest levels since November. Those are some of our top calls. All right, we do want to stay in the consumer space and, well, take a look at the luxury consumer. All eyes on RH, the luxury home furnishings company set to report earnings after the bell tonight. Expectations are high, but a lot of questions here about the health of the consumer and their ability to keep buying. Brian Nagel joins us right now to preview those results. Senior equity research analyst at Oppenheimer. He's got a market perform rating on RH. Revenue coming in at about $820 million. That's the consensus on the street. The company, though, still expected to post a loss for the quarter. Brian, what are your expectations out of this company? Are we looking for revenue growth? Are we looking for some meaningful turn in profitability? What?
Well, good afternoon. Look, it's going to be a very interesting report, okay? And the numbers are going to matter. But I think what may matter more is just the commentary around this quarter and what RH sees. Because like you said in your opening, I mean, this is a very good read on the health, if you will, of the higher end consumer. Okay, so what RH says about demand trends through the quarter, what they're seeing here in the second quarter, I think is going to give us some insights into that again, demand trends for the higher end consumer. The other big topic is tariffs, global trade policy. I mean, it's maybe it's settling down a bit lately, but it's been an extraordinarily fluid situation. RH, like other home furnishings companies, imports a lot of product. Okay, and so they're going to be talking about what they're seeing from a tariff perspective, their mitigation efforts, et cetera. So I think really what's going to matter here most is the commentary, and it's difficult to handicap that. Okay, I go ahead.
Yeah, no, I am curious about this, too. And I mean, one thing about RH, one reason why we like covering it, too, is the CEO, Gary Friedman, tends to be pretty vocal about macroeconomic conditions and trade policies and things like that. Is this a company that has the ability to mitigate the impact of tariffs, either absorbing the costs itself or passing those costs on to its end consumer?
No, look, it's a great question. So, I mean, this is a conversation I'm having with almost every company I cover at this point. So we think of RH, and kind of, within this tariff framework, look, given the high price point, given it's a high-end consumer, a unique item, there's probably pricing power. What that basically means is that RH has the ability to raise prices to the extent they need to. They also, given their position as a unique player in the high end of the market, they probably have some leverage or decent amount of leverage over their suppliers, so they could pass these costs back to their suppliers as well. So RH should be a company that should be able to manage through the tariff dynamic pretty well.
Then you look at, say, Williams-Sonoma. They should have also done well after earnings because their numbers held up really well and the stock took a hit. Are we going to be in the same kind of setup for an RH?
Well, look, I think Williams-Sonoma had a good quarter. In fact, I was talking to their management team.
But the stock went down.
Right, but so if we just kind of separate for a second the fundamentals in the market reaction, right now the market's reacting funny, if you will, to some of these reports, and a lot of it's okay. We got a good report out of the way. What lies next? I think Williams-Sonoma, again, it's not a name we're necessarily recommending here, but I think there you're starting to see an improving fundamental trajectory, and it may just take the time for the market to realize that.
Now, clearly with RH, there's some long-term opportunity expanding overseas, also in terms of, say, hospitality, et cetera. But what's the margin picture for that until we really get the pickup down the road? Well, look, it's a good question. I mean, so RH is, they have a global footprint, right? They're pushing into a lot of businesses. I mean, the businesses you mentioned are generally speaking going to be lower margin than their core domestic home furnishings business just because they haven't scaled yet. So especially right now, with this precarious, if you will, backdrop, I mean, that's a challenge for the company. I mean, I think they've got to be asking whether they continue to invest in these projects that you may not see substantial profitability for some time.
What do you think about their strategy of becoming a little bit more, I don't know if it's hospitality or services or what the right word is, but you're talking about a company that's moved into restaurants, hotels. They've kind of made it clear that they want to be more than just a furniture retailer. Is that a good strategy?
Well, I mean, look, I've written a lot about this. I mean, it sounds great, okay? And I know, the CEO of RH, again, very talented executive, talks a lot about companies like LVMH, some really powerful global brands. As an analyst following, domestic consumer, I would much prefer that RH focus more on its domestic business, which I think it does a nice job. But what I've seen too many times are companies like this where they have a very good core business, but then they have these aspirations to be much more. And what happens is it really dilutes the efforts. And that's one of my bigger concerns here of RH.
All right, Brian, really appreciate it. Thanks very much. Looking forward to those numbers. Brian Nagel is Managing Director and Senior Equity Research Analyst at Oppenheimer.
And I just want to point out, too, I kind of forgot. Remember when they reported last time? That share dropped 40%.
Oh, yeah.
Okay, yeah. I forgot about that, yeah.
You forgot about that?
I did.
So the ongoing joke is that Romain loves RH for many different reasons. I think he's like a secret member of their RH club.
We'll
yeah?
see.
No?
Do you want to come?
Yes. Are you inviting me?
No, I'm not a member.
Oh, he's so a member. All right, coming up, we're going to talk to Larry Coben, President and CEO of NRG Energy, about how AI is causing a surge in energy demand and how it's going to impact the power industry and his business. This is The Close on Bloomberg.
And we have so many plants being built right now. It's so beautiful to see. And one of the reasons they're coming here is because they have to produce tremendous, especially the AI, they have to produce beyond believable amounts of electricity.
3:30 p.m. here in New York, and that was the President of the United States speaking a little earlier down in Washington, Romain Bostic alongside Alex Steele. And I think that last line there, I think, really sums up a big part of what we've seen in the markets over the last few months.
Oh, absolutely.
Yeah.
And we've seen it in deals also. We saw Talon Energy reaching a deal with Amazon Web Services to provide power. We also saw that with Constellation and Meta, Constellation and Microsoft. We don't really know, though, in terms of pricing, if they're comparable or what these kind of contracts are going to wind up looking like or how easy it is to get these contracts done, but we're seeing them.
And it's a rush to find other alternatives as well. We talk a lot about nuclear power, nano nuclear, Oklo, building these small modular reactors. So people looking for options.
Looking for options, and we have a CEO of a company also looking for options right here. Larry Coben is President and CEO of NRG Energy, a company that generates electricity, providing energy solutions, natural gas to millions of customers across the U.S. and Canada. Good to see you. Thanks for being here.
Pleasure to be here.
Where are your data center deals?
They will be all over the country.
Okay. When are we going to get them?
Well, you're going to get a fulsome update on our second quarter call.
Okay, good tease.
And so, you'll have to invite me back the day after so that I can, talk about them in detail. How's that for
good? That's great.
begging my way back on?
Yes.
But Look, these are complicated deals. There's huge deals out there. I think people now, every time there's not a data center deal for a month, people wonder if they're real. But now that we've seen the last two, they're clearly real, but they're complex. And so they take time to put together. And, you have to decide when to disclose them, too, because even when you talk about them, there's still a couple steps left before they're actually done.
I'm curious about all of the attention right now on nuclear and what energy's role, if at all, would be in that space. Because when it comes to data center demand, there are a lot of people that have talked about the stability of nuclear power and powering those centers.
Look, there is not enough nuclear power in the country, full stop, to power data centers. And so, from the beginning, we've known that, nuclear power some of those deals may come first, but that gas is going to be an integral part of that. We're seeing that every day. If small-scale nuclear reactors become a commercially viable technology, which I hope they will sometime 2035, 2040, we would certainly look to do that. But this is going to be things that are powered by everything, because there's simply not enough electricity in the U.S. grid to power everything with nuclear power. And remember also, if you take the nuclear power off the main grid, somebody has to supply the people who were buying the power from the nuclear plant before. It's not as if by moving it away, you've all of a sudden got new capacity.
I am curious about the geography of that and how close you have to be to those sources, about the idea of sort of moving that power from sort of one region to another. I mean, how cohesive can that be?
There's really two kinds of transactions. One are kind of co-located when you're on one of the power plant sites and you're selling power from next door. But honestly, that's not going to be the majority of the transactions. The majority of the transactions are going to be, you're going to be somewhere on my grid with your data center. My power plant will be somewhere else on the grid. Maybe a new plant, it may be an existing plant, and then I'll be selling you power the same way I sell power to commercial and industrial customers all over the country today.
They're just virtual power purchase agreements, so you have some clarity on financing, basically, at the end of the day.
Right, clarity on financing and clarity on supply for the data centers, obviously.
Okay, so you guys just did a $12 billion deal for a fleet of gas-fired plants from LS Power Equity Advisors, right? So that feels like a buy versus build scenario. It takes a long time to build stuff. What's next?
I think we're going to do both. I mean, I think the LS Power deal doubles the size of our generation fleet and gives us metal in a lot of different jurisdictions where we didn't have it before, so we can have more creative and longer-term solutions, both for data center users, but also our regular customers. But remember, we also have an arrangement with GE Vernova and Kiewit for construction and turbine slots. But some people are going to want new and dedicated power plants. Some jurisdictions are eventually going to say you can't take power off the grid long term unless you replace it. We're all about building optionality in menus for those customers. And we think we've done a great job at doing that between the LS Power deal, the GE Vernova Kiewit deal, and some other things that we're working on to give us additional optionality for data center service.
You guys sold out of nuclear, right? And I'm wondering if small modular reactors for the future, because you can't build that tomorrow, if that's going to be something you guys are looking for.
Well, I think when they are commercially viable, we are happy to. We are kind of technology agnostic. We only had 44% of one nuclear plant, so we didn't have the ability to dispatch it. That's why we sold out of it, because it wouldn't work for any of these sorts of strategies. I was on a panel in 2013 where I was told small nuclear would be the thing in 2020.
I know. Me too.
Yeah. Maybe it was the same panel. I think I bet the person $100 it wouldn't be in 2020 and then double or nothing for 2030, and I'm going to win both bets. But eventually, small nuclear reactors and big nuclear reactors, because at the end of the day, you need one regulatory regime for your nuclear fleet, that'll be part of the solution. But it's not going to be all nuclear. It's going to be geographically dependent and customer dependent. So I believe we're going to have it. We're going to have gas. We're going to have nuclear. And by the way, we're still going to have solar and wind and hydro and batteries. I mean, those businesses are having a tough time at the moment, but they're an integral part of the solution as well.
I am curious about regulatory policies out of Washington and whether they're going to be supportive of that, particularly on the last couple of points you made with regards to solar, wind, some of those renewable energy sources.
Well, that's a great question. I wish I knew the answer. I might be in a different business.
Yeah.
Look, I don't know what's going to come out of this particular bill, but longer term, the market is going to decide what happens here, and that's what's going to drive this. I mean, people forget that Texas has twice as much renewable power as California, and it doesn't provide the same incentives that California does. And so, but that's market driven. So markets will drive this more than anything else.
How hard is it? Okay, but markets still need help. I think is the point, right? So do you think that if we remove help for some of these energies, that it's going to take either that much longer for it to get economic, or how does that work?
I think it will depend where you are. I think you'll still see solar, for example, in Texas.
Okay.
I think the people who are going to suffer the most is residential rooftop solar, but that's, I think, most dependent on subsidies today. I think utility solar will work in places of high electricity pricing and lots of sun. Wind, obviously, in areas with great wind. No great insight there. But I think you'll still see it, but I do think you'll probably see less because people will be uncertain what the regulatory regime will bring tomorrow.
There was a piece out in the Wall Street Journal coming down hard on you guys for accounting. And I'm wondering, A, well, what do you make of that? But B, do you think that there's a lack of confidence in the stock because of that? What's the reaction?
There have been 2 articles, and the stock went up both days that those articles were published. Derivative accounting is complex, and not everyone understands it. Our investors are perfectly comfortable. Our accountants are perfectly comfortable. Our analysts are. We don't do very much speculative derivative trading. What we do is we buy derivatives so that if I have a 3-year power contract with you, I then deliver it to you. So it's, in fact, not really an open contract, but because financials are done annually, it looks like an annual contract. So from my perspective, I don't really understand those articles. I just think there's somebody's confused, and I don't think it's us.
All right. Well, we appreciate you answering the question and appreciate your time, Larry.
Thank you for having me. Appreciate it.
Larry Coben, the president and CEO of NRG Energy. And Alex, before we go here, seen a big spike in shares of MP Materials. This is basically the only domestic producer of rare earths. There is a headline crossing the wire here that the president of the United States is considering developing a plan to use Cold War era powers to prioritize and fund rare earth projects. Effectively, this would basically become sort of a military endeavor that would give them the power to sort of facilitate the production of these materials. You're seeing a big spike in the shares, up 9%.
I mean, we got critical minerals here. I don't know how many rare earths, though, we got here. So that's a different story.
Yeah, absolutely. All right, well, we'll dive deeper into that and get you some more details on that. Meanwhile, policies out of Washington also driving shares of GM and Ford, but to the downside, the possibility of renewed auto tariffs. That's coming up next here on The Close on Bloomberg. All right, time now for our stock of the hour. We're taking a look at 2, GM and Ford, down about 1% on the day, off the lows on the day here, but they had taken a big dip down after President Trump floated the idea of raising auto tariffs in the, quote, not too distant future. David Welch joins us right now, our Detroit bureau chief, to talk a little bit more about this. I'm a little confused. I can't remember exactly where we stand with the auto tariffs. What did Trump say today, and how would that change where tariffs are right now?
He said he may raise them again because he was successful in his view in getting General Motors to commit $4 billion to expanding production in 2027. Ford's committed to some more investment in the U.S. as well. And I think he sees he's got some momentum with getting companies to move their production back. And I think if you're the automakers, it's sort of the never-ending story, right? GM had already announced moves to try to offset $5 billion in tariff exposure with different moves. That didn't even count all the production they're going to move from Mexico to the U.S. in a couple of years with what they announced the other day. And if there are more tariffs or higher tariffs on parts and other things, that just puts Ford, GM, and anybody doing business in the car business in the U.S. Kind of back to maybe not square one, but back to trying to figure out how to offset costs for parts, vehicles, and the like. So it's just when they thought they were done with this, or maybe at least had done a lot to mitigate the damage and satisfy the Trump administration, there's a threat for more tariffs.
But on the flip side, there's also maybe some carve-outs or at least some ability to get aluminum and steel from, say, Mexico without that huge tariff rate. So, like, that could help in theory?
Yeah, look, there are some offsets for USMCA compliant parts and vehicles, and even some money coming back to USMCA compliant vehicles for a period of time, and that lasts a couple of years, where you basically get a discount on the tariffs on the non-U.S. content. In other words, parts made in Canada or Mexico that go into vehicles that are otherwise compliant. It's a really complex formula, and Trump didn't exactly say how he would increase the tariffs, what it would mean for some of those offsets and some of those USMCA benefits that companies get by being compliant. It's just like Trump often does, he puts the idea out there, and so you know that something's going to be in the works. It could be a way to bargain with some of the countries rather, like Japan and Korea, where we don't have a new trade deal, and our automakers are still waiting to see what's going to happen there before they change anything with production. So maybe he's just trying to get leverage with them, but it's a threat, and investors and companies have to deal with it.
All right, David Welch, our man out there in Detroit here, the latest comments by the President of the United States regarding auto tariffs, pushing Ford and GM slightly lower. We should point out Trump was speaking at an event about terminating those California EV mandates, something he had promised to do on the campaign trail, and now he has apparently done.
Yep, and also just sort of raises the bar then that hybrids seriously will then be sort of the way forward. But what do you do if you're still producing and you still want to put money into EVs? Like what you stop production? Is that what happens?
Yeah, absolutely. I just want to point out, too, just real quickly, a couple other big movers on the day. Remember, we had Chime, a new IPO coming to the market. Those shares up 38%. I also want to point out MP Materials. We just broke that news a little while ago. Those shares now up 16% on the back of that potential boost to rare earth discovery. Production? I don't know.
Yeah. All right. Well, we're about 15 minutes away from the closing bell right here in the U.S. We're going to take you to the closing bell.
Is your back hurting?
S&P, everything hurts, okay? The foot, everything. S&P is up 0.2%. Jordan Jackson, global market strategist at JMP, will be joining us.
10 minutes until we get to the closing bells. Fractional gains on the S&P once again. Romaine Bostic here with Alex Steele.
All right, taking a look at the S&P as you were mentioning, up 0.2% off the highs, but nonetheless, you have the NASDAQ actually flat on the day. I did want to point out the biggest gainer, which is Oracle, which was so interesting because the initial reaction was down on earnings yesterday, but then once we got that growth really coming through to the market, the stock had a super nice rally. But, you know, it's not really widespread, whatever movement we're seeing. We're looking at the Russell down 0.5%. And that and the transportation index not doing much either.
Yeah, kind of interesting. Oracle really turning out to be one of the big stories of the year. We should point out the biggest decliner to the downside. We do need to mention it is Boeing shares are down about 5% on the back of that horrific accident that occurred earlier this morning, U.S. time. As far as some of the other movers, Coinbase, Warner Brothers moving to the downside. And you're actually seeing a bid come into a lot of the healthcare stocks as well as a lot of the gold stocks.
Safety trade. The safety trade there, and you can see yields down here on the day. So too is the dollar, though the VIX is elevated back at that 18 level as we count you down to the closing bells with just about 9 minutes to go. Jordan Jackson joins us here in Studio 2, global market strategist at JP Morgan Asset Management. All right, Jordan, great to see you here. We've been talking a lot here about this climb in the S&P. We're holding that 6,000 level, and everybody wants to know, do we get back to that all-time high, 61.44 and change? What gets us there if we do get there? And more importantly, was this sort of path from that low in March to where we are today, was that even justified?
Yeah.
It's a lot of questions there.
It's a lot of questions.
Take whichever one you want. Yeah.
Well, I think over the near term, we should expect a bit of choppiness. Like when you consider where valuations are, you consider how far and how fast the market has come since the bottom in April, the markets are really poised for perfection right now. Any sort of deterioration in these trade negotiations that are happening, some concern, maybe another leg higher on the back end of the curve, depending on the price tag of reconciliation working through. Now the Senate has to push through their proposal. But again, the markets are really priced for perfection. I do think there's a risk that we could see some volatility and choppiness over the course of the summer. That being said, I still think markets are going to have an all-time high when we look at the end of the year.
Yeah.
I think we can probably end the year somewhere between 6,300, 6,400 on the S&P.
Okay.
And so I think there's some further upside for the balance of the year.
I am curious about that. I mean, right now, the Bloomberg survey, the last Bloomberg survey, which was taken sort of early last month, the average price target of the strategists that we track was at 6,100 roughly, I think. That's most likely likely going to go up when the new survey comes out next week. Some people are actually going a lot higher than that. They're above 6,500. We even had someone on the program earlier today on the network who was actually saying 7,000 over 12 months is not necessarily out of the cards.
Well, if you take a look, and we know markets are forward-looking, you look ahead towards 2026, arguably the bullish case is the trade negotiations will be behind us. Corporate America will have, figured out balance sheets, figured out costs, now back to a profitable environment. Consumer may be looking at some modest fiscal stimulus by way of reconciliation. Being able to expense R&D, domestic R&D, helping corporate America a little bit. This is a better 2026 environment, and in that environment, I could see the market continue to propel
Right,
higher.
so that's tricky. So in the short term, it's kind of safety trade, and then you got to get more constructive, right? So what's your safety right now?
Safety continues to be value stocks, defensives, gold, larger cap over small cap, right? The stuff that's sort of worked through the first 3-4 months of the year. And I think you got to be careful again where valuations are. The cheaper stuff is going to buffer a little bit better if we get another sentiment-driven, valuation-driven sell-off in the market, which we do expect over the near term. I do think there is still some concerns around the E in the PE ratio right now. There's been a lot of debate about, kind of this blended 12-month earning of about 270 on the E. Should it be 250? Should it be 300? There's a lot of wide-ranging estimates. But I think over the near term, there's some downside risk to earnings. Over the longer term, next 12 to 24 months, I think, corporate America has been very resilient and been able to navigate a lot of this uncertainty. They're going to go back to earning money again. And that provides the bullish case for the balance of the year.
What about the bond market? Clip the coupon or stay away?
Clip the coupon. Okay. I wouldn't be looking at core fixed income as a total return asset class, i.e. yields are going to come down, you're going to get bond price appreciation. I really think this is a coupon. I think yields are range bound between 4.25% and 4.75%. I think we blow past on the downside 4.25% if we hit a recession. I think depending on the reconciliation price tag, we could see some upward pressure on that 4.75% level.
There's been a lot of discussion about the idea of reallocating outside the U.S., both the idea of foreign investors who were invested in the U.S. maybe pulling back, and U.S. investors maybe looking for, slightly better value overseas. Is that something that you recommend?
Well, I think to diversify, for those investors who are particularly concerned about debt risks in the U.S., term premium maybe continuing to grind higher from here. Looking globally where arguably while Europe is loosening up the purse strings, they've got the capacity to pull back if they need to. They got the political willpower to do so. I think it's better stated. As a U.S. investor going globally, though, depending on how you structure your hedging back to U.S. dollars, those forward FX interest rate differentials, you're getting a pretty nice pickup on the hedge premium right now, right? Because the Fed's been pretty down pat and staying patient, whereas you look at short-term rates overseas, that differential acts as a nice kicker for bonds.
I am curious, at least for U.S. investors here, or at least people invested in the U.S., are you really getting a true premium? And we talk about the lack of a meaningful term premium on the long end of the curve in treasuries, and even in equities. There's been, at least in aggregate, this idea that the equity risk premium isn't necessarily keeping up with historical averages. And it raises the question of, what would you buy? Like, if you're not already positioned in equities in some meaningful way, would you actually enter a new position at these levels?
Well, I think you got to be thoughtful about kind of valuations and where you're entering. I think, from a valuation perspective, small caps, again, and also time horizon matters as well. If you're talking about 2-3 years out, I think the valuations in small caps right now, I think, right on the bond side of the thing, the 2 to 3 year part of the curve is still, in my view, the sweet spot. Fed's still biased towards cutting rates. Default rates remain low in corporate America. Maybe you tackle some spread products, some securitized spread on top of that. That gets you to a nice yield of around 5.5–6%. You clip that for the next 24–36 months and are able to sleep at night. And I have a 10-month-old, so I don't really sleep too much already.
All right, well, we'll let you go and maybe get some rest here or get back to work. It all depends. Jordan Jackson, global market strategist at JP Morgan Asset Management, counting us down to those closing bells. Just about 3 minutes to go. The S&P fractionally higher on the day, led not by tech, but by utilities. So tech is the second biggest sector in the.
And that's all Oracle at the end of the day, because that monster growth rate from cloud AI infrastructure.
Absolutely. To the downside, you are seeing a lot of the discretionary stocks weaker, as well as some of the industrial stocks as well. And we talked a lot today about the move lower in the dollar. Pretty magnificent, if you ask me, and not in a good way. But lowest level since 2022. Alex.
Right, and then you put that with the divergence between the 10-year and the dollar. If you put it between the 2-year, it's not as dramatic, that spread between the two. But the VIX is at 18. So, yeah, it's still low-ish, but it's picked up over the last couple of days despite modest moves in the equity market.
A full breakdown of all of today's market action, that starts now with our global simulcast.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now we are 2 minutes away from the end of the trading day. Romaine Bostick here with Alex Steele, taking you through to the Closing Bell with a global simulcast. It starts now. Scarlett Fu in the TV studio, and looky Lou, Carol Massar and Tim Stenovic back in the radio booth as we welcome our audiences across all of our Bloomberg platforms and our partnership with YouTube. Great to see both of you here again. I'm not sure you missed a whole lot. It's been kind of a weird market action the last few days, and today certainly no different.
Yeah, it's interesting, right? The moves are kind of slight. I mean, we are holding on to our gains, and it looks like a little bit of an uptick here in the last few minutes of trading. But, you know, behind the small moves, there's so much going still on when it comes to certainly U.S.-China trade, whether or not the president is backing off certain policies when it comes to immigration. There's just so much churn, I feel like, in terms of news behind the trade.
Yeah, Eric Weiner was just on our program, and he shared with us a surprising technical, to me at least, which is, and I'll get the numbers a little off here, but approximately over the last 4 weeks, we've seen a 1% gain on the S&P 500, roughly. The 4 weeks before that was a 12% gain. So I won't say we've been treading water for the last 4 weeks, because 1% is nothing to shake a stick at, but taken in the context of the moves that we've seen over the last 8 weeks, hasn't been much.
Yeah, so it's a slow grind higher, climbing a wall of worry. I'll throw out all the cliches at you. But, you know, the other thing to keep in mind is we're talking about the weak dollar. The Bloomberg Dollar Index at a 3-year low, that's going to be a tailwind for so many companies in the S&P 500 that depend on overseas sales.
Well, here's the real question, guys. Carol, did you sit next to Tim when you traveled to San Diego?
I did. We actually sat side by side, and we survived. And
did you talk?
Actually, a little bit.
I only responded to her questions.
I did. I did fall
You only
asleep.
speak to Carol Massar when spoken to on an airplane.
Wow. All right.
Not
well,
that bad.
well, I don't know if this is related, but the main indexes that track airlines are lower here on the day by about 1%. Meanwhile, the rest of the market is in the green, with the Dow Jones Industrial Average up about 100 points or 0.25%. The S&P 500 continues to sort of inch higher, up about 23 points or 0.4%. 6,045 and change is your closing number. The Nasdaq Composite up 0.25 percentage point. The Russell 2000, that's your main laggard, down about 8 points or 0.4%.
All right, so let's dig into the S&P 500, guys. Not quite an even split. Scarlett, actually 300 names to the upside in the S&P, so a little bit more of a bullish tone. Can I even say that? 201 names to the downside, 2 unchanged.
Yeah, that's fair to say. You look at the IMAP and it kind of shows up that way as well. You've got 8 sectors in the green, led by utilities, where 30 out of 31 big cap utilities finished higher on the day. PG&E is the exception there. Tech lifted by Oracle.
That's always a good sign when utilities lead the charge, right?
Yeah. But then you also have tech leading the way too, largely on the back of Oracle, but still tech and utilities. Maybe they're both safety trades because, you know, big cap tech. And then healthcare up 0.8%. The laggards of the day: communication services, consumer discretionary, and industrials.
Very interesting. All right, so let's get to some of the individual gainers. Hey, Oracle, that is your number one gainer in the S&P 500, finishing the day with a gain of more than 13%. Company reported fourth quarter results that beat expectations, and they projected a 70% gain in cloud infrastructure sales this fiscal year. So really giving a bullish outlook. You okay?
Yep, all good. Sorry.
Okay, good. No, that's okay. Giving a bullish outlook for the closely watched business. Stock, by the way, is up more than 20% year to date, so definitely an outperformer. Datadog. I don't know. For some reason, when I say Datadog, I think of you, Romaine. Don't you like this name?
Okay. I don't know where you're going with that, but yeah, let's continue.
Datadog. You always talk about Datadog. No, I didn't mean it. Do not read anything into that.
I read everything.
I know. No. Sometimes a cigar is
he has
just
a dog.
A cigar.
I do.
He has a dog.
Yeah.
I do.
Okay.
Wonderful.
So maybe that's
called
it.
Data?
No.
Oh, that'd be funny.
It's called Carol.
Number one gainer in the NASDAQ 100. All right, moving along. Up about 3.5% in today's session. Wolf Research upgraded the software company to outperform outperform from pure perform. They say it's one of the best positioned names in their coverage to benefit from AI adoption from both an adjacent, more workloads to be observed, and direct new AI offerings point of view, according to the analyst Alex Zukin. Price target at 150 a share, and so the stock closed at 122 and change. So some upside certainly there, according to Wolf Research. Cardinal Health, 4.5%. This was a top gainer in the S&P 500. Shares hit a record here today after the healthcare distributor boosted adjusted earnings per share guidance for the full year and gave long-term growth targets that impressed Wall Street. Stocks up about 35% year to date. I know it was a record intraday, so yeah, okay.
Can I just add a couple honorable mentions?
No, I have one more.
Wow.
Shine.
Okay.
Shine Financial, which
Okay.
I was assuming you were going to get in there. So I asked Finley, if I could add this into. I know that was going back. Finley, if I could add a fourth name. Shine Financial, guys, up as much as 66% in IPO today, finishing the day with a 37% gain. We're talking about an IPO that went pretty well, priced above a marketed range. So. Doing pretty well. What are you going to add?
I'll add another honorable mention. That was my honorable mention, by the way. I'll just add MB Materials having a great day, up 14% on the back of that news about a potential loosening of rare earth rules here in the U.S. Tim?
All right, let's do decliners. I got my eyes squarely focused on the tragedy that happened in India earlier today. Watching shares of Boeing down 4.8% on the day, fell as much as close to 6% earlier in the session. 787 Dreamliner traveling from India to London's Gatwick Airport crashed just shortly after taking off. This was the first ever complete loss of a hull of a 787. It's a plane that's more than a decade old. It's got advanced lightweight composite materials that improve fuel efficiency. There's about 1,150 of these jets in service, just an absolute tragedy. 2025 is right now one of the deadliest years in the past decade when it comes to civil aviation. Also affecting...
And I just want to point out, Tim, we
go ahead.
are actually waiting for a press conference from the U.S. Transportation Secretary, Sean Duffy, on that.
Yeah, we're going to dip into that one on radio, too, when he does start to speak. Shares of General Electric now doing business as GE Aerospace, the engine manufacturer, down 2.3%. These were the engines that powered that 787 Dreamliner. They're the Gen X 1B engines. GE Aerospace actually is going to put together a team. They're going to go to India to analyze the cockpit data of that 787 Dreamliner. This, according to a report earlier from CNBC. Once again, GE shares down 2.3% today. And finally, how about some Pokemon trading cards? Because that's what GameStop is saying is the future. Shareholders not loving it, falling 22.5%. What's that?
Not Bitcoin?
Not Bitcoin. I guess this week it's growing trading card business. Ryan Cohen said at the company's annual shareholder meeting, he's the CEO, that GameStop will focus on growing its trading card business. The business of Pokemon and sports trading cards is in line with our heritage. It fits our trade-in model. It appeals to our core customer base, and it's deeply embedded in physical retail.
Adobe earnings crossing the wire. Looks like a beat and raise quarter. Revenue up about 11% here at $5.87 billion. The street was looking for 5.8 even. Adjusted EPS coming in at $5.06 a share. The street was looking for $4.98. The company's guidance here for the third quarter. This says revenue will be in a range of $5.88 to $5.93 billion. The low end of that range is the average of street estimates. The company also says digital media revenue, a key metric now, of course, given everything going on with AI, 4.37 to 4.4 billion. And once again, the low end of that range is effectively the average of analyst estimates. You see that reaction in the shares, up 6%.
So the big question is really how the company really frames what's going to happen once its price increase comes into effect. It announced it back in May. It takes effect, or took effect June 17th. Takes effect June 17th. I'm getting my dates all wrong. But that's a big question mark because you've got upstarts like Figma and Canva that can take away some of the casual users, but the enterprise users will probably stick with Adobe. And how much will we see that really jump in the revenue line?
All right, guys, just quick check in here on the bond market as we're waiting for more earnings to come out. One of them is Adobe, trickles out as well. Buying across the curve, what was really interesting here is that we are off the lows of the session when it comes to the 2-year, despite those jobless claims and continuing claims, as well as that softer PPI. Also, on the back end, we had that 30-year auction. Went all right. We got through the auctions this week. Everything worked out okay.
Yeah, so interesting to see. Hey, RH just starting to cross the Bloomberg terminal. Company saying it still sees fiscal year revenue of up 10% to up 13%. Keep in mind, as we wait for some more numbers to come out, this one's been beaten up big time year to date. It's down about 55% with almost 21% of the float shorted. So any outperformance, we could see some short covering, but we'll see, because right now we are seeing the stock bouncing around just up about 0.4%. Anybody else?
No, sorry, I'm just trying to dive in, of course, into the RH earnings shareholder letter here. They don't actually release the numbers in a sort of clean fashion, so it'll take us a moment to get to them. But it gets to this idea here. We talk about kind of the dichotomy between what we're seeing on the business spending side when it comes to Oracle, when it comes to Adobe, and, of course, what we see on the consumer side when it comes to RH, at least luxury consumers. Alex Steele, a big fan.
Oh, yeah. Yes. Romaine loves the RH. Sees second quarter revenue growth of about 8 to 10%. So those numbers coming in as well. And again, those full year revenue growth about 10 to 13%.
Yeah, exactly. All right, guys, that is a wrap. Our cross-platform coverage. Good to be back with all of you guys. We do it on radio, TV, YouTube, Bloomberg Originals. Alex is heading out. Scarlett and Romaine continuing, certainly on the TV side. Tim and I continuing here on Bloomberg Business Week Daily. Guys, we will see you all together, same time, same place, tomorrow.
And you want to stick around. Our coverage continues here on Bloomberg Television with a big focus on AI, a big focus on tech, a deeper dive into those earnings out of Adobe when we come back after the break. This is The Close on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. This is The Close.
Welcome back to The Close. I'm Scarlett Fu.
And I'm Romaine Bostic. Two numbers, Scarlett, 60, 53, and 599. Those are basically the resistance and support points for the S&P 500. It's been pinned between that now for at least the last 8 sessions. And I guess the good news is that it's at least not falling below that support. 60.45 is your closing on the day, up about 0.4%. Once again, another day of fractional gains. But a few red flags to keep an eye on, at least when it comes to the cross-asset space. The dollar continues to weaken, down 0.6%, now back down to its lowest level since 2022. 30-year yields continue to drift lower. In fact, the entire curve drifting lower today. In fact, we're actually down on the 30-year yield this week by about 15 to 16 basis points. And again, given all the discussion about everything that's going on in Washington, there was an expectation you would see that move higher. And then a bit of a flight to safety with gold getting another bid here on the day, Scarlett. A spot gold up about 1%.
Yeah, so I don't know how much you can read into that lift in stocks if you have gold up by 1% on the day and the dollar weaker. All right, let's take a look at some individual movers. And we have the automakers all down on the day with GM. Excuse me, that should be GM, but that's incorrect. I put in the wrong ticker there, leading the way lower. And this is really on the back of President Trump saying that he might increase auto tariffs above the 25% level already, put out there in the not too distant future. So I know that's really vague and not specific, but his rationale is the higher the tariffs, the more likely it is that these automakers will move factories back to the U.S. or build factories here. And of course, the biggest gainer here, thank you for fixing that for me, GM down 1.2%. Oracle, the biggest gainer in the S&P 500, rallying by 13%. This is a record high here for the stock after it gave a bullish outlook, 70% sales growth this year in cloud infrastructure. And let's take a look at Adobe in after-hours trading. This is the creative software company, up marginally right now by 1/3%. The second quarter numbers, both on the top line and bottom line, beat analyst estimates. And for this quarter, the outlook for sales was really a range, and the midpoint of that range did top analyst estimates. Romaine?
Absolutely. And the CEO saying in that statement that, quote, they continue to invest in AI innovation across all of their customer groups. Gil Loria joins us right now, Managing Director and Head of Technology Research at D.A. Davidson. All right, the numbers look good on the surface here, both in terms of what they reported in the quarter and at least their outlook going forward here, Gil. I am curious about this idea of the investment in AI. How much progress you think they've made on that and how additive that might be to the bottom line going forward?
Well, I think it's going to be very additive. If you think about that creative suite that Adobe provides, the critical part of that is the image generation, the video generation. And we think that Adobe can capitalize on all the innovation and the progress to make those products a lot better. Adobe has had a very thoughtful approach about creating its own tools using generative AI, but also allowing their customers to incorporate the latest and greatest from the model companies, from OpenAI and Midjourney and Google in order to make their products better. So we think AI is going to be accretive to them. They're already adding hundreds of millions of dollars of revenue. It's contributing to more than $1 billion of revenue. And we expect that to continue, which is very contrary to the narrative around Adobe. Somehow Adobe is getting snagged as an AI loser. We think that's a misunderstanding of how the technology works. The technology can generate the image. It doesn't help you with the collaboration. It doesn't help you with the editing. It doesn't help you with the publishing. That's what Adobe does for its customers.
That's certainly true. I mean, just to play devil's advocate here, I mean, there have been a lot of people, and I'm not one of them because I don't use it in that capacity, but for the creatives that I do know, and when they use Firefly and use some of the other tools, there's been a lot of concerns that, at least in their minds, their view, that it's just not good enough. I understand that they may not have a choice to use it because that's what they use in their jobs and their corporations, but the question is the quality going to hold up to keep those people tethered to the product?
It's going to hold up for the actual customer for Adobe, which is the companies, the enterprises. Of course, they see the value of the whole prospect of using Adobe, the workflows, again, the editing, the distribution. They care about more than just the generation. As a user, we may just care about the generation, but Adobe's customers are the companies that buy the software. And from their perspective, they just need it to work with whatever model is out there. And that's what Adobe has done. So even if you don't think that Firefly with Adobe generation is as good as Google generation through VO3, that doesn't mean that the corporate customer is going to shift to VO3. They'll just ask Adobe, hey, we want to use your creative suite with the image generation from Google. Right. So that's what makes Adobe so sticky. And that's why all these image generators will, over time, get incorporated into Adobe, and you as the user won't even notice that it's different.
Okay, thanks for explaining that. Gil, how much of a moat does Adobe have with its creative software for enterprise customers versus the more casual user like a Romain?
So the moat is entirely on the enterprise side because they're the default. They're the default application for marketing organizations and ad agencies. As a user, you may toggle back and forth, but when you show up to work and you turn on the computer, you're going to have the Adobe suite, you'll be trained on the Adobe suite, and you'll keep using it. That is precisely where the moat is. So you may, in your personal life, decide to experiment, but when you show up to work and turn the computer on, you'll be using Adobe, and the company will be paying Adobe for you to use that software.
Got it. And of course, all right, let's talk about the creative side when it comes to Figma. Figma was the company that Adobe tried to buy but failed to do so. So it's a competitor. Canva has also gained strength as well. So what are Adobe's competitive advantages over these two, especially with those that are not sticky users?
Well, those two companies are growing very fast, and we're very much looking forward to see them as public companies within the next few quarters. But Adobe has the opportunity and is working hard to improve the low end of its product base, the freemium products, the ones that you download, the ones that students use. And they're making progress there. But that is a true competitive thread that as Canva and Figma work their way up market, Adobe's going to have to continue to make sure that the free product or the low-cost product, the monthly subscription product, is at least competitive with those offerings. And that's Adobe's challenge. It's been catching up. But again, Canva and Figma are growing very rapidly, and they will be successful public companies one day.
Right. And again, casual users are the one most likely to experiment and just check out other offerings as well. Gil, thank you so much. Gil Loria is Managing Director and Head of Technology Research with D.A. Davidson. Adobe shares now down about 0.9% in after-hours trade. Coming up, we're going to speak with Ray Wang. He is Chairman, CEO, Principal Analyst, and Founder of Constellation Research for his outlook on tech and whether AI will continue to drive investor interest. Of course, we did have an IPO today from Chime as well. A strong debut for that company. This is Bloomberg. We saw shares of Chime jump as much as 66% in their first day of trading after the company raised $864 million in an IPO priced above the marketed range. And this comes, of course, on the back of Voyager Technologies' debut yesterday. So the question is, are tech IPOs back? Let's ask Ray Wang. He is chairman, CEO, principal analyst, and founder of Constellation Research. Ray, is it fair to even call all these companies, Voyager Technologies, Chime, part of the tech ecosystem when we look at demand for tech IPOs?
We're at the edges of the tech ecosystem, but the good news is the IPO market is back, right? We had Circle, we had CoreWeave, eToro, and now we've got Chime here. And I think it's important. These are a set of fintech companies that were supposed to go public during the pandemic and didn't do that and had to recap, had to look at their models, had to cut costs, and now they're back. And it's a great signal for a lot of companies who do want to go public, all the way from, companies that have been waiting for a long time, including like Stripe. And so this is in the fintech category. What's important here is they make their money from interchange fees. This is what younger kids are using in terms of banking apps. They're not going to your traditional banks. They're going to Chime. They're going to Robinhood. They're going to other places to actually manage their money.
All right. Thanks for answering that and putting that into perspective for us. So when it comes to the tech sector overall, what is our takeaway this earnings season when it comes to the integration of AI and whether that is truly paying off in a way that investors appreciate?
So here's the thing. Everybody invested a ton of money into AI. They bought a lot of chips from NVIDIA. And at the end of the day, we're all looking for revenue from AI. And this has been the challenge. But there comes Oracle, and you see what Oracle's doing is the infra play is still very hot. And what Oracle did, that's a great one to look at, is because on the Oracle side, they're able to actually get the cost structure down. And in some cases, when you go to Oracle Cloud Infrastructure, you're paying 1/5, 1/7 the cost of everybody else because they have a next generation cloud. And they've actually optimized all the things you could do to automate being in the cloud. And that's what gives them an edge. And when we look at all the other earnings, we had these, tariffs are going to crush earnings. People aren't going to buy. Well, the tech companies showed that people are still buying. There's a lot of strong demand, and they're also investing in the AI revolution.
When it comes to that AI revolution, and particularly with the possibility that we could see more entrants into the public markets in that space here, where do you think the most demand will be amongst investors? Are they looking for the companies that are actually building their own sort of LLMs from the ground up, or are they fine kind of looking at kind of these application stack companies just kind of putting something on top of OpenAI, ChatGPT, or whatever?
Romain, you're actually right. There's a couple categories. The first one is going 2 clicks out. 2 clicks out means you're going to software companies that are building agentic AI. Now let's review. Regular AI, classical AI, 2 + 2 = 4. Generative AI, 2 + 2 might equal 4, 98% of the time. And of course, agentic AI is 2 + 2 = 4. Now, what do you want to do with it? It's ushering an era of decision automation. And so the companies that are building agentic AI moats and actually enabling cross-platform agentic AI, that's going to be the companies you're going to bet on. ServiceNow, great company to bet on that. Salesforce, building that out. Workday, Oracle. These are companies that have agentic AI and continuing to build that out. Private companies like Boomi, Google, building the standards. Microsoft on the cloud side, enabling this to happen. Amazon on the hyperscaler side, also enabling this to happen. And that's the next bet. But there's also another category that's going to be on the horizon that is AI-first companies. These are companies with 100 people that are going to take on $1 billion software companies by rewriting the software game. These are services companies. You can have 1,000 people that are going to get to $1 billion in revenue that will challenge the Accentures and the Deloittes out in the world. And those are being formed right now.
Absolutely. And it's just kind of exciting because I felt like a year or two ago when we talked about AI, we basically talked about 2 or 3 companies because there was no one else to talk about. But you're now kind of seeing this all kind of become reality. I do want to just get your thoughts here on the juxtaposition between those companies that are spending a fortune to build out AI, like Meta, and then a company like Apple, which everyone's scratching their head trying to figure out, are they spending money on this? Do they care? Does it matter? I mean, this isn't going to be winner take all. But I do wonder if you're not in this now in terms of spending and building out, are you going to potentially be left behind once this really starts to hit critical mass in terms of usage?
Romain, you're absolutely right. You have to spend and invest to get there. And both these companies are doing different things. Meta is using AI to achieve operational efficiency. They're going to get to lower operating costs than everyone else. They've automated revenue operations. They've actually reduced the number of headcount, and they're actually allowing customers to take advantage of those efficiencies. Apple, on the other hand, is doing something different. They're trying to build AI at the edges. And what that means is, can I actually get that to a personalized experience? We weren't overwhelmed by their announcements, but what we did realize is you can do universal translation. You can actually automate tasks. There's a lot of interesting little features that deliver mass personalization at scale in the Apple model that you don't get anywhere else. And AI is going to move to the edges, and that's 3 clicks out. And that's what we're waiting for on the Apple side.
Ray, final question to you. This morning we heard that Micron is pledging $200 billion investment in U.S. manufacturing. It's the latest company to make this kind of announcement. And these are announcements that allow companies to score points with the White House. But I wonder if it changes their investment thesis. Does it make it more attractive, less attractive to investors?
It definitely makes them more attractive, but the index I'd be looking at is to find out which companies are going to get recommended and being suggested or approved by the amount of investment that's happening on the Middle East. That is like $5 trillion of investment, $2 trillion on the government side, $5 trillion on the private capital side. And if you're on that list, that is a growth factor. And if you can make that and actually tie that back to what's going on in the AI initiatives, that is going to be one revenue stream you don't want to miss, just like Stargate is for the U.S. government.
Hey, Ray, always appreciate you taking time for us. Always great insights. Ray Wang there, Chairman, CEO, Principal Analyst, and Founder over at Constellation Research, as we continue our focus this hour on tech and specifically AI. Coming up, we're going to have a conversation with Chris Holes. He's the founder and CEO of the location tracking company Life360. You know it for those tile things, but they've really expanded into a much broader ecosystem than that. And now they're making a big push into advertising. That conversation's coming up after the break. This is The Close on Bloomberg.
Location sharing platform Life360 is expanding, perhaps inevitably, into ads. The company this morning announced it's launching Place Ads, which is focused on behavior-based targeting, and Uplift, which analyzes foot traffic. So let's bring in Life360 co-founder and CEO Chris Holes, joining us from California. Chris, the origin story of your company is fascinating because you actually go all the way back to 2007, 2008. You created this company in response to Hurricane Katrina to help families track each other. Tell us about how that evolved into a full-stack personal safety platform.
Sure. So when we started, I was in college. I saw Hurricane Katrina happen. It was so hard for families to reconnect after emergencies. And it's right when smartphones were coming out. And we quickly realized we were onto something bigger. Facebook was getting huge with friends. LinkedIn was getting big for professionals. And we said, maybe the way to win families is really around coordination and safety. And we called the company Life360 because our belief was if we could make family life easier, if we could keep people safe, it would be really a way to be that super app for families and become one of the digital brand giants.
Yeah, my husband and I joke that it's an app that we use to stalk our kids to make sure that we know where they are. Apple's Find My and Google's Family Link came later. So how do you continue to differentiate yourself from those services which come in with a built-in user base and hardware?
So the results speak for themselves, and it's all about our focus on the family.